input lah. Boleh. Let's go. Let's go.
Mic check. 1, 2, 1, 2, 1, 2. Mic check. 1, 2, 3. Mic check. 1, 2, 3. Is it audible? Is it audible?
Ya, ini kan untuk lagi lah. Angka ini yang
Audible? Sir, is it audible? Mic text.
Sir Manisha,
Yes, yes.
I'm audible now?
Yes, yes, you are audible, sir. You are audible.
Okay, sir. Okay, sir. Thank you. Thank you. Video also clear now, sir?
Okay, sir.
Yeah, thank you. CGM sir. CGM sir.
Good morning.
Good morning. CGM sir.
Yes, sir.
Sir, Sukla sir is joining. There is some problem in the connectivity. Within 2 minutes, we'll start.
Okay, okay.
Comrade,
No,
the
no
WhatsApp
problem. We'll wait.
link has been sent. Please join.
CGM sir. अनम्यूट किया कह रहे हो सर देखो.
சார் மேரேஜ் முடிஞ்சிச்சா மார்னிங்?
இல்ல ஒன்றும் போகல.
ஐயோ இனிமேல் தான் முகூர்த்தம்பளா?
இல்ல அதெல்லாம் போயிடுச்சு. I want to go first here.
ஓ சாரி.
We cannot keep people waiting, no.
ஓகே ஓகே ஓகே. Comrade, any help required? Oh, network problem is there. Oh.
பாத்தியா?
Okay, now shall we start? He's having some issues.
Video call, video call, right?
Video call. Comrade. So shall we commence, comrade? All are waiting, members. Yeah, we are waiting for you only. We have to commence. we have to commence. We are waiting for you. Shall we commence? Please join. Please join. Okay.
Sir, no problem. We'll wait for a few minutes. Let Shuklaji to join.
That is correct, sir. Hey, Manish, एक बार उनको बता दीजिए. Any problem is there? For
Some network issue is there.
no, he'll tell no. He'll call him. He will inform. What is the problem?
சார் உங்களுக்கு பிரேக்ஃபாஸ்ட் ஆயிடுச்சா?
Good morning.
Yes, sir. Sir, Government Manager, sir. Good morning.
Sir,
Yes, sir. Good morning, sir.
Both our
He is the dumb.
Rajshekhar ji, this is not fair. Night time is 10 o'clock and you have not given breakfast.
Shuklaji has come.
They have arranged breakfast. I would not taken.
Shuklaji, see, everybody is waiting for you only. Oh. Okay.
Now you can continue like this. Continue, sir, you can continue.
Sir, we continue here.
We be on the line. Ask him be on the line. Right.
Comrade, you be on the line, huh?
Right.
We'll comments. Okay.
Right. Start, sir. We'll start, sir. Sir, CGM, sir, there is a net connectivity problem in his area.
Okay.
So he was not able to join. We'll start the program. He's in the WhatsApp, online in WhatsApp.
Okay.
Right.
No
Okay,
problem.
boss. Right. Start. Start.
Okay, respected CGM sir, GM Principal Image, General Secretary Sekran sir, and President, and my dear friends who have joined or who is watching this live streaming on YouTube, flagship program of All India Indian Bank Officers Association, sir, this pre-promotion training. This is one of the best initiative by the Officers Association. They are going to conduct every year this kind of the training. So friends, this training is very hectic from 9:30 to 7:30 because we have covered all the topics which is very relevant for the promotions. We are fortunate one, particularly I thank the association that they have involved the image for this flagship program. Again, I welcome our CGM sir and request to start the program, sir. Thank you.
Felicitate. I request Comrade Bennett to felicitate our CGM. Bennett. Kumbakonam.
Thank you. Thank you, sir. Thank you.
Most welcome, sir. Most welcome. Comrade, felicitate. Thank you.
Shall we start, sir? Okay. Good morning to everyone.
Good morning.
See,
Good morning, sir.
the
Good
voice is
morning.
audible?
Yes, audible.
Okay.
Audible,
Good
sir.
morning to everyone. Sri Shagaranji, Secretary General, All India Indian Bank Officers Association. Sri Shuklaji, President, All India Indian Bank Officers Association. And our Principal, Mr. Suresh Ji, Image. Then our Zonal Manager, Kumbakonam, our Rajshekhar Rao Ji. Then our DZM, all our Sri Amursagaram, Treasurer, all the Zonal Secretary Kumbakonam and all federal leaders joined through WebEx across all units, Deputy General Secretaries, Vice Presidents, all office bearers of Indian Bank Officers Association, all our faculty members, ladies and gentlemen, all staff members joined through this WebEx for this training program. Really, I feel happy to interact with you. And first, I want to thank to our association, AIBOC, for giving me an opportunity to address each one of you. I think this is my fourth address in a row. Right from 21 to 21 it started. If I remember correctly, in 21, immediately after our policy understanding, I think February 28th we had exam in 2021. 21st February the same training happened. Now January 25th the same training is happening. 1 month in advance we are going to have the exam next month. Sorry, next week Sunday we are going to have the exam. And I am sure that people who got promoted in 21, maybe 1 to 2, 2 to 3, or 3 to 4, they will be appearing for the next scale. So that much quickly bank is moving. So I am really fortunate to address the entire forum in a row for the fourth time. It's for personally, I feel like it's a big opportunity given to me by the association. Friends, as far as the bank is concerned, you all know that every year we are going for this the promotion exercise in the Q4. The only one change is that the post amalgamation first 2 years we conducted all the interview process, entire process was completed before March. But now because of the PMS score, so bank started implementing this PMS from April 22 onwards. So you all know that last year we had our interview process in April. The reason is that we have taken the PMS score for March 23. So this year also we are going to take the PMS score. So exam is going to happen now and the interview will be little late. But one thing I wish to mention that the PMS system we introduced last 2 years, it has changed a lot. So then as far as the promotion process is concerned, it is 3 to 4 parts. So one is our written exam, the number 2 is our interview process, the third is our upper score or PMS score, whatever may be. Then again added to that, whatever the qualifications we added, what are the certifications we added, whatever the JAB, CAB we added. So all those is carrying the weightage. Then again our test also. So any interview process, it is not confined to one aspect. It is a holistic 360-degree view is taken to assess the performance of each and every officers. So only the meritorious the candidate is getting through. As far as the today's program is concerned, so AIBOC is arranged the training program for the entire people appearing for this promotion process, scale 1 to 2, 2 to 3, 3 to 4, and 4 to 5. First, I want to say thanks to our the association for taking this big initiative and bringing entire our officers community appearing for the promotion process in a single platform to get benefit and to update their knowledge or to get approached the day-to-day banking activities. So it is a very big initiative by the association. My hearty congratulations to the entire leadership of the association. And I want to say thanks to and congratulations to the entire image and other faculty team also. So working very, very closely with the association to conduct this program very nicely. The another thing I wish to mention that almost around 35 to 40% of people already would have attended the pre-promotion training also. So then again, Image has come out with one of the best material, and again, AIBOC also come out with the best material. My request to all the aspiring officers to go through all the circular, whatever happened in the last 1 year, particularly the last 1 year development happened with not only with our bank, in the banking industry also. Particularly for people appearing for 1 to 2, 2 to 3, they have to get accustomed with the product, process, the new initiatives taken by our bank in the last 1 year. The people again appearing for 3 to 4 and 4 to 5, they have to go a little away. What is happening at the industry level, they should get update their knowledge. Because when we are going at the middle management or senior management cadre, so we need to get accustomed with particularly the credit, risk management, forex and ID. All those things will be there. So my request to the people 1 to 2, 2 to 3, go through your all circular process and latest updates. But for 3 to 4, 4 to 5, you have to, in addition to this, you have to go beyond that, what the industry is happening, what the transformation is happening. So you need to get to know, then only, so you can get the best score in the exam. Our wish is that everyone should get the best score so that the competitiveness will increase. Then again, you all know that now we have declared the number of vacancies also. But compared to last year, this year vacancy is little higher only. As far as 1 to 2 is concerned, 856 is there, and 2 to 3 is concerned, 599 is there. So 3 to 4, 216. If you see last year, we have given 198 only. This year we are giving 216. Then again 4 to 5, 30 vacancies are there. So as far as the vacancies, when you are going up, the vacancies will come down. But for lower scales, again, the specialist and the generalist, also good number of vacancies, bifurcation is there. So the equal opportunities available for the people appearing in the general stream as well as in the specialist stream. So my request is that do your preparation well. Definitely we can get through. And not see again, the exam is not only for updating our knowledge, not only for appearing for the exam. So it is for even our day-to-day functioning also. We need to update our knowledge, update our the latest development, what is happening in the bank, and again get to know about the new product, new process, the digital transformation, everything, so that our day-to-day functioning also it will be very much useful. So my request to all the participants, so ensure that you are attending all the sessions without any disturbance, because Sunday is again you have to spend time with the family and all. But this Sunday particularly you spend for yourself. Particularly, my request to women officers, please leave the kitchen to your family members, or you leave to the kitchen. So you please concentrate so that you will get more knowledge. See, whatever when you are listening for this one day, it is equal to what you are reading for 4 to 5 days. So my request to all the aspiring people is that please ensure that you are attending all the sessions in a very the concentrated way, because our faculty is also oppressed. They have prepared well to handle the classes. But apart from that, any clarification is required, anytime you can take up with our staff training colleges, staff training centers, or our faculties. They are ready to support you. Apart from that, the materials also uploaded in the image website also. So you can go through anytime now. The facilities available. You can brush up through your mobile also, the internet also. So to that extent, the facility is made available now. So all the materials are available in front of you. Only thing is that you have to spend a lot of time for this, because now the time is very short. Only hardly 7 days is there. And one good thing is that when we are fixing the date, so we have taken into consideration other aspects also. If you see, 28th is the exam, again 27th is the 4th Saturday, then 26th Republic Day holiday is there. After flag hoisting, you will get full time, and some states 25th also holiday. So hardly 2 or 3 working days only is there between today and 28th. So working days there, remaining time is available for all the aspiring people who are appearing for the exams. So please spend your time to update your knowledge. So as far as the bank is concerned, so you all know that though we are the 7th largest bank in the industry, but as far as the performance is concerned, we are one among the best public sector bank in the industry. There are so many aspects. If you see, already we were telling, if you take a PLI or whatever our the business growth, or return on asset, return on equity, or net NPA, gross NPA, our profitability, operating profit, net profit. So every year, if you see, our bar is going up, our image in the industry is going up. So we are proud to say that we are officers from Indian Bank, we are executives from Indian Bank, we are senior management from Indian Bank. So that brand name we have created in the field. My congratulations to the entire team, and particularly the association. We are getting the very good support in all aspects, because as far as the association is concerned, the HRM department, top management, association, we are working very closely on so many aspects. So bank is also able to understand the requirements at the field level, and wherever required, all the support is extended. So we are working in the very good atmosphere at present. If you see the bank image in the market, it is one of the best image in the market, but we should not get complacent. It is our endeavor to ensure that our flag is going up and again going up, so that the benefit will go to the bank as well as the individuals also. So once again, I want to thank the association for inviting me to give this inaugural address. I wish all the aspirants to do all the best for your exam. Wish you a good luck to everyone. Thank you all. Ensure that you are utilizing this entire day for preparing well for the forthcoming exam. Thank you all.
Thank you, sir, for giving, despite of their busy schedules, you have given a wonderful overview of this program, as well as the guiding factor to all the participants that what they have to do. Again, we thank you, sir, because we have arranged this examination in such a way that we are getting extra time for this preparation program. Now, I request our GM principal, sir, to address.
Good morning to all. Respected CGM sir, Tanrajji, Shekaranji, Secretary General, All India Indian Bank Officers Association, Shri Shuklaji, President, All India Indian Bank Officers Association, Rajashekharji and team from Kumbakonam, and Officers Association members, faculty, and my dear participants. First of all, I once again congratulations our officer organization for conducting training program to our officers. In our bank for the last 4 decades, our officer association is taking care of taking initiative of conducting training program and printing of promotion material in hard copies and in the way of soft copies also. I am very happy to inform you, sir, that myself got benefited from this type of training and promoted to this level. There is no doubt because of association only. Association has played a key role in my elevation from scale 1 to scale 7. Dear friends, during this one-day program, our faculty are touching all important topics, which in turn help you to be successful in your test. During the training session, please involve fully, clear all your doubts, and which in turn help all the other participants to improve their knowledge. Friends, there is a huge competition. The number of promotions are less, but the competition is more. So please involve all your people. So that in this program we have designed in such a way that by listening that this training session you will be giving very good results. Sir, CGM sir, we are also planning to conduct 2 mock tests also before the promotion test. It will be live within 1 or 2 days, sir, so that it will helpful for them for writing the examination. So I request all of you to take this promotion process seriously and come out with the flying colors. I once again thank our association leaders for giving this opportunity. All the best to all the participants. Thank you very much.
Thank you, sir, for having us such a good words. Sir, under leadership of you, we have already prepared these questions for mock test also. It's a fact that someone has given a feedback in a training that there should be a mock test. Immediately our principals are told that, okay, we should go for the mock test also. That will be arranged by us, and of course, we seek participation from the officer association so that maximum person can participate in that mock test. Now I request our General Secretary, Sekran sir, to address.
Respected Chief General Manager, our respected Principal Image, our Zonal Manager Kumbakonam, DSM, and my President, Comrade Ramnath Shuklaji, and President, Comrade Mohan Raj, my colleague, office bearer, my faculty members, and my dear comrades. On behalf of All India Indian Bank Office Association, I welcome all the participants for this one-day virtual training program. This program, as our principal has said, association is conducting several decades for the benefit of our members. Promotion brings forth numerous advantages both for the bank and the officers. By conferring the promotion, bank acknowledges individual performance, bank retain talents, bank cultivate loyalty, bank plan for succession plan and ensures organization growth. For officers, it gives scope for assuming the new roles and responsibilities, and it gives chance to lead projects and manage teams, acquire new skills and knowledge for elevated role. It boosts their moral, and it gives job satisfaction and gives motivation. If you look into analyze the advantages of the training program, this training program gives update the individuals on the latest product, the regulatory compliances, risk mitigation, data security, crisis management, and among other benefits. If our officers are updated with the available products and the systems, the customers gain confidence in transacting with them. The organization growth, any organization growth linked with the job knowledge of its workforce. The market is very competitive. We all aware. If you analyze how these private organizations, either in the software industry or in the consulting industry or in the audit industry or in the product industry, how they survive, how they flourish, how they bloom, because they used to introduce the products which addresses the pain point of the consumers. If you take WhatsApp is a product. It helps for fast communication. If you take Google Pay, that is one product that helps for instant payment. If you take the Swiggy, that is one product that helps for doorstep delivery. If you take Vola, that helps to make your movement faster. Hence, these products addresses the pain point of the consumers for faster communication, instant payment, faster movements. Hence, similarly, in this environment, our bank also facing the competition, and we also has to survive. But currently, the banking industry facing challenges from the mutual funds. They are also introducing the product with more safety, more liquidity, and more returns. Our bank also coming out with many products to augment the business, to augment the profitability. Hence, it is a very imperative need for our workforce to update themselves on the product, to stay alive in the market, to exhibit market differentiation, and to boost the brand image. Particularly as a professionals of the financial sector, it is imperative to update ourselves to avoid landing in the disciplinary proceedings. Hence, update will help you to protect yourself and to safeguard yourself. Comrades, knowledge is power. Knowledge gives you confidence. Knowledge empowers individual. Knowledge helps you for taking informed decision. Knowledge enhances your resilience. Hence, I appeal all of you to update and enhance yourself. I am sure this program will help you in this direction. Association is immensely happy to organize such a enriching this enriching program. I thank our CGM is for some other assignment in the Kumbakonam. He has come forward to inaugurate this online training program. I thank our principal for providing the infrastructure and has provided the material also. That material we have posted in our website also. Our members can make use of it. I thank our faculty members who are going to share their expertise and knowledge to all the participants. I thank all the participants. I wish all of you all the very best in all your endeavors in the days to come. Thank you, comrades. Shuklaji is there, ma? Manish?
WhatsApp for the
वीडियो कॉल
हाँ चलेगा
वीडियो कॉल होता है बेस्ट
Send what you will tell from your side. Document you will tell them the other person that is good now.
Okay. Balaji, vote of thanks. Mohan, vote of thanks.
Is not lifting up.
Friends, we are trying hard to reach with the President Ramnath Shukla sir, but we are unable to contact. So now I request to Mohan Das sir for vote of thanks for this.
Respected CGM sir and respected GM principal Image and Zonal Manager Kumbakonam and DZM Kumbakonam, and our General Secretary General Shekharan, and our other office bearers and faculties of image. Also, my dear comrades, you are using this opportunity to enlighten yourself, not only for the examination, also for applying the things in the daily routine management of the branches. Nowadays, we are finding difficult to come out of any charge because there is no deliberate mistake, but people are committing mistakes out of ignorance or lack of time to follow the guidelines. Hence, I request the comrades to enlighten yourself and follow the guidelines. That is helpful for your skin. You have to save the skin. Also, you have to develop yourself and provide best customer service to our customers. Thank you, comrades. All the best.
Sir, thank you, sir. Thank you, sir.
Thank you, sir. Thank you. All the
Thank
best
you
to
very
all.
much. Thank you. Thank you, sir.
Thank you. Thank you. Thank you. I'm just gonna
Okay. Good morning, friends. This is Tamilmani Subramanian, Chief Manager Faculty from Image. Now we are going to discuss about question and answer on priority sector guidelines, agriculture, as well as FI and government schemes. We'll see one by one. When we are talking about priority sector lending guidelines, who will be coming under weaker section category? Small and marginal farmers, artisans, village and cottage industries where individual credit limit do not exceed 1 lakh rupees, and also involving the beneficiaries under government sponsor scheme like National Rural Livelihood Mission, National Urban Livelihood Mission, and self-employment scheme for rehabilitation of manual scavengers, and whatever lending that we have extended for scheduled caste and scheduled tribe, and beneficiaries of differential rate of interest. I think you all know that for differential rate of interest, the rate of interest will be 4%. So whatever lending that we are giving under DRI scheme and lending to self-help group and distressed farmer indebted to non-institutional lenders, distressed persons other than farmers with loan amount not exceeding 1 lakh rupees per borrower to prepay their debt to non-institutional lenders, and wherever we are sanctioning loan to women beneficiaries up to 1 lakh rupees per borrower, that all will be coming under weaker section categories, and also including persons with disabilities and minority communities as may be notified by Government of India from time to time. All will be coming under priority sector lending under weaker section category. Next, what are the sectors coming under priority sector lending? There are some 8 sectors are there. They are our agriculture, MSME, export credit, education, housing, social infrastructure, renewable energy, and others. For each and every categorization, there is some sub-target also has been given for priority sector lending is concerned. For domestic commercial bank and foreign bank with more than 20 branches, we need to achieve a target of 40% of adjusted net bank credit or credit equivalent of off-balance sheet exposure, whichever is higher to be achieved for them domestic commercial bank and banks with foreign banks with more than 20 branches. And for there is some sub classification also there. For agriculture is concerned, there is we need to achieve a target of 18% of ANBC or CEOBE in agriculture is concerned. Even in agriculture of 18%, we need to achieve a target of 10% of target to be achieved for marginal and small farmers lending. And coming to MSME sector, even we are that is also coming under priority sector lending. And for micro enterprises are concerned, we need to achieve a target of 7.5% of sub target under micro enterprises. Like export credit, we are not taking overall target, we are taking an incremental credit over the preceding years of 2% incremental credit is there that can be taken as an export credit. And for education up to 20 lakhs, including the vocational courses, will be coming under education under priority sector lending. This is for the domestic commercial bank and banks, foreign bank with more than 20 branches will be there. This criteria will be applicable for them. We will see one by one. What is the priority sector lending target for regional rural bank? For RRB, there is a target of 75% of ANBC or CEOBE, whichever is higher to be achieved under priority sector lending target for the regional rural banks. And what is the priority sector lending target prescribed for small and marginal farmer for the year 23 to 24? So for the year 23 to 24, we need to achieve a target of 10% of ANBC or CEOBE, whichever is higher to be achieved for small and marginal farmers lending for domestic commercial banks. And what is the priority sector lending target prescribed for weaker section for the financial year 23 to 24? This is for the domestic commercial bank and foreign bank with more than 20 branches. The target will be 12% of ANBC or CEOBE, whichever is higher to be achieved under weaker section category for for the financial year 23 to 24. What is the priority sector lending target for weaker section in RRB? For weaker section in RRB is concerned, we have that RBI has given a target of 15% of ANBC or CEOBE, whichever is higher. Because for regional rural banks are concerned, their presence only in the rural and rural areas, so that there is a higher target of 15% of target has been given for the regional rural bank by the RBI. what are the activities are eligible under priority sector lending under agriculture? And agriculture, apart from we are achieving a target of 40% of ANBC and CUB overall target of priority sector lending, there is a sub-target of 18% has been given for agriculture. So what are the activities are eligible to be categorized under priority sector lending under agriculture are farm credit, including agriculture and allied activities. Then we have lending for agriculture infrastructure facilities and ancillary activities. Wherever we are sanctioning loan for rural godowns, silos and warehouse corporations, all this will be coming under agriculture infrastructure. Wherever in ancillary activities are concerned, wherever we are sanctioning loan for food and agro processing industries, MFI, all this will be part of this ancillary activities under agriculture under priority sector lending. Then what is the maximum loan limit can be considered under priority sector lending in case of pledge or hypothecation of the warehouse receipt? So we can take a pledge or hypothecation of the warehouse receipt against which we can sanction loan under produce marketing loan. So under this loan against pledge or hypothecation of the agricultural produce for a period not exceeding 12 months, because this loan we are giving as a demand loan. So that period should not exceed 12 months, subject to a limit of 75 lakhs against, suppose if they have kept their agricultural produce in the warehouses where negotiable warehouse receipt or e-negotiable warehouse receipts are there, against which NWR and ENWR, we can sanction a maximum of 75 lakh rupees under this. Your pledge of hypothecation of the warehouse receipt will be considered under priority sector lending, whereas other than negotiable warehouse receipt and e-negotiable warehouse receipt, we can consider even up to 50 lakh rupees against warehouse receipt. Other than this, negotiable warehouse receipt can be considered under priority sector lending under agriculture. What is the maximum limit for farmer producer organization and farmer producer company under farm credit in priority sector lending is the loans up to 5 crore rupees per borrowing entity to the farmer producer organization and farmer producer company who are undertaking farming with assured marketing of their produce at a predetermined price. This farmer producer organization and farmer producer companies is a legal entity. They have been formed with the group of farmer producers, whereas normally in the plain areas we are allowing up to 300 farmers can form a farmer producer company and organization, whereas in the hilly areas they can go even up to even with 100 numbers can be considered. So for them, if we are giving lending up to 5 crore rupees will be considered under priority sector lending under farm credit. Loan for agriculture infrastructure will be subject to an aggregate sanction limit of dash from the banking system considered under priority sector lending. For loan for agricultural infrastructure, up to 100 crore per borrower can be considered under priority sector lending under agriculture infrastructure. And what is the target for micro enterprises under priority sector lending? For micro enterprises, target will be 7.5% of ANBC or CUBE, whichever is higher to be achieved under micro enterprises categorization. What is the maximum loan limit for startup to be classified under priority sector lending? If we are sanctioning any loan to the startup who are all taking any kind of agricultural and allied activities, then up to 50 crore rupees for startup will be considered under priority sector lending under agriculture. Wherever we are sanctioning loan up to 50 crore to MSME industries, that will be coming under startup schemes of MSME classification is concerned. So for startup scheme, up to 50 crore rupees can be classified under priority sector lending. What is the sub-target under export credit for domestic commercial bank? For domestic commercial bank, there is an incremental export credit over corresponding date of the preceding year up to 2% of ANBC or CUBE, whichever is higher can be considered, subject to a sanction limit up to 40 crore per borrower. So 2% of incremental credit can be considered under sub-target under export credit. This is applicable for the domestic commercial bank, whereas the commercial, wherever the foreign bank with less than 20 branches are there, out of 40% of their priority sector lending, 32% they can achieve through the export credit, remaining 8% can be achieved in other lending. This is applicable for foreign bank with more than 20 branches. Foreign bank with less than 20 branches. Wherever the foreign bank with more than 20 branches and domestic commercial bank, up to 2% of ANBC and CEOBE will be applicable. Loan to individual up to dash in metros and dash in other centers to be classified under PSL housing, because housing also will be considered under priority sector lending. So wherever we are sanctioning loan up to 35 lakhs in metro cities and 25 lakhs in other centers to be classified under priority sector lending. Even though we can consider 35 lakhs in metro cities and 25 lakhs in other centers, but there is a provision of that condition stating that it should not exceed 45 lakhs the overall project cost of the dwelling unit in metro centers, and 30 lakhs should not exceed 30 lakhs is the overall project cost, means that will be considered under priority sector lending under housing. I will repeat it. For metro center 35 lakhs and other center up to 25 lakhs, whatever loan that we are sanctioning will be coming under this priority sector lending under housing is concerned. What is the maximum project cost for housing loan in metro and other centers under priority sector? This I have already told you. Up to 45 lakhs is the total project cost in metro center and up to 30 lakhs in other centers, out of which we are sanctioning loan to 35 lakhs and 25 lakhs respectively in metro centers and other centers will be classified under priority sector lending under housing. What is the maximum loan limit for food and agro-processing industries classified under ancillary activities of agriculture? For food and agro-processing, we can consider up to 100 crore rupees per borrower. This 100 crore rupees category is 100 crore rupees per borrower is considered both for agriculture infrastructure. Wherever we are sanctioning loan up to 100 crore will be considered under agriculture infrastructure. The same way, whenever we are sanctioning any loan for food and agro-processing industries, up to 100 crore per borrower can be considered under ancillary activity of agriculture. Loans up to dash in metropolitan cities and other dash in other centers for repair to damaged dwelling units conforming to the overall cost of the dwelling unit cost as per priority sector lending is loan up to 10 lakh rupees in metropolitan cities and other centers up to 6 lakh rupees. If we are sanctioning loan for repair and renovation of the dwelling unit cost, then it will be considered under priority sector lending under housing. Loans up to a limit of dash for setting up of schools, drinking water facilities and sanitation facilities classified under PSL infrastructure, because under priority sector lending, wherever we are sanctioning loan for infrastructure facilities like a setting up of schools, drinking water facilities and sanitation facilities, up to 5 crore rupees per borrower can be considered under priority sector lending under infrastructure facilities. Loans up to a limit of dash for the building healthcare facilities including under Ayushman Bharat in Tier 2 to Tier 6 centers classified under priority sector lending infrastructure. Here, loans up to a limit of 10 crore per borrower where we are sanctioning loan for establishment of healthcare facilities under Ayushman Bharat in Tier 2 to Tier 6 centers will be classified under priority sector lending under infrastructure. What is the maximum limit classified under priority sector lending? Renewable energy. Renewable energy is one of the sectors under priority sector lending target. So in this renewable energy, wherever we are sanctioning loan up to 30 crore rupees per borrower for installation or that establishment of solar based power generator, biomass based power generator, windmills and micro hydel plants will be classified under renewable energy. Renewable energy, once it is exhausted again and again, we can get that energy, and Government of India also focusing more on the renewable energy. Accordingly, it has been added in the priority sector lending. So up to 30 crore per borrower for solar based power generator, biomass based power generator, windmills and micro hydel plants will be classified under priority sector lending under renewable energy. What is the loan limit for individual household to be classified under priority sector lending renewable energy? So even for wherever we are sanctioning loan up to 10 lakh rupees per borrower, that also can be considered for this individual household under priority sector lending renewable energy. Farmers with a dash hectare of land holding are considered a small farmer. Farmers with a land holding of more than 1 hectare and up to 2 hectares are classified under small farmer, because in priority sector lending we need to give a portion of small and marginal farmer lending. Also there is a target of 10% of ANBC and CUB is there. So accordingly we are classifying the farmers who is having a land holding capacity of more than 1 hectare and up to 2 hectares will be classified under small farmer. 1 hectare is equal to 2.5 acres. So approximately up to 5 acres of land is there, then they will be classified as small farmers in this priority sector lending classification. What is the target for lending to non-corporate farmers for the financial year 23 to 24? There is a target of 13.78% of ANBC or CUBE, whichever is higher, to be achieved under non-corporate farmers for the financial year 23 to 24. This is the target for non-corporate farmers, 13.78%. Farmers with a dash hectare of land holding are considered as marginal farmer. Farmer with a land holding of up to 1 hectare, that is approximately 2.5 acres of land, will be classified into marginal farmer category. Farm credit to corporates up to dash comes under priority sector. Even we are sanctioning loan to the corporates and cooperatives of farmers. So for them, if we are sanctioning loan up to 2 crore rupees, will be classified under priority sector lending under farm credit is concerned. Loan sanctioned to distressed person not exceeding dash per borrower to prepare their debt to non-institutional lenders reckoned under priority sector. Here, wherever we are sanctioning loan to the distressed person not exceeding 1 lakh rupees per borrower to prepay their debt to the non-institutional lender, that also consider under priority sector lending up to 1 lakh rupees. What is the total priority sector target for small finance banks? For small finance bank also, they have to achieve a certain target under priority sector lending, and accordingly 75% of that target to be achieved by the small finance bank like RRB. For RRB as well as for small finance bank, the priority sector lending target will be 75% of ANBC or CUB, whichever is higher. How the non-achievement of priority sector lending will affect the bank? As I already told you, this priority sector guidelines has been given by our regulator, Reserve Bank of India. There is a special dispensation has been given by RBI to have an overall target to be achieved in lending to be given to the entire society. Otherwise, what will happen that a certain segment of the society will not get any kind of formal financial assistance from the banking system. So to avoid that and to have an overall growth of the economy, this priority sector lending guidelines has been issued by our regulator RBI. Suppose in case all the member banks, including domestic commercial bank, foreign bank with less than 20 branches, more than 20 branches, small finance bank, then we have that regional rural bank, every members of that our RBI has been given a target under priority sector lending, and all the members always try to achieve the target, because otherwise if the target is not achieved under priority sector lending means the shortfall to be deposited with RIDF, Rural Infrastructure Development Fund, or a SIDB or NABARD or NHB as given by RBI. And also whenever RBI has given any kind of granting, any regulatory clearances and granting approval for various purposes, all this will be taken into consideration for if whether the member bank has achieved the target or not. And for that we have one more thing is there, for if suppose if they are not able to achieve the target under priority sector lending, they can purchase the certificate called priority sector lending certificate, that is called PSLC. So wherever the member banks are not able to achieve the target under priority sector lending, they can purchase the priority sector lending certificate from the eKuber portal of the RBI. Normally the lot size will be 25 lakhs will be the lot size. Wherever the bank, whoever is achieving the surplus target, they can convert the surplus target as a priority sector lending certificate, and they will port it in the eKuber website of RBI. And the member bank who are shortfall in achieving the target, they can purchase the target from that eKuber portal of RBI and they can show their achievement. This is the one of the important point related to the priority sector lending target to achieve the target. And what is the target for educational loan under priority sector lending? loan to individual for educational purposes, including vocational courses not exceeding 20 lakhs will be considered as eligible for priority sector classification for educational loan is concerned. For educational loan not exceeding 20 lakhs, including vocational course is the target for will be considered under priority sector lending under educational loans. What is the expiry date of PSLs? As I already told you, the priority sector lending certificates will be purchased by the member bank who fail to achieve the target, and this priority sector lending target, that achievement will be considered on a quarterly basis. Why RBI has considered the quarterly monitoring of the achievement of priority sector lending means otherwise the continuous flow of credit will not be happening. So that to have a continuous flow of credit throughout the year, throughout the financial year, RBI has monitored whether the member bank has achieved the target under priority sector lending on a quarterly basis. So in case of shortfall of priority sector lending, the member bank, when they are purchasing the certificate through the eCubear portal of RBI, all these certificate will be valid till the end of financial year 31st March, and all the certificates will expire on next day, that is on April 1st it will be expired. So this priority sector lending certificate purchased by the member bank will be valid only as on 31st March of every financial year. What are the loans for SHGs and JLGs as per prescribed limit eligible for priority sector classification? Wherever we are sanctioning loan not exceeding 2 lakh rupees provided by the bank to SHGs and joint liability group for activities other than agriculture or MSME, like we are sanctioning loan for meeting social need, construction or repair of houses, construction of the toilet or any common activity started by the SHG up to 2 lakh rupees will be considered as the prescribed limit to be considered for priority sector lending classification for SHG and JLGs are concerned. What is a cap for bank lending to NBFC and housing financial companies for on lending? For on lending is a procedure where we are not directly lending to the beneficiaries. We are sanctioning loan to the NBFC or HFC. In turn, they are lending either to the agriculture industries, MSME industries or housing industries. So accordingly, it is called as an on lending process. In this, what is the cap has been given by RBI for bank lending to NBFC and HFCs for on lending is bank lending to NBFC other than MFI and HFCs are subject to a cap of 5% of average priority sector lending achievement of the 4 quarters of the previous financial year. 5% of average PSL achievement of the 4 quarters of the previous financial year is the cap for bank lending to NBFC and HFCs for on lending in priority sector lending. Which section of the Banking Regulation Act 1949 gives powers to RBI for issuing guidelines under priority sector lending for the scheduled commercial bank? Section 21 of the Banking Regulation Act 1949 gives the powers to RBI for issuing guidelines under priority sector lending for the scheduled commercial bank. On lending by NBFC for term lending component under agriculture will be allowed up to 10 lakh rupees per borrower. Whatever on lending that we have sanctioned loan to NBFC, in turn if they are going for term lending component to agriculture will be classified up to 10 lakh will be considered under priority sector lending. On lending by NBFC for term lending component under micro and small enterprises will be allowed up to 20 lakhs per borrower will be allowed for micro and small enterprises for on lending by NBFC. Bank loan to housing financial companies for on lending not applicable to RRB, SFB and LAB subject to an aggregate loan limit of 20 lakh even for micro and small enterprises as well as for the housing financial companies. We are going with on lending up to 20 lakh per borrower can be considered under priority sector lending. A bank is permitted to issue PSLC up to % of previous year PSL achievement without having the underlying in its books. A bank is permitted to issue PSLC up to 50% of previous year priority sector lending achievement without having the underlying in its books. How many self-help groups and women beneficiaries are there in our bank as on 39/2023? There are around 3.96 lakhs of SHG groups and 54 lakh of women beneficiaries are there in the 3.96 lakhs of SHGs as on 39/2023. What is the maximum jewel loan account a borrower can have at any point of time? A borrower can have at any point of time 10 accounts irrespective of any category. It may be because normally three departments are providing jewel loan in our bank. That is our rural banking department, RBD department, MSME department and retail assets department. At any point of time, a borrower can have a maximum of 10 accounts irrespective of any category. It may be an agriculture jewel loan or MSME jewel loan or retail assets jewel loan. What is the maximum ceiling of jewel loan under bullet repayment? But for bullet repayment is concerned, the maximum ceiling will be 35 lakhs. Whether it is for agriculture or MSME or retail assets, that bullet repayment is around 35 lakhs is the maximum ceiling of jewel loan under bullet repayment. What is the criteria to empanel appraisers based on jewel loan business of the branches? As per the master circular is the latest master circular issued by our corporate office RBD department. There is there is a revision in that empanelment of appraiser. Accordingly, wherever the jewel loan business is more than 150 crore, the panel should have a minimum of 4 appraisers. Wherever the jewel loan business in the branches is between 75 crore and 150 crore, then the panel should have minimum of 3 appraisers, and wherever the jewel loan business is up to 75 crore, the number of panel jewel appraiser in the panel should be minimum of 2 appraisers. This is the latest guidelines issued in the master circular given by our corporate office RBD department. What is the custodial charges for undelivered jewel loan per annum? As per this, if that when the customer has totally repaid the loan, but still that jewel was not delivered, taken back by the borrower, in such case, wherever we are keeping the undelivered jewel package, for that we are collecting a custodial charges of 500 plus GST per packet of undelivered jewel packet per annum in all the jewel loan accounts to be collected, and also wherever the jewel loan is fully repaid or having a balance of less than 1000 rupees, this 500 rupees plus GST per packet per annum will be applicable as the custodial charges for undelivered jewel packet. And wherever when the bank is exercising the banker's right to set off against direct and indirect liabilities of the loanee, that we should not supposed to charge any custodial charges. So no custodial charges if loan has been fully repaid but jewels were retained without delivery because of branch exercising their banker's right to set off against direct and indirect liabilities of the loan. How many RRBs are there in Indian Bank? There are 3 RRBs are there: Tamil Nadu Grama Bank, Saptagiri Gramina Bank, Puduvai Bharatiyar Grama Bank. What is the LTV of KCC Gold Plus scheme? LTV is loan to value. Accordingly, under KCC Gold Plus, we are taking a pledge of gold ornaments, we are sanctioning loan up to a limit of 3 lakh rupees under this. Here we are taking a LTV of 90%. So the margin for KCC Gold Plus as well as KCC Marine Gold is, the margin is 10%. So we can go for LTV up to 90% for KCC Gold Plus and KCC Marine Gold. These two are the jewel loan category where we are giving interest subvention to the farmer. When under KCC Gold Plus, we are sanctioning loan by taking a gold ornaments, by pledging the gold ornaments. We are sanctioning loan by taking the gold ornaments as a collateral security. Here we are, the minimum limit will be above 1.60 lakhs and up to 3 lakh rupees can be sanctioned under KCC Gold Plus. For crop loan is concerned, wherever we are sanctioning loan for animal husbandry and allied activities, inland fisheries, we can go up to a limit of 2 lakh rupees is the maximum limit. Why we are restricting to 2 lakh rupees for animal husbandry and allied activities means, as per the Government of India guidelines, the interest subvention for allied activities are restricted up to a maximum limit of 2 lakh rupees. So only for crop loan, the interest subvention is available up to 3 lakh rupees. Here in this case, if the borrower has repaid their loan along with the principal and the interest within 12 months or within 365 days, they are eligible for interest subvention as well as for the PRI. 3% of prompt repayment incentive is eligible for the KCC Gold Plus as well as for KCC Marine Gold. Here the LTV is 90%. What is the credit linkage amount under Day NRLM scheme? Under this Deen Dayal Antyodaya Yojana National Rural Livelihood Mission, this is our scheme name is called Swarna Jayanti Gram Swarojkar Yojana. That scheme has been renamed as Deen Dayal Antyodaya Yojana National Rural Livelihood Mission by our Ministry of Rural Development. So accordingly here, for the linkage is concerned, if that normally the self-help group, this is applicable for the self-help group, wherever the self-help group is an informal group and the registration under societies or any cooperative societies act is not required for the self-help group, and the member size of the self-help group will be 10 to 20 members is the normal member size of the self-help group. And wherever if the self-help group has been formed in the special areas like forestry areas or tribal areas or the tribal community or that desert areas, where in these special areas normally the population will be scattered so that they are not able to form with the member size of 10 to 20 members. So in those special areas, even they can form with the member size of 5 to 10 members. Otherwise, in the normal areas, we are encouraging the self-help group with the member size of 10 to 20 members. When we are considering the special areas like a desert area, forestry area, we are allowing 5 to 10 members. This 5 to 10 members categorization will be applicable even for the transgender group, the self-help group formed by the transgenders as well as the differently abled people. If they are forming a self-help group, for them also we are allowing up to 5 to 10 members. Otherwise, we always go with the member size of 10 to 20 members. So once they have formed that group, they need to follow the Panchashudras. Panchashudras are regular meeting, regular saving, regular internal lending, regular loan repayment, and up to date books of records. And they have to keep 6 books of record. And if they are following the Panchashudras and they have completed 6 months of active existence, they are eligible to be considered for the credit linkage program. So accordingly, once wherever the self-help group has followed strictly the five guidelines given or otherwise the Panchashudras if they have followed and also they have completed 6 months of active existence, they are eligible for the credit linkage from the banking system. Accordingly, for Day NRLM scheme is concerned, for first credit linkage, 6 times of the existing corpus or minimum of 1.5 lakh rupees, whichever is higher is the eligible loan limit under first credit linkage. The corpus is nothing but the savings amount, where along with if they are receiving any revolving fund to encourage the savings habits among the SHG member, and also wherever they are receiving any interest income through the internal lending, all put together, that amount is called as the corpus amount, the total savings amount. For this total savings amount, 6 times of the existing corpus or minimum of 1.50 lakhs, whichever is higher, can be sanctioned as the first credit linkage under Day NRLM scheme. Once they have completed their first credit linkage, they have completed their first loan repayment, they are eligible for the second credit linkage. For second credit linkage is concerned, we can consider 8 times of the existing corpus amount or minimum of 3 lakh rupees, whichever is higher can be considered as the second credit linkage. And for third credit linkage onwards, we are giving minimum of 6 lakh rupees based on the micro credit plan prepared by the SHG group and appraised by the federation. And fourth credit linkage onwards, above 6 lakh rupees based on the micro credit plan prepared by the SHG group and appraised by the federations are concerned. And for SHG is concerned, up to 10 lakh rupees the margin, there is a nil margin, and if the loan amount is more than 10 lakh rupees, we are taking a margin of 10% of margin we are taking. Up to 20 lakh rupees, above 20 lakh rupees, we are taking 15% of the margin. And when we are considering, we are having one more scheme called SHG Shakti scheme. Under SHG Shakti scheme, even above 10 lakh rupees and up to 20 lakh rupees, we can sanction loan without any collateral security. Because for SHG finance is concerned, under normal criteria, up to 10 lakh rupees only we can sanction loan without any collateral security and without any margin. If it is more than that, we are taking collateral security. Whereas when we are considering these loans under SHG Shakti product, even up to 20 lakh rupees, we can sanction loan without any collateral security by taking a CGFMU coverage. Credit Guarantee Fund for Micro Unit coverage will be taken when we are considering if it is more than 10 lakh rupees and up to 20 lakh rupees. Sanctioning power for direct lending of SHG without any sponsoring agency is vested with ZLCC. What is the minimum and maximum loan amount under KCC Gold Plus? KCC Gold Plus above 1.60 lakhs and up to 3 lakh rupees can be considered under KCC Gold Plus, because for any agricultural advances are concerned, as per RBI guidelines, up to 1.60 lakhs, we should not supposed to take any collateral security, because up to 1.60 lakhs, there is no collateral security is required. So that here we are taking pledge of gold ornaments, so that we are giving a limit of above 1.60 lakhs and up to 3 lakh rupees can be sanctioned under KCC Gold Plus scheme. What is the maximum limit can be sanctioned for oral lessees? Oral lessees, if they are not having a land record under their name, but they are taking lease on the land, against in the leased land, if they are cultivating crop, for them we can sanction loan up to 50,000 rupees can be sanctioned for the oral lessees. Who will fix the scale of finance? In KCC is concerned, Kisan credit card is concerned, that limit will be, we are arriving that eligible loan limit depends upon the scale of finance given by the district level technical committee. This district level technical committee only arriving what is the total cost of production, that is called a scale of finance. In this scale of finance, even the margin also inbuilt in the scale of finance. That is why we are not charging any separate margin for KCC crop loan as well as animal husbandry loan. The margin is nil, because the margin is inbuilt in the scale of finance. This scale of finance will be given by the district level technical committee. What is the maximum limit eligible for interest subvention under KCC crop loan? For interest subvention under KCC crop loan is up to 3 lakh rupees. The interest subvention is available for Kisan credit card scheme. What is the maximum limit under KCC Marine Gold? KCC Marine Gold is the exclusive product which our corporate office RBD department has introduced only for the marine fishermen. Those who are having a valid marine fisherman ID issued either by the state government and central government, we are taking the photocopy of the marine fisherman, and against for them we are taking a gold ornaments against which we are sanctioning loan under KCC Marine Gold. This KCC Marine Gold product is applicable exclusively for the marine fishermen, whereas for the inland fishermen they can take loan under KCC Gold Plus. So accordingly, for KCC Marine Gold, the sanction limit will be above 1.60 lakhs and up to 2 lakh rupees will be considered as the limit under KCC Marine Gold product. What is the maximum limit eligible for interest subvention under KCC Animal Husbandry and Fisheries? As I already told you, for animal husbandry and fisheries, up to 2 lakh rupees is the interest subvention is available. If the farmer has repaid their loan within 365 days, they are eligible for interest subvention. And for if they have repaid that loan within 365 days, they are eligible for this. Your prompt repayment incentive of 3% will be applicable, because here in KCC Kisan credit card scheme is concerned, we are charging 7% rate of interest. So if they are making repayment within 365 days, they will be charged only 4%. 3% of PRI will be credited to the customer SB account. The loan granted for short duration crop will be treated as NPA. This is an important. Normally for examination purpose, they will be asking for KCC is concerned when this crop loan, because it will not come falling under the 90 days delinquency. So here for the short duration crop will be treated as an NPA if the principal and installment of principal or interest thereon remains overdue for 2 crop season. Short duration crop means the duration will be up to 12 months period of time, like paddy, wheat, pulses, oilseeds, all will be coming under short duration crop with a maximum duration of 12 months. So for that crop, if the installment of principal or interest thereon remains overdue for 2 crop season, it will be treated as NPA. The loan granted for long duration crop will be treated as NPA. This is for if the installment of principal and interest thereon remains overdue for 1 crop season, then the long duration crop will be treated as NPA. Because for normally long duration crop, which is more than 12 months duration, that we can take an example of pineapple where the duration is 18 months, and sugarcane Exali means 12 months is the duration, Atsali means 18 months duration. So wherever the crop duration is more than 12 months will be classified under long duration crop. For them, if the principal or interest remains overdue for more than 1 crop season, then it will be considered as an NPA, classified under NPA. What is the insurance premium under Pradhan Mantri Fasal Bima Yojana? Under one insurance scheme, one crop, one insurance scheme, across pan India. This scheme has been announced by our government of India in Kharif 2016. So accordingly, for the notified crop in the notified firqa will be covered under the Pradhan Mantri Fasal Bima Yojana in case of any natural calamities. If the crop loss is occurred more than 33%, the insurance claim can be obtained from the insurance company. Accordingly, under Pradhan Mantri Fasal Bima Yojana for Kharif crop, 2% will be the insurance premium. Rabi crops, it is 1.5% will be the insurance premium. And annual commercial crop or horticultural crop like a coffee, tea, plantation crops, then rubber, all these crops will be falling under the category of annual commercial or horticultural crop. For those crops, this will be coming under 5%. Normally, Kharif crop, paddy, oilseeds, pulses will be falling under Kharif crop categorization. Rabi crop, all the cold season crop like your mustard, barley, oats, wheat, all will be coming under Rabi season crop. So the insurance premium will be 2% for Kharif crop, Rabi crop 1.5%, annual commercial or horticultural crop will be 5% will be the insurance premium. Whether insurance is voluntary or mandatory for loany and non-loany farmer under Pradhan Mantri Fasal Bima Yojana. The insurance is voluntary from Kharif 2020 onwards, but if the borrowers who wants to opt out of the insurance scheme, we need to take one declaration at least 7 days prior to the cutoff date. We have to take that declaration from the farmer that they want to opt out of the insurance scheme. What is the maximum limit under JLG agriculture to a group? Joint liability group is wherever the SHG group is not able to form with a member size of 10 to 20 member, we can encourage to the group of with 4 to 10 members can form a joint liability group. Accordingly, for joint liability group, the maximum limit will be 10 lakh rupees subject to a maximum of 1 lakh rupees to an individual can be sanctioned under JLG agriculture to a group. So the member size will be 4 to 10 member for the joint liability group. What is SHG Grihalakshmi scheme and what is the maximum loan limit under SHG Grihalakshmi scheme? This SHG Grihalakshmi scheme is the housing loan that we are sanctioning for the SHG member after taking group resolution and taking group guarantee, and the maximum loan limit here is 1 lakh rupees is the maximum loan that we are sanctioning for under this SHG Grihalakshmi scheme, and the rate of interest here is as applicable to IB home loan rate of interest is applicable under SHG Grihalakshmi scheme. What is the minimum land holding required to finance a tractor and combined harvester? For sanction for financing tractor and combined harvester, minimum of 4 acres of irrigated land or 8 acres of unirrigated land is the prescribed land holding requirement for a farmer who wants to get tractor or combined harvester under this financing of tractor and combined harvester. And what is the minimum land holding required to finance a power tiller or transplanter or thresher up to 2 lakh rupees? Whenever we are sanctioning loan to finance a power tiller, transplanter and thresher up to 2 lakh rupees, the farmer needs to have minimum of 2 acres of irrigated land or 4 acres of unirrigated land is required. Wherever if that farmer does not able to provide that land holding, if they are not falling into this giving this minimum land holding capacity, if they are utilizing for the custom hiring purpose, then we can sanction the tractor loan even under Mudra loan scheme. When we are sanctioning tractor loan under Mudra scheme, that maximum limit will be 10 lakh rupees. We should not take any third party guarantee, whereas that loan will be covered under CGFMU coverage, credit guarantee fund for micro unit. And what is the maximum loan limit for tractor and power tiller? For tractor and power tiller is concerned, we can sanction to the maximum of 10 lakh rupees is the maximum limit. What is the maximum loan limit to purchase other farm machineries like a combined harvester and all? The maximum limit will be 100 lakh rupees. What is the maximum repayment term for a tractor loan? We can give a maximum of 7 years, including a maximum moratorium period of 6 months can be given for the tractor loan is concerned. Can we sanction loan for purchase of a pre-used tractor? Definitely we can sanction loan for purchase of a pre-used tractor, but the age of the tractor should not be more than 2 years. Indian Bank is entered into MOU with OEMs like Dash under Ind Krishi Vahan. Indian Bank is entered into MOU with the original equipment manufacturing industries like Mahindra and Mahindra Limited, Swaraj, Tafe and TMTL. We are having MOU under this Ind Krishi Vahan scheme. This is the latest scheme introduced by our corporate office RBD department to utilize the potential available for the tractor loan. Wherever the farmers are utilizing the tractor for the allied activities, then we can sanction loan under Ind Krishi Vahan scheme. Under Ind Krishi Vahan scheme, we are taking CIBIL score is the mandatory. So what is the maximum loan limit under Ind Krishi Vahan scheme? Up to 10 lakh rupees is the maximum loan limit to be considered under Ind Krishi Vahan scheme. Is CIBIL score is mandatory to finance under Ind Krishi Vahan scheme? Yes. CIBIL score should be more than or equal to 700. Then only they are eligible under Ind Krishi Vahan scheme. What is the margin under Ind Krishi Vahan scheme? Under margin under Ind Krishi Vahan scheme is depends upon the CIBIL score and based on the landholding. Here we are not insisting landholding capacity, but if the farmer is having any landholding means that will be an added advantage in terms of margin is concerned. So if the CIBIL score is equal to or more than 700, we are taking a margin of 30%, and if the CIBIL score is more than 750, 25% margin, and if the CIBIL score is more than or equal to 700 and farmer is having 2 acres of wetland or 4 acres of dry land, we can take a margin of 25%, whereas the CIBIL score also more than 750 and farmers also having a landholding of 2 acres of wetland and 4 acres of dry land is there means, then we can take a margin of 20% margin can be considered here. What is the payout commission for OEM dealers? So according to MOU we have made with the 4 companies, if they are canvassing the tractor loan to our Indian bank, accordingly the payout commission will be given to that your tractor dealers. So accordingly, if that a number of tractor loan account dispersed in a quarter from a single tractor dealer between 1 to 10, we are giving a payout commission of 1%. If the tractor loan canvassed by the tractor dealer is more than about 10, then the payout commission will be 1.50%. And for incentive to the tractor sales executive, we are giving 1,000 rupees per tractor shall be paid to the sales executive under Ind Krishi Vahan scheme. What is the minimum working hours of tractor per year to be considered as economically viable? 1,000 hours in a year will be considered as an economically viable. What is the maximum loan limit to purchase a pre-used tractor? Up to 5 lakh rupees can be sanctioned for purchasing a pre-used tractor. And NABARD usually encourages cold storage unit where 70% of the capacity is available to farmer storage on rental basis. Suppose if they are constructing a cold storage unit, 30:70 can be considered. 30% can be utilized for their own purpose and 70% can be given on a rental basis. And what is the minimum capacity of cold storage unit will be considered as viable project. 5,000 metric ton capacity will be considered as a minimum capacity of cold storage unit will be considered as a viable project. What is the method of assessment of working capital limit in cold storage unit? We are taking cash budget method because it's a seasonal source will be seasonal, the produce will be. So we are following the cash budget method. What are the activities coming under KCC? Animal husbandries and fisheries, dairy, poultry, small ruminants like goat, pig, rabbit, and inland fisheries, aquaculture and marine fisheries all will be considered under KCC animal husbandry and fisheries activities. What is the eligibility criteria to avail loan under SHG Shakti? So to any group who wants to avail loan under SHG Shakti is they need to complete minimum 3 dosage of credit facilities along with prompt repayment history, and also their credit requirement is above 10 lakh rupees and up to 20 lakh rupees are eligible under SHG Shakti. Here under SHG Shakti we have 3 variants are there: SHG Shakti Agri, SHG Shakti Allied Agri, SHG Shakti Non-Agri. Under Non-Agri all our MSME activities will be classified under SHG Shakti Non-Agri product. What is the interest subvention available under Day NRLM scheme for the financial year 23 to 24 is wherever the outstanding credit balance up to 3 lakh rupees, the bank will get interest subvention of 4.5% per annum during the financial year 23 to 24, and wherever the outstanding credit balance is above 3 lakh rupees and up to 5 lakh rupees, the bank will get an interest subvention of 5% per annum during the financial year 23 to 24. But this interest subvention will be payable only for the period during which an account remains in standard category. For that only the interest subvention will be applicable. Up to 3 lakh rupees 4.5% per annum, above 3 lakh and up to 5 lakh rupees 5% per annum. And accordingly, our bank also introduced the three-tiered interest structure. Up to 3 lakh rupees, we are charging 7% rate of interest. Above 3 lakh rupees and up to 5 lakh rupees, we are charging either 1 year MCLR or 10% rate of interest, whichever is lower will be charged. And if the loan limit is above 5 lakh rupees, then we are charging 12.50% as the rate of interest in this as per the three-tiered interest structure under this NRLM scheme is concerned. And this NRLM scheme will be applicable wherever the SHG groups are working in the rural areas. This NRLM scheme will be applicable. Accordingly, they have to take unique reference code to be obtained from the NRLM agency. Then the interest subvention slab will be applicable for them. What is the interest subvention available under KCC scheme for the financial year 23 to 24? 1.5% is the modified interest subvention scheme under KCC for the financial year 23 to 24. It is 1.50%. What is the minimum and maximum loan amount under SHG Shakti? SHG Shakti about 10 lakh rupees and up to 20 lakh rupees. Whether crop loan and loan for irrigation, wells and canals can be covered under SHG Shakti Agri will not be covered because CGFMU coverage will not be applicable for the crop loan. What is SHG Nirmal? If the SHG group or the member is taking any activities related to water, sanitation and hygienic activities, they are eligible to be covered under SHG Nirmal product. Under SHG Nirmal product, the minimum loan amount will be 20,000 rupees and maximum loan amount will be 3 lakh rupees under SHG Nirmal product. So the activities is if the SHG member are constructing any household toilet, refurbishment of household toilet or construction of water tanks, overhead tanks, or if they are installing any water harvesting unit, even if the SHG groups are involving in setting up of sanitary napkin manufacturing unit, all are eligible to be considered under SHG Nirmal. Minimum is 20,000, maximum is 3 lakh rupees. What is the member size of JLJ? 4 to 10 members. What is the, who will fix the unit cost for agricultural advances? NABARD will fix the unit cost for agricultural advances. Can we sanction crop loan under Mudra scheme? No, crop loans are not eligible under Mudra scheme. What is the minimum security coverage should be maintained in cold storage unit advance? Here we need to maintain 1.20 should be maintained as a minimum security coverage under cold storage unit advance. What is the maximum repayment period for cold storage? Up to 9 years, including maximum holiday period of 2 years can be considered. What is the maximum limit for financing FPO and FPC? Up to 100 lakhs can be considered for farmer producer company and farmer producer organizations. Who is the sanctioning authority for FPO and FPC? FPO and FPC zonal level credit committee will be applicable. What is the maximum quantum of loan can be sanctioned without any collateral security under Agri Clinic and Agri Business Center? Up to 5 lakh rupees can be considered without any collateral security. What are the margin norms in Agri Clinic and Agri Business Center? It is to create gainful employment for the agricultural graduates, postgraduates agriculture. This scheme has been introduced. This is NABARD is the channelizing partner here, a channelizing agency. So up to 5 lakh rupees, there is no margin is required. If the loan limit is more than 5 lakh rupees, 15% of the project outlay will be considered. For an individual project, we can consider up to 20 lakh, whereas if it is an extremely successful, we can consider up to 25 lakhs for individual borrower. For a group borrowers are concerned, we can go even up to 100 lakh rupees under Agri Clinic and Agri Business Centers. What is the maximum repayment period for Star Agro Mills? Up to 7 years with maximum holiday period of 12 months. Coffee grower loans should be advanced for intensive cultivation of coffee and replantation of coffee only. To finance under tea growers, the planter should be a registered grower with tea board. What is the maximum limit under IB, sugarcane harvesting and transportation? 7 lakh rupees. Who are eligible for produce marketing loan? All farmers and agriculturists who store their produce of warehouse registered with WDRA, they are eligible to get loan under produce marketing loan. Here IB produce marketing loan to finance farmer against the electronic negotiable warehouse receipt, which there is having, here we have NERL, that is Merchants of National E-Repository Limited. We are having an MOU. Our bank has entered into MOU. Here we are taking 70% of the value of commodity pledged as per E-Negotiable warehouse receipt. We are sanctioning that limit. The commodity offered per pledged will be valued by considering the minimum support price wherever declared or current market price or value mentioned in ENW, or that apart from that 70% of the limit can be considered as an IB produce marketing loan. What is the margin under IB produce marketing loan? 30% of the value of the commodity. Wherever the commodity is extremely perishable in nature means we can go with a higher margin of 40%. Bank has entered MOU with NERL, Merchants of National E-Repository Limited, for financing against e-negotiable warehouse receipt. What is the quantum of loan under IB produce marketing loan? Quantum will be, the minimum will be 1 lakh rupees, maximum 75 lakhs per borrower. What is the maximum repayment period for produce marketing loan? 12 months. RBD open term loan for the agricultural customer to meet their additional line of credit, specific facilities to procure and create the assets without delay. Here in RBD open term loan, we are sanctioning up to 20% of the term loan or CC limit. Whichever is higher with our bank can be sanctioned as the limit. And here the minimum limit will be 0.01 crore and maximum will be 5 crore rupees can be sanctioned under RBD open term loan by taking 25% of margin, and all agro processing industries engaged in agricultural industries are eligible to get loan under RBD open term loan. Maximum tenure will be 7 years. And agro mortgage loan, we are taking agro entrepreneurs or units engaged in agri investment activities with a simplified procedure based on the SARFAESI complied property and also based on the cash flow and DSCR. We are sanctioning loan under IND agro mortgage loan. Under IND agro mortgage loan, the maximum quantum will be 5 crore rupees and the margin will be 40% on the realizable sale value on the SARFAESI complied property, and the eligibility will be arrived based on the DSCR, and maximum tenure will be 120 months. The revised age limit for PMJDY is 18 to 65 years. The revised limit for PMJDY overdraft limit is from 5,000 rupees, it is increased to 10,000 rupees right now. The minimum lien period for PMJJBY scheme is 30 days. Pradhan Mantri Jeevan Jyoti Bima Yojana, it is a life insurance scheme. The premium will be 2 lakh rupees. The accidental insurance coverage for new RuPay card holder from existing 1 lakh rupees to 2 lakh rupees to new PMJDY accounts open after 28/8/2018. They are eligible for 2 lakh rupees as accidental insurance coverage under RuPay card insurance scheme. The age limit to be enrolled under Jeevan Jyoti Bima Yojana is 18 to 50 years. It is a life insurance scheme, and the age limit to be enrolled under Pradhan Mantri Suraksha Bima Yojana scheme is 18 to 70 years. Here the insurance coverage is 2 lakh rupees in case of the death due to accident, that will be covered under Pradhan Mantri Suraksha Bima Yojana. Under Jeevan Jyoti Bima Yojana, death due to any cause will be considered under Jeevan Jyoti Bima Yojana. What is the age limit to be enrolled under APY? 18 to 40 years. The age limit minimum contribution period for APY will be 20 years. The scheme would be offered and administered through the LIC. PMJJBY is administered through LIC, and that Pradhan Mantri Suraksha Bima Yojana is administered through the public sector general insurance companies. Suganya Samriddhi Yojana account can be opened in the name of girl child till she attains the age of 10 years. What is the mode and frequency of contribution to the APY account? Quarterly, half-yearly and monthly repayment the contribution frequency. And Pradhan Mantri Jan Dhan Yojana is launched under National Mission for Financial Inclusion launched by our Honorable Prime Minister on 28/8/2014. Who has prepared NSFM? It is nothing but National Strategy for Financial Inclusion for India, prepared for the period of 2019 to 24 under the aegis of Financial Inclusion Advisory Committee based on the inputs received from SEBI, Insurance, IRDA and PFRDA. What are the strategic pillars of National Strategy for Financial Inclusion? Universal access to financial service, providing basic bucket of financial services, access to livelihood and skill development, financial literacy and education, customer protection and grievance redressal, and effective coordination. These are the 6 pillars under the National Strategy for Financial Inclusion. What are the limitation of a small account? Aggregate of all credit in small account cannot exceed 1 lakh rupees in a financial year. Aggregate of all withdrawal and transfer in a small account cannot exceed 10,000 rupees in a month, and balance in the small account at any point of time cannot exceed 50,000, and foreign remittances will not be allowed for the small account. Under APY, minimum guaranteed pension will be 10,000 rupees to 5,000 rupees. Once they have attained the age of 60 years, they will get the minimum guaranteed pension as per the scheme opted by the customer. And what is the premium to be paid if JJBY is in the month of June, July, August is they have to pay the 436 rupees is the premium to be paid for the Pradhan Mantri Jeevan Jyoti Bima Yojana scheme. Under for Suraksha Bima Yojana scheme, the customer has to pay 20 rupees and it should be renewed every year. Auto debit will be happening. All the scheme will be applicable between 1st June to 31st May. And if the customer is having a balance in their account, auto debit will be happening. Then only the customer will be covered in the particular year under both the schemes. What is AIBOC? AIBOC is the new FI solution. As per this, sustainable access and aligning technology for holistic inclusion. It is a hybrid model, and BCs in this model are expected to offer banking services at the allotted location for a minimum of 4 hours in their fixed setup. After that, they can go for the unserved area, or they can even go and give that service to the doorstep service can be provided by the BC. But at least they should be minimum 4 hours in the fixed setup. This is the hybrid model that is called AIBOC. Who is our technology service provider under AIBOC model? Merchants Integra Microsystem is our, for 3 years we are having an agreement. So they are our technology service provider under AIBOC model. Who are our business correspondent? That a corporate business correspondent, we have 10 business correspondents are there. The Adpati, CSC, FIA Technology, Integra, Vision are existing corporate BCs, and Alankit Limited, Commonwealth Inclusive Growth Services, Fino Payments, Manipal Technologies, Starfin India Private Limited are our new corporate business correspondents. So totally we have 10 corporate business correspondents are there. What is the maximum limit for cash transaction allowed for FBC? Per FBC can accept cash receipt or transfer up to a maximum of 20,000 per individual per day, and the cash payment maximum of 10,000 rupees per individual per day. What is the mandatory working hours for FBC? The working of minimum 20 working days login in a month and minimum of 4 hours working in a day is mandatory for all BC points as per the AIBOC solution. Bank follows OPEX model for BC management services through the corporate business model for remuneration to CBCs and FBC OPEX model. Pradhan Mantri Shram Yogi Manthan Yojana is for unorganized workers to ensure minimum assured pension of rupees 3,000 rupees per month after attaining the age of 60 years. A banking outlet which does not provide a delivery of service for a minimum of 4 hours per day and for at least 5 days in a week will be considered as a part-time banking. If they are not able to provide 4 hours per day and for at least minimum 5 days per week will be considered as a part-time banking outlet. If Pradhan Mantri Kisan Samman Nidhi Yojana is concerned, this is wherein 120 million small and marginal farmers of India with less than 2 hectares of land holding will get up to rupees 6,000 per year as the minimum income support under Pradhan Mantri Kisan Samman Nidhi Yojana scheme. What is the central financial assistance available under Ind Kishan Sausakti project? It is coming under Pradhan Mantri Kishan Urja Suraksha even Uddan Mahabhiyan scheme. Under the scheme, central financial assistance applicable up to 30% and 30% state subsidy will be applicable. Wherever, if this scheme, when we are sanctioning loan for the farmers to setting up of solarized grid connected motor pump sets or standalone motor pump sets, that for northeastern state, Sikkim, Jammu and Kashmir, Himachal Pradesh, Uttarakhand and Lakshadweep and Andaman and Nicobar Islands, we can go even up to 50% of central financial assistance is applicable here. Which year the Kisan Credit Card Scheme was introduced? 1998. What is SATAT scheme? Sustainable Alternatives Towards Affordable Transportation. This scheme for financing compressed biogas plant. setting up of compressed biogas plant with the minimum production of 2 tons per day and with the maximum subsidy available in this scheme is 10 crore rupees. What is Agri Infrastructure Fund? To provide advances for post-harvest management projects, viable projects for building community farming assets announced in May 2020 by the central government under Atmanirbhar Bharat scheme. Under the scheme, 1 lakh crore has been provided for farm gate assets and aggregation points. The interest subvention available under Ind Krishi Infra Fund scheme is 3% per annum up to a limit of 2 crore rupees for a maximum period of 7 years. And Animal Husbandry Infrastructure Development Fund also announced under Atmanirbhar Bharat package by the central government. Under this scheme, if the investment for establishment of dairy and meat processing and value addition infrastructure, animal feed plant, establishment of IVF centers for animal, sex-sorted semen center for animal, breed multiplication farms, all these things that the project can be sanctioned loan under Animal Husbandry Infrastructure Development Fund under Atmanirbhar Bharat scheme. Under this, our bank RBD department has introduced a product called Pasudan Mitra. Here also 3% of interest subvention is available under Ind Pasudan Mitra scheme. What is PMFME? Prime Minister Formalization of Micro Food Processing Enterprises. It is coming under Ministry of Food Processing Industries. Wherever there is a potential available for micro enterprises and to tap the potential available in micro enterprises, wherever we are sanctioning loan for anything, any micro enterprises unit for any eatable items including puppet making, then flour making, all these kind of items will be considered under PMFME scheme. Even for branding and marketing of their produce also we can sanction loan under PMFME scheme. The subsidy available under PMFME scheme is credit linked 35% subsidy to a maximum of 10 lakh rupees is available, and credit guarantee fund trust for micro and small enterprises for collateral free loan up to 2 crore rupees is available. Wherever we are sanctioning loan up to 10 lakh rupees will be covered under CGFMU coverage under PMFME scheme. What is Mahila Samman Savings Certificate? The Mahila Samman Savings Certificate is a one-time scheme available for 2 years from April 23 to March 2025. It will offer a maximum deposit facility of up to 2 lakh rupees in the name of women or girls for 2 years at a fixed rate of interest. Right now it is 7.5%. This is the Mahila Samman Savings Certificate. What is Bharatiya Pragrati Krishi Paddhati, that is BPKP scheme? It is a submission under Paramparagat Krishi Vikan Yojana scheme. It is a component of soil health management of National Mission for Sustainable Agriculture. Under this scheme, organic farming is promoted through the adoption of the organic village by cluster approach and PGS certification also there. It is to ensure the quality of the produce which is produced in the organic farming. And this scheme also aims to promote natural farming and traditional indigenous practices. This is the PPKP scheme. What is Sri Anna Yojana? It was announced by our finance minister in the last year budget to promote the cultivation and production of coarse grains in the country. The central government has announced the launch of Sri Anna Yojana. Under this scheme of the government, the area and production of coarse grain will be increased in the country, and the central government is preparing to make our country a global hub for food grain production. For this, Indian Millet Research Institute at Hyderabad will be the major millet research, will be termed as a major millet research center. This is the Sri Anna Yojana. Anna Yojana means that is super food. So we are promoting for the cultivation and production of the millets under the Sri Anna Yojana scheme. So that's it. All the best. And all the best for the participants. And thank you for our AIBOC union for giving us opportunity to discuss about the agriculture, FI and government schemes. Thank you, sir. Yeah, start. I'll say. Madam, if you can.
Very good morning to all of you. I am Kalyani Hari, faculty from Image. In this session, we are going to discuss digital products and digital policy. What is a digital product? Actually, it refers to a product or service that is primarily based on digital technology, existing in a non-physical or intangible form. Unlike traditional physical products, which are tangible and occupy physical space, these are created, distributed, and consumed in a digital environment. So it provides increased accessibility, improved security, enhanced convenience, and greater control also. Some of the examples I'm keeping it here: debit card, prepaid card, our credit card, POS machines, Aadhaar Pay, small merchant, IB Collect, Collect Plus, and We Collect Plus, FASTag are all examples for our digital products. And we have alternative delivery channels also. What does this alternative channels means? Other than branch channel, whatever service we are providing to our customers, that is called alternative delivery channels. Some of the common examples, I'm keeping it here. Our ATM, automated teller machine, you can call it as anytime money, and BNA, there is other names also, CDM, CR, so bulk note acceptor, cash deposit machine, cash recycler, you can call it as. And we have net banking, mobile banking, UPI, and kiosk, and call center, banking correspondence, missed call services. All these services are coming under alternative delivery channels only. We all know the benefits, okay? So many benefits. First of all, it is available 24/7, all the days, so no need to visit the branch. Banking service at fingertips, greater choice, speed, accuracy, everything is there. Waiting time and cost is also reduced. Accessibility at one's own convenience. They can use it anywhere, and cost of operation for bank comes down. Bank staff can be better utilized for some other purpose. So these are the benefits, friends. That is why digital transformation and digital adoption is taking place. And what is this digital transformation in banking? It is nothing but, friends, it is an upgradation of our banking activities using latest technology. Okay. So a digital transformation is the upgradation of existing processes or introduction of new ways of carrying out business activities using digital technologies that enhance a customer experience and leads to higher conversion rates for the company. So a lot of developments, initiatives, and digital journeys we have launched. As of 18/1/2024, our digital business crossed 57,392.97 crores, friends. And we have disbursed 49,361.25 crores advances and mobilized 8,031.72 crores of deposit as well. So that is why we are concentrating on digitalization. And with these three channels, we are moving. And apart from this mobile banking, we can call it as OSS, and internet banking and website, branch assisted journeys are there, and a few SMS journeys are also available. So we'll go segment wise, so that what are all the digital products available in our bank under deposits. First one is our tab banking. So account opening through tab is possible nowadays, and account opening through video KYC using BSIP technology, and e-term deposit is there for existing customer, and Ind Swagat is also there. Even they doesn't own a SB account also, they can open one term deposit with us. So these are the facilities available under deposits. Now let us go to advances side. What are all the digital journeys available under loans? We have Ind Digi KCC, Ind Digi KCC for the existing customer. ETB means existing to bank. And KCC digital renewal. Ind Digi home loan is available. And Sishu Mudra we are giving. And EOD against term deposit is available. We have a tie-up with Maruti Suzuki Smart Finance. Gold loan co-lending with Rupik we are doing. And Ind Digi Agri Jewel loan, new and both repledge is available. And Ind GST advantage is there. And retail, MSME, jewel loan, branch assisted journey is also available. Ind Digi vehicle loan is there. Pre-approved personal loan, it is the first loan under digital journeys and all. And MSME renewal facility is available up to 20 lakhs. So these are the developments under loans. Other than this, we have e-services. Nowadays, cardless cash withdrawal in ATM that you can do through even through BNA also, through using IndOasis, and virtual debit card in IndOasis app it is available. And we have IB Rupee key. Rupee on the go smart keychain is available. FASTag, DigiLocker, video life certificate for pensioners, repayment of term loans through BNAs. These are the e-services available. Under collection services, we have UPI collect billing solution, offline challan, multi-utility payments, we collect using virtual account number, IB collect using payment gateway services, IB collect plus form-based solutions. These are available under collection services. We have some merchant products also. Merchant QR solution, Soundbox, POS machines, point of sale, soft POS we are having. E-Rupee issuance is there, E-Rupee redemption for IB corporate merchant app. It is a corporate merchant app. These are the products available under merchant products. And what are all the insurance products we are having? We have a tie-up with Universal Sambo. Without health insurance, two-wheeler, four-wheeler we are doing. And ODAD, we are giving ODAD against insurance of this Aditya Birla, Sun Life Insurance and SP Life Insurance. All these products we are having. And we are issuing cards also, secured credit card, pre-approved credit card, and credit card to existing to our bank customers. So these are the products available, friends. Now let us go one by one, question and answers. Indian Bank has signed MOU with the BCG Group. The project is named as WAVE, World of Advanced Virtual Experience. It was launched in January 2022. With that only we have launched so many journeys. And what is the minimum CIBIL score under PAPL? I am putting the answers also here for our easy convenience. So 700 is the minimum CIBIL score required for PAPL. What is the minimum CIBIL score under Ind GST advantage? Means it is 725, friends. Whether SMA account is eligible under PAPL? No. Whether minor is eligible to open EOD? That is also not possible. What is maximum limit under EOD? It is 10 lakhs, friends. What is the margin we used to take? Means it is 10% like LOD only. What is maximum amount under digital KCC renewal? Up to 1.60 lakhs we can lend. What is e-rupee key? Tap and make contactless payment up to 5,000 on the go. And the answer it will be there like on the go. So what is quick response? It is the expansion for QR. QR code stands for quick response code. Skimming attack relates to what? Magnetic stripe card. SOA is a Trojan type of malware. Which type of cards are incorporated with RFID technology? It is NFC cards. Under which collection product remitter can remit fund to the beneficiary, credit or debit card or through UPI means it is IB Collect and IB Collect Plus. Deposit of 50,000 and above in cash recycler requires PAN number. PAN number in the account must be there. Our bank uses digital security certification of VeriSign for internet banking. Bill payment can be done before due date using register bill pay, biller pay. BHIM is acronym for Bharat Interface for Money. UPI transaction done through unique ID, it is called Virtual Payment Address VPA. In case of problem in SIP or SIP reader in ATM, magnetic stripe in the card will be read as fallback mechanism. Okay. MDR for RuPay debit card is 0 at present. We are not taking any charges for that. IN is allotted by NPCI in AEPS. What does IIN refers to? Institution Identification Number. Amount collected under IBV Collect is credited to mapped account number of virtual ID of the institution. FASTag is a digital wallet with RFID, that is radio frequency identification SIP. Certain provides security advisories. Expansion for this certain is Indian Computer Emergency Response Team. AEPS means Aadhaar enabled payment system. So Aadhaar based transactions are happening through which payment system means it is AEPS. What is the maximum interest-free credit period in credit card? It is 45 days. What is the active and inactive session timings? Session timings of 20 minutes for active session and 10 minutes for idle timeout. For internet banking it is there and 2 minutes for IndoAssist will be there. What is soft POS? Soft POS is a mobile application based solution which enable merchants to accept payment from customers through contactless card, QR and cash and maintain customer-wise kata. And what is soft POS transaction limit? As per RBI guidelines, per transaction limit for contactless card transaction has been fixed to maximum 5,000. But for QR and other features, there is no transaction limit. Whether PMJDY can be opened through tab banking. Yes, it is possible. What is MDR? Merchant, it is a merchant discount rate which is chargeable to the merchant, debited from the transaction amount when a card is swiped or tapped in POS. What is the reward point for credit card? One reward point valued at rupee 1 for every 100 spent. So I am putting some options also here. A is the correct answer. One reward point valued at rupee 1 for every rupee spent is the correct answer. What is minimum joining fee for credit card? There is no minimum fee and all. Okay, so nil is the correct answer. What is maximum limit under Ind GST advantage? Normally 25% of the sales in GST returns we used to take. Whether DEVA approval required for Ind GST advantage? No, not required. What is maximum limit under OD against insurance online mode? It is 10 lakhs. What is maximum limit under OD against insurance online mode? How much you can give? You can give up to 80% of the surrender value of the policy. What is maximum limit under overdraft against deposit, that is ODAD, on branch assisted mode? As a branch assisted mode, there is no limit. Okay. Digital mode only up to 10 lakhs. Branch assisted mode up to any amount you can give. What is maximum limit for online mode? Then it is 10 lakhs. Okay. Whether Ind Digi Home Loan available for NRA customers? No, it is not available. Digi product is not available for home loan product is not available for NRA. Whether DEVA approval required for Ind Digi Home Loan? Yes. For vehicle loan, that is also required. Yes. What is maximum limit under Ind Digi vehicle loan? Up to 25 lakhs you can give. What is minimum credit for PAPL? How much pension one pensioner has to get for getting this loan? It is 10,000. For salaried customer means it is 15,000. At least minimum 15,000 salary they should get. What is maximum limit under pre-approved personal loan? It is 5 lakhs. Previously it was 3 lakhs. Now it has enhanced to 5 lakhs. Lead management model, LMM, gathers lead from all of this. We can gather from social media, ADIA, and missed call or SMS services also. Self-service kiosk shall be offered to the following places: temple, churches, and charity places to collect donations, restaurant, retail stores for ordering and making payments, parking lots for making payments. All of these places you can keep. You can keep in all these places. There is no restriction. Social engineering type of attack is also phishing and SMSing. That is all of these you can take. What is spam? It is an irrelevant or unsolicited message. CCMP is acronym for Cyber Crisis Management Plan. IBEDOC is Online Letter Management System. Our bank is issuing only open system PPIs in the form of RuPay prepaid cards, IB cash card, which can be used in any ATM and POS terminals connected to the RuPay network of NPCI. But in the country, 3 types are available. PPIs issued in the country are classified under closed system PPIs, semi-closed system PPIs, and open system PPIs also. So all of these are correct. Indian Bank is issuing debit cards by defining the daily withdrawal or usage limit at the bin level is the answer. Cards not delivered to customers within within 4 months they need to collect the card. Okay, so 120 days is the answer. Cards not delivered to customers within 120 days from the date of receipt will be hard-listed automatically for security reasons, except RuPay PMJDY debit cards. Branches shall destroy such cards and pins physically and record in the register. All cards will be issued with green pin in normal course. However, branches can request for paper pin mailer if there is no ATM available near the branch for setting the green pin. Yes, it is true. Okay. Bank has withdrawn for further issue of card. It is Visa Global Classic card. Who can be the owner of credit card policy and took all business related decision including fixing of credit card limits and all? Means it is CORAD. They can only fix that limit and all regarding credit card policy. And what is the type of internet banking facility provided for sole proprietor concerns? They can have both retail net banking and corporate net banking also allowed for sole proprietor firms. But in the case of public and private limited, only corporate net banking is allowed. So what is the type of internet banking facility provided to this private and public limited? Means it is corporate net banking only. What risk is associated on issue of co-branded prepaid cards? It is reputation risk. It is connected with reputation risk. Next we'll see. Banks with net worth of rupees how many crores and above can undertake credit card business for which no prior approval of RBI is required? Means up to 100 crores net worth they can have. They need not go for approval from RBI and above, 100 crore and above. Bank issues general purpose credit cards in association with both RuPay and Visa.
5 minutes break.
After this? Now itself? Okay.
1, 2, 3, check. Audio. 1, 2, 3, check. 1, 2, 3, check. So this is the second one.
Can I talk? Can I start now? Are you hearing, sir? Okay, no? Okay. Let me start. Once again, friends, we are in what risk is associated on issue of co-branded prepaid cards. It is reputation risk, we have seen.
Right changes. That is. It's like that.
It was previously working. Yeah. This also we have, no, ulta it is working. Corporate banking and reputation risk we have seen. So, general purpose credit cards. Bank issues general purpose credit cards in association with RuPay and Visa cards. Both. This also we have seen now. Yes. This we need to see. As per RBI guidelines, name of the grievance redressal officer, ABM of COCCC, shall be furnished in the monthly billing statements. The complaints grievances received would be resolved as per the bank's customer grievance and redressal mechanism policy. It is true. Small Merchant App. Dash can request for self-onboard and creation of UPI merchant QR using IB Small Merchant App, and the request is approved by zones or branches. Answer is monthly inward credit less than 1 lakh through UPI must be there for Small Merchant App. For IB Corporate Merchant Solution, monthly inward credit greater than 1 lakh must be there. Greater than 1 lakh through UPI will be provided with static QR for receiving payments in their account through corporate QR UPI solution. Facility the transfer funds without adding beneficiary accounts. Funds transfer to other customer accounts with Indian Bank and IMPS up to 25,000. It is increased to 25,000 now. Please make a note. And user status changes to dormant state on non-usage of internet banking facility within 15 days from the date of activation of user ID will happen. In internet banking, forced password change during the first login attempt and forced password change every 180 days. Must be there, both for login and transaction passwords. Retail net banking customer can add maximum 5 number of beneficiary per day. Corporate banking customer can add 10 maximum number of beneficiary per day. DBU is acronym for Digital Banking Unit. It is to widen the reach of digital banking services. It is established. We have some 75 DBUs all over India. We have 3 for Indian Bank. And DDE is acronym for Digital Document Execution. It is a mode of paperless execution and storage of financial contracts. Now let us concentrate on deposit policy. All of you are aware of deposit products and all. Some of the tough questions which may come in our examination point of view. We are going to cover this deposit policy now. Which position is nominated as the custodian of the policy on deposits? It is General Manager RNGR. What information is the bank required to obtain under KYC norms in addition to due diligence? Recent passport photograph of the person or persons, opening or to operate the account, along with the OVD we need to collect. Okay, sir. What is the maximum exposure limit for CCOD from banking system for borrowers to open a current account without restrictions according to the RBI guidelines? Up to 5 crores. For borrowers with an aggregate exposure of 50 crores and more, or more, which bank will manage the escrow account for current accounts? Any lending bank chosen by the borrower. What is the purpose of monitoring all accounts regularly, specifically with respect to the aggregate exposure of the banking system to the borrower? It is to ensure compliance and guidelines on loan system. So that is the answer. Under what circumstances can the bank allow withdrawal to surviving depositors of term deposits of deceased without referring legal opinion? If the depositors have given a specific joint mandate at the time of opening or subsequently for the said purpose, then only we can do that. What is the significance of the periodical updation of KYC records according to the banking policy? It is to identify potential money laundering. What does the RBI guideline emphasis regarding interest rate on deposits in scheduled commercial banks? It must be transparent and consistent rates for that purpose. What factors can cause variation in interest rates on term deposits according to the RBI guidelines? Tenor of deposits and size of the deposits only decides. In the context of interest rates on term deposits, what does ALCO stand for? Asset and Liability Committee. What does a bank do if the total interest paid on term deposits held by a person exceeds the amount specified under the Income Tax Act? We have to deduct tax at source and remit. So many options will be there, I'm keeping the answers alone, friends, for your reference so that you can remember well at the point of examination point of view, I'm telling. So we are keeping the answers only here. So what happens when a small account holder fails to fulfill the normal requirements for full KYC within 24 months? Actually, in the case of small account, what happens? 12 months only it will be valid. They have to produce some OVD, then only it will be converted into a regular account. And if they are giving some extension letter, it can be further extended to 12 more months. But before 12 more months, within this 24 months, if they are not proceeding that OVD procedure and all, then what will happen means that account becomes dormant. That answer you have to select. In the case of term deposit, standing in the name of an Karta of a Huff, Hindu undivided family, can the Karta be offered a higher rate of interest due to seniority? Okay, then it is not possible, no. How long will a domestic term deposit be automatically renewed if there is no restriction to the contrary from the customer? Up to 10 years. Under what circumstances will the bank consider a loan against a deposit standing in the name of a minor, whether we can give loan? Only when the minor is governed by Hindu law, then only we can give loan. If a depositor is dissatisfied with the response received from the bank regarding a complaint, what is the next step the depositor can take? Out of these answers, B is the correct one. They can approach the banking ombudsman appointed by RBI. What happens to the amount in savings bank or current account marked as unclaimed deposit? It is transferred to the DEF. We used to call it as Depositors Education and Awareness Fund. What is the interest rate payable on SP accounts transferred to this DEF account and all? As specified by RBI, it is 3% per annum. Which type of account allows a resident individual to make a rupee gift to an NRI or PIO who is a relative with a non-resident ordinary account, NRO account only? Under what conditions can a resident power of attorney holder repatriate funds from an NRE account? They are permitted to do only local payments only. Out of these answers, you need to select local payments. Are balances held in NRE accounts subject to wealth tax? No. Balances held in NRE accounts are exempt from wealth tax. Thank you, friends. With this, I am concluding this session. All the best, all of you, for the upcoming examination and for your interview also. And I would like to thank Comrade Shekaran sir and Principal Image for giving me this opportunity. Thank you all.
Okay. So good afternoon, friends. We have been given two topics, that is retail loan and MSME. So we'll be trying to cover all retail loan topics and this MSME. First, we'll start from retail loan products. We'll be starting through question and answer, and in between we will brief if anything is there, any guideline is there, that will be briefing. So first question is, what is the modification in the target group under IB Home Loan Plus scheme according to the revised guideline? The new revised guideline has come, and the guideline has changed in IB Home Loan Plus. So options are, home loan account should not have appeared in SMA2 during the last 2 years. Home loan account should not have appeared in SMA2 during the last 1 year. Home loan account should never have appeared in NPA. All other terms and conditions will be modified. So here new guideline is there, home loan account should not have been appeared in SMA2 during the last 1 year. So which of the following is not an eligible course for education loan under this scheme? So education loan new guideline has come. Last year we have seen latest guideline. As per latest guideline, which of the course is not eligible under the education loan? One is MBA, Aeronautical Engineering, Diploma in Teachers Training course, and ICWA. As per latest guideline, Diploma in Teacher Training course, that is not eligible for availing education loan. So in the case of an executive MBA program, what is the maximum loan amount which can be sanctioned? So under the MBA, executive MBA program, and under new education loan scheme, we can sanction maximum 25 lakh. Then comes, what is the margin requirement for an education loan amount of rupees 4 lakh for studies in India? So as per new guideline, friends, we can see up to 4 lakh, there is no margin requirement even in India and abroad also. So here the option will be nil. So three criteria has been made. Up to 4 lakh, there will be nil margin for education loan. Then from 4 lakh to 7.5 lakh, there will be 5% margin if the student is studying in India. If studying in abroad, the margin will be 15%. And above 7.50 lakh, if a student is studying in India, the margin will be 15%. And if the student is studying in abroad, the margin will be 20%. And for this this executive management program, the margin has been fixed as 25%. So this is the thing. Even we can get some answer, some questions from this topic, means we will be able to answer. So here, for an education loan amount of 8 lakh for studies abroad, what will be the applicable margin? Just now we have discussed up to 4 lakh nil margin. For both above 4 lakh to 7.5 lakh, the margin is 15% for abroad, and more than 7.50 lakh, the margin for abroad is 20%. What is the minimum margin requirement for an education loan of rupees 7.5 lakh for studies in India? Now here it is very clear that we have seen 4 lakh to 7.5 lakh, the margin should be 5%. Then what is the recommended primary security for all education loan categories? So here we are discussing about primary securities for all education loan category. So the primary security of all educational loan categories, assignment of the future income of the student borrower. Which among the following is not correct for the education loan for executive management program, executive MBA in Premier Special, Premier Institute and Premier Allied? So here we will see no collateral security required in case of Premier Allied. Collateral security required for the full amount for Premier Special and Premier Institutes. Guarantee of PF and NPS nominee required in case of a borrower, and third party guarantee required with sufficient net worth in case of a staff borrower. Here third party guarantee required with sufficient net worth in case of a staff borrower, that is not required. So this statement is not true. Apart from this, all the statements are true here. What does the lock-in period represent in the context of invoking the credit guarantee for education loan? So the lock-in period, actually it is 1 year from the repayment start date. 1 year from the repayment start date will be the lock-in period. Then when can the credit guarantee be invoked for an education loan within the CGFSEL? So the answers are, options are anytime during the loan tenure, within 1 year from the date of NPA after the lock-in period, within 1 year from the lock-in period, irrespective of NPA, and after the completion of lock-in period. So here we are invoking the credit guarantee under CGFSEL scheme within 1 year from the date of NPA and after the lock-in period. For Premier Allied Institute, what is the loan sanctioning authority for amount up to 30 lakh and up to 40 lakh for ISB? We are having education loan, ISB without collateral security, that is for ISB Mohali and ISB Hyderabad. There we are sanctioning up to 40 lakh collateral free loan. And for other cases, we are sanctioning 30 lakh. So here, who is the sanctioning authority? So this power has been given to branch managers up to their discretionary power. What is the maximum loan limit eligible under CGFSEL for education loan? So under CGFSEL, coverage is up to 7.50 lakh. According to the scheme, what is the maximum permissible interest rate charged by member lending institution on education loan? So as per this guideline, bank's benchmark rate plus 2%, that is the maximum amount which can be charged from the education loan borrower. Which PSLP is not a part of the package under home loan combo? We are giving home loan product where we are giving some concession in rate of interest as well as processing charge. Also we are giving up to 50% concession. So vehicle loan also we are giving. Vehicle loan is the part of combo. IBCLS is also a part of combo loan. IB pencil loan is also part of combo loan, but IND mortgage is not a part of home loan combo package. Minimum entry age of the applicant for home loan. So here, if the resident Indian is coming to avail the home loan, the minimum entry age will be 18 years. And if the NRI will come to avail the home loan, the minimum entry age will be 21 years. To repair, renovate an existing house flat, maximum amount, how much can be sanctioned? For repair and renovation, we are sanctioning maximum 3 crore. Here, to repair, renovate an existing house flat, maximum, what will be the maximum repayment period? So we are giving loan up to 10 years. So here repayment period will be 120 months. Then comes to repair, renovate an existing house and flat, what will be the applicable margin? So here in repair and renovation, we are maintaining margin of 30% on the estimate. Margin for purchase, construction of house flat, loan amount up to 30 lakh. So home loan, friends, we can see there are 3 slabs are there. Up to 30 lakh, we are maintaining separate margin and LTV. 30 lakh to 75 lakh, we are maintaining 20% margin, and loan amount LTV will be 80%, and above 75 lakh, it will be 25-75. So margin will be 25 and loan to value will be 75. So here loan amount is 30 lakh. It means that we have to maintain margin of 10% and LTV will be 90%. Here again, what we have discussed, question is here, margin for purchase, construction of house flat, loan amount above 30 lakh up to 75 lakh. So that will be here 20% and LTV will be 80%. And this is the third case, third scenario, margin for purchase, construction of house, flat, loan amount above 75 will be the option C, that is 25% and LTV will be 75%. Here only we should remember the three slabs. Sometimes we are getting, the IBPS will give question and will confuse us. They will put some amount in between. They will say some event 80 lakh or sometimes they will say 65 lakh. So we should not be deviated. We should see only three slab within that bracket. If it is coming, we should remember 10, 20 and 25. That's all. Then IB home loan to non-resident Indians. What will be the entry age of the applicant? Just now we have discussed from the friends. Minimum entry age should be 21 and maximum entry age can be 50 years. Here we can see zonal manager or ZLCC has been given power that this maximum entry age can be extended from 50 years to 60 years for non-resident Indian. So sometime if we get question, we will be in a position to answer, but normally the age has been fixed from between 21 to 50 years. That is the entry age. IB home loan to non-resident Indians. Again, exit age of the applicant is coming. What should be the exit age? So here exit age is 60 years, but again zonal manager or ZLCC has been given power to extend it up to 70 years. Then comes for the home loan to be classified as commercial real estate exposure, the rate of interest shall be what percent above the applicable home loan interest rate. So here we are charging 1% over and above the applicable home loan interest rate. Then maximum loan amount under loan for purchase of house sites plot in metro area. If somebody wants to purchase plot or plot in metro area, the maximum amount can be sanctioned 12 crore. Maximum repayment period under loan for purchase of house site or plot. So what is the maximum repayment of plot loan? So maximum repayment will be 15 years, that is 180 months with no holiday period. In pension loan, amount eligible for regular pensioner is what months pension with no maximum ceiling. So here friends we can see for regular pensioners we can give 18 times of the monthly pension and there is no maximum cap. Again in pension loan amount eligible for family pensioner is dash months pension subject to maximum. This is talking about family pensioners. So for family pensioners we can give 12 times again with no cap. So here friends we can remember this as if we are giving loan to regular pensioners we can give 18 times of the pension, and if it is a family pensioner we can give 12 times of the pension. Here no cap is there, but yes of course we have to see the NTHP of the pensioner. Then repayment period fixed in case of regular pension loan is what months? So here friends we can see now in pension loan we can give pension loan up to 10 years subject to the exit age criteria that we have to check the exit age that we'll be discussing. Here the pensioner either if he is a regular pensioner or family pensioner, in both the scenario we can give loan up for 10 years. So here the answer will be 120 months. Then repayment period fixed in case of family pension loan is dash months. Again same answer will come because we have discussed for family pensioner or for regular pensioner, in both the scenario we are giving 10 months repayment period. Then comes maximum exit age for regular pensioners under IB pension loan scheme. Maximum exit age for regular pension. So regular pensioner we are considering up to 78 years, that will be the exit age. Here maximum exit age for family pensioner under IB pension loan scheme. For family pensioner again we are considering up to 75 years. So here we can repeat, I am repeating this question. If it is a regular pensioner, the exit age will be 78 years, and if the customer is a family pensioner, then the exit age will be 75 years. Again I want to add this, that in pension loan now minimum entry age, that criteria has been removed, because defense people and all, they can come. Again, one more clause they have put, even if they have got the job, suppose any defense people are there, they have got the job in another organization, they are also eligible to avail the pension loan. So if some cases we are getting that re-employed, whether re-employed will be eligible to avail the pension loan, yes, he or she can avail, subject to if he or she is fulfilling the eligibility criteria otherwise. Under IB pension loan, waiver of processing charge is applicable to. From this list we have to see IB retiree, central government pensioners, state government pensioners and all pensioners. Here only our bank, IB retiree means our bank staff only, our bank retired staff only, we are not charging processing fee. Apart from that, we are charging processing fee. So how much processing fee we are charging? Up to 25,000 we are not charging any processing fee in pension loan. If the amount exceeds 25,000, then we are charging 250 rupees plus GST. That will be the processing charge in pension. Maximum eligible loan amount for regular pensioner. What will be the maximum? Just now we have discussed that there is a no cap, no such ceiling is there for pension. Maximum eligible loan amount for family pension, again we have discussed there is a no cap. So there is no cap of minimum, there is a no cap of maximum. Here in a regular pension, regular pensioner, we can give 18 times subject to NTHP, and for family pensioners we can give 12 times subject to NTHP, that 40% they have to maintain. Then maximum entry age for regular pensioners. Now here maximum age they can enter in, this is, we are talking about a regular pensioner. So regular pensioner maximum age will be 75 years. Now maximum entry age for family pensioners. So in case of family pensioners, it will be 72 years. So 72 years in maximum entry age, and exit age will be 75 years. In case of regular pensioners, maximum entry age will be 75 years and exit age will be 78 years. Pension loan cannot be sanctioned for purpose. See, pension loan can be sanctioned for any non-speculative purpose, that is, he may take for marriage purpose, education purpose, medical purpose and other purpose also, but it should not be for speculative purpose. So here the answer is speculative purpose. Who are not eligible for IB pension loan? Central government pensioner, CRS retirees or EPF pensioners, state government pensioners and IB retirees. Friends, we have seen central government pensioners, IB retiree already we are giving. So only CRS and EPF pensioners, they are not eligible for availing IB pension. Which among the following is not correct under pension loan scheme? CRS pensioners not eligible, EPF pensioners not eligible, re-employed pensioners are pensioners not eligible, none of these. Just now we have discussed that re-employed pensioners can avail the pension loan. So the option C, re-employed pensioners not eligible, this statement is not true. So other statements are correct, because CRS pensioner and EPF pensioners we have seen just now, they are not eligible, but re-employed pensioners, they can avail the pension. Maximum loan can be advanced by our bank for four-wheeler. How much amount we are sanctioning for four-wheeler? So four-wheeler, if we are here, we are talking about new four-wheeler. If we are sanctioning loan for new four-wheeler, we can sanction up to 5 crore. And if we are sanctioning a vehicle loan for used car, then we can go up to 3 crore. How many times of gross salary is the eligible amount of loan under IVVL subject to other conditions? So for salaried class, we are calculating up to 48 months. For pensioner class, we are calculating up to 36 times. What is the maximum repayment period for two-wheeler under IV vehicle loan scheme? See, we are giving, we should not be confused. For four-wheeler, we can give maximum repayment period 84, and for two-wheeler, we can remember just ulta. So it will be 48 months. So maximum 48 months we can give two-wheeler loan. Another thing, friends, car loan we can give for used car also, but vehicle loan we cannot give for used two-wheeler. Two-wheeler loan we cannot give for used two-wheelers. What is the maximum period of extension of time permitted for completion of course if the student is not able to complete the course within the scheduled time? So in case of education loan, if the student is not able to complete the course within the scheduled time, we can give extension period up to 2 years. Permitted holiday period under IBCLS. So under IBCLS or most of the clean loan we are not allowing any holiday period. So here also in this case IBCLS there won't be any holiday period. What is the maximum repayment period for IBCLS? The options are maximum up to 84 months subject to closure of the loan 3 months prior to superannuation. Second is maximum up to 84 months subject to closure of the loan 6 months prior to superannuation. Third is maximum up to 60 months subject to closure of the loan 3 months prior to superannuation. And the last one is maximum up to 60 months subject to closure of loan 6 months prior to superannuation. So here, whenever we are sanctioning salary loan, only thing we have to see, we can give repayment maximum up to 84 months. Only thing is 3 months prior to superannuation or retirement, the repayment should be completed, means loan should be closed. What is the minimum service experience to avail loan for purchasing four-wheeler under IB vehicle loan scheme? Here friends, for purchasing either IB four-wheeler or two-wheeler, we are asking experience of 2 years, service experience of 2 years. So here, if we are getting question even for four-wheeler and two-wheeler, we should not be confused and we can give the answer as 2 years experience is required. What is the minimum service experience to avail loan for purchasing two-wheeler under IB vehicle loan scheme for other category? Just now we have discussed, friend, even for two-wheeler and four-wheeler, we can need the experience from the borrower or experience of the borrower, minimum service experience of 2 years. What is the minimum monthly income for NRIs to avail loan for purchase of four-wheeler under IB vehicle loan scheme? So NRI has to maintain minimum monthly income should be 40,000 and above. And for a resident Indian, the monthly income should be 25,000 and above. What is the minimum residual contract for NRI to avail loan for purchase of four-wheeler under IB vehicle loan scheme? So if an NRI wants to purchase four-wheeler under IB vehicle loan scheme, then the residual contract for NRI should be 3 years and above. What is the maximum loan amount for purchase of used two-wheeler? Just now we have discussed, friend, for purchase of used four-wheeler we are sanctioning loan, and that is maximum up to 3 crore we are sanctioning, and all the other criteria are same like a new vehicle loan. Only thing is that valuation part is different, and for used two-wheeler we are not sanctioning any loan. So here option has been given, no loan can be granted for used two-wheeler. Then what is the minimum gross monthly income of salaried class to avail loan for purchase of four-wheeler under IB vehicle loan scheme? Here under IB vehicle loan scheme, the this minimum monthly gross income of salaried class is 25,000. What is the minimum gross monthly income of pensioners to avail loan for purchase of four-wheeler? If pensioners want to purchase, that minimum income should be 20,000. So here what we have seen, we will just repeat. For if NRI wants four-wheeler loan, their minimum income should be 40,000. If a salaried people wants to avail vehicle loan, their income should be 25,000. If a pensioner wants to avail four-wheeler loan, the income should be 20,000 and above. Then what is the minimum gross monthly income of the professional and self-employed businessman to avail loan for purchase of four-wheeler under IB vehicle loan scheme? So this is for professional and self-employed or businessman. So here gross annual income of rupees 3 lakh and above, if it is there, they are eligible to avail vehicle loan under IB vehicle loan scheme. What is the minimum gross monthly income of pensioners to avail loan for purchase of two-wheeler under IV vehicle loan scheme? Here friends, I want to add it, even a salaried class, if they want to avail the two-wheeler loan, either a salaried class or pensioners, the minimum income should be 10,000. So here the option is 10,000. Then what is the maximum loan ceiling for purchase of two-wheeler? How much loan they can it can be sanctioned. So if it is coming in branch power, branch can sanction up to 10 lakh and zonal office. So ZLCC has been given power up to 20 lakh. So maximum loan for purchasing of two-wheeler can be sanctioned up to 20 lakh. What is the maximum loan ceiling for purchase of four-wheeler? Just now we have discussed. So we can give loan up to 5 crore for purchase of four-wheeler. What is the quantum of loan under IB loan against sovereign gold bonds? We all have sold sovereign gold bonds and now customers are approaching to avail this loan. So how much we can sanction the loan? Here the answer is 70% of the average market price of 24 karat gold. So 70% of average market price of 24 karat gold can be sanctioned for SGB gold loan. What is the minimum loan amount that can be sanctioned under IB loan against sovereign gold bond? So here the minimum amount is 25,000. What is the maximum loan amount that can be sanctioned under IB loan against sovereign gold bond? So in sovereign gold bond, we can sanction any amount. There is no cap for that. But we have to see the security, that is 70% only of market value for 24 karat gold only we can sanction. Then what will be the repayment terms for a loan sanctioned under IB loan against sovereign gold bond? Here friends, we are sanctioning this loan as a demand loan. So demand loan, the repayment period will be bullet repayment along with interest at the end of the term. Then what is the minimum and maximum loan amount which can be sanctioned under IND mortgage scheme? So under IND mortgage scheme, the minimum loan amount we are sanctioning 5 lakh and maximum we can sanction 25 crore. What is the minimum entry age for IND mortgage loan? The minimum entry for under IND mortgage scheme is again 18 years. What is the exit age for salaried person under IND mortgage scheme? Exit age is 60 years or date of retirement, whichever is earlier. What is the exit age for pensioners under IND mortgage scheme? Here, pensioners can avail this loan or repay this loan up to 70 years. Then what is the minimum monthly gross income for salaried person under IND mortgage scheme? If a salaried person wants to avail the loan, the monthly income should be 25,000. What is the minimum monthly gross income of other category under IND mortgage scheme? So they should have annual taxable income of 3 lakh and above, then they will be able to avail this loan under IND mortgage scheme. What is the minimum quantum of finance for salaried person under IND mortgage loan? Here friends, I want to write that minimum loan under IND mortgage scheme for any type of customer is 5 crore. So minimum amount here will be 5 crore only, 5 lakh only. It is 5 lakh. Then what is the minimum quantum of finance for business class? Again, I have told for any class, any type of customer, the minimum loan amount is 5 lakh. So here also for business class firm companies can avail minimum limit of 5 lakh. Then what is the maximum quantum of finance for salaried person under IND mortgage loan? Here we have to be careful when they are putting the property, geographical position of the property. So here if the property is situated in tier 1 or tier 2 center, then what will be the quantum? Then the quantum will be 2 crore for salaried person. And next question we can see, what is the maximum quantum of finance for salaried person under the mortgage loan if the property is situated in other than tier 1 or tier 2 center? If it is situated in other than tier 1 or tier 2 center, then we can go up to 1 crore. So here what we have seen, if the property is in tier 1 or tier 2 city for salaried people, we can go up to 2 crore. And if the property is other than tier 1 and tier 2 city, we can go up to 1 crore. What is the minimum age to avail loan against NSC, Kishan Vikas Patra, LIC policy or RBI bond? So the minimum age should be 18 years again. What is the maximum amount which can be sanctioned as OD under loan against NSC, KVP, LIC policy? Again friends, here there is a no upper limit to sanction the loan under LIC policy, RBI bond, NSC or Kisan Vikas Patra. What is the margin for an individual under loan against NSC, KVP, LIC policy? The margin has been reduced now from 25% to 20%. What is the maximum repayment period for loan against again NSC, KVP under loan against NSC, KVP, LIC policy, RBI bond? So here the maximum repayment can be given 5 years or maturity of the respective bond, whichever is earlier. That will be the repayment of the loan. Then what is the minimum age to avail loan against deposit? So any adult can avail loan against deposit. So age will be 18 years. What will be applicable rate of interest for loan against third party deposit under loan against deposit scheme? So LOD we are not giving on the basis of deposit rate. Here we are giving on fixed rate, and that will be 10.80%. What is the maximum repayment period under IB Home Enrich scheme? This is Enrich scheme. We are giving loan to the customer and against the liquid security, even our this LIC policy or even our FD and all, we are giving loan. So that product is Home Loan Enrich, and in Home Loan Enrich maximum 10 years repayment we are giving and 70 years of age of the borrower, whichever is earlier. In this scheme, the customer is eligible to avail the tax benefit up to 30,000 per financial year. What is the purpose for IB Home Loan, IB Home Improve scheme? So the purpose of Home Improve scheme is it is being given for purchasing of furniture and fixture item, including solar system they can purchase and install. So the option given on A is purchase of household furniture and fixture item including solar system. That will be the answer for IB Home Improve. What is the minimum net take home pay if gross annual income of the proponent individually or jointly is up to 15 lakh under IB Home Loan schemes? Now here two type of take home pay criteria has been introduced. So if the income is up to 15 lakh, the old criteria, old take home pay criteria we have to fulfill. That is after deducting all the EMI including proposed loan EMI, then NTHP should not be less than 40%. This is the criteria if the income is up to 15 lakh, even for jointly or singly. What is the minimum net take home pay if the gross annual income of the proponents exceeding 15 lakh? So if it is exceeding 15 lakh, then the take home pay should be including all the EMI plus proposed EMI. After paying all these things, EMI, it should be 50,000 and above. Then we can give this loan. So only these two criteria we should not be confused and we will be in a position to answer. Then payment to DSA commission will be made on disbursement of what percentage of the sanctioned loan amount? So DSA we are paying if the this construction is on stage wise, then we are giving only after disbursement of 20% of loan. If loan 20% amount has been disbursed, then we can go for making payment of DSA commission. For housing loan, regular employee of central government, state government, PSU government or government aided educational institution with salary statement from the existing employer for at least how many months required? Now it is required for only 3 months. For housing loan for regular employee of MNC reputed company externally rated BBB or above with salary statement from the existing employer for at least previous 3 months subject to the condition that they have total experience. So we need the minimum experience of 2 years. Then what is the maximum ceiling amount for housing loan for purchase? So friends, there is no maximum limit. Maximum amount will be as per the delegated power of the respective sanctioning authority. For home loan under CRE exposure, what could be the maximum loan tenure? For CRE exposure, we can give maximum period 25 years. And if we are giving resident Indian home loan, we can give maximum 20 years. For home loan for purchase of plot and construction of house thereof, flat under construction by builder, what could be the maximum holiday period given? Here we can see if here condition is home loan for purchase of plot and construction thereof. If purchase of plot and construction thereof, then we can give for 24 months. If purchase property, this plot is already available, they can give, then we can give 18 months holiday period. And if there is a big project where construction is being done by a big builder, then the holiday period can be given up to 36 months. But in this case, they want to purchase and construct their own, then we can give holiday period up to 24 months. Here for IB home loan to NRI, what will be the maximum entry age of the borrower? We have just discussed. It is 50 years and ZLCC is having power to extend it up to 60 years. For loan for purchase of house site plot by resident NRI, what could be the maximum loan amount at urban center? So at urban center, we can go maximum 606 crore, and in metro center, we can go up to 12 crore. For elite category home loan vehicle loan customer, what will be the minimum CIBIL score? So for elite category, the minimum CIBIL score is 726. What is the maximum vehicle loan amount for new car under IV vehicle loan scheme? This we have already discussed. This is 5 crore. What is the minimum loan limit under ODAD? This is minimum loan amount. So that is minimum 1000 rupees we have to avail it. Maximum loan limit under OD against the term deposit. So OD against the term deposit, there is a no limit. We can sanction any of the amount. Minimum limit under secured credit card. So secured credit card, friends, we are giving 25,000 minimum and maximum we are giving 10 lakh. Prior permission of whom to be obtained for closure of home loan account through single credit of or more than 25 lakh and to release the security. New guideline has come. If the credit, a single credit of more than 25 lakh has come, then to release the property, we have to take the permission from ZLSCC. So this was for our retail part. Now we are going to discuss about MSME. But moving on screen. Moving on screen. Okay. So now we are going to discuss about MSME. So MSME, first we will see, sometime we are getting few questions from the definition of MSME, which has been changed from with effect from 1st July 2020. Here, type of enterprises, categories are there: micro enterprises, small enterprises, and medium enterprises. Investment in plant and machinery or equipment we have to see, and then turnover, that should be, it should not exceed the turnover. So in micro enterprises, friends, the investment in plant and machinery, it should be 1, and here we can remember that everything has been given, whatever the investment in plant and machinery is there, 5 times of that should be the turnover. So here in micro enterprises, the investment in plant and machinery is 1 crore. So turnover should be 5 crore. Up to 5 crore, then it will come in micro enterprises. Then in second category, a small enterprises is there. So investment in plant and machinery should be 10 crore and turnover should be 50 crore. The third type is medium enterprises. Then investment in plant and machinery should be 50 crore and turnover should be 250 crore. Sometimes they'll be giving question from this. So we have covered this. Then composite criteria. So investment in machines and annual turnover, both the criteria need to be satisfied. If an enterprise crosses selling in any one criteria, it will be placed in the next higher category. So if the suppose turnover has exceeded, then they will be placed in next higher category. But an enterprise will be placed in lower category only when it goes below the ceiling in both the criteria. All the units with goods and service tax identification number listed against the same permanent account number to be treated as one entrepreneur. Here we should see all the unit with good and service tax identification number listed against the same permanent account number. If with the same PAN number they are having different activity, they'll be treated as one enterprise. Then existing unit, how we are calculating this? On written down value. So as at the date of balance sheet, that is at the end of financial year and not cost of acquisition or original price. So we have to see at the time when we are going to assess it, that the date, that period valuation we will take on the basis of written down value. Then new enterprises, prior ITR is not available. If prior ITR is available, well and good. If prior ITR is not available, value of investment in machine equipment, that will be based on self-declaration on the promoter of the enterprises. This relaxation will be valid up to 31st March of the financial year when he files the first ITR. Purchase invoice value, whether purchase first hand or second hand, excluding GST on self-disclosure basis, that can be considered. Here turnover, export of goods or services or both, that has to be excluded for turnover. Turnover to be linked to the Income Tax Act or the Central Goods and Service Tax Service Act and the GSTN. Turnover reported in GSTN return during the previous year to be taken into account for the purpose of classification. So classification as per Udyam registration, that can be taken. Then registration of MSME. Registration in Udyam registration portal has become mandatory with effect from July 1st, 2020 after the new definition has come. Existing enterprises registered with Entrepreneur Memorandum and Udyog Aadhaar Memorandum, they should register in Udyam registration portal. So here there is no fee for filing Udyam registration. Our permanent registration number will be given after registration, and after completion of the process of registration, a certificate is being issued online and there is no need for renewal of registration. So this is one time and that is also free of cost. So here time norms for disposal of credit applications. From this we are getting friends sometime questions. So here MSME sector we have to see if the loan up to 5 lakh is there, then it has to be disposed of within 2 weeks. From 5 lakh to 25 lakh is there, it has to be disposed of within 3 weeks, and any loan above 25 lakh, the application has to be disposed within 6 weeks. That part we have to remember. Then JDD rated accounts. So JDD, we have to promote JDD. So to promote zero defect and zero effect manufacturing amongst MSME, concession in processing charge and final rate of interest are extended for this JDD rated MSME loan accounts. So here 3 types of category is there. One is platinum, then diamond, and then gold. Rate of concession, everywhere in all the 3 variants we are giving 0.25%, and processing charge concession is available 50% for platinum category, 35% for diamond category, and 25% for gold category account. Then ISO incentives is also being given by the bank. Our bank has put in place a policy to give 10,000 as one-time incentive to our MSME customer for obtaining ISO certification. In addition to obtaining ISO certification, certain key financial performance indicators have also to be taken into the account, and out of 100 marks, they have to get 60 marks for the qualification to qualify in this category. Then Pradhan Mantri, this Mudra Yojana, this is to fund to unfunded to bring such enterprises to the formal financial system and extending affordable credit. Here, three types of loan we are giving, three categories are there. Maximum we are giving 10 lakh, up to 50 lakh we are giving under SISU, 50 lakh to under 50,000 we are giving under SISU, and 50,000 to 5 lakh we are giving under Kishore, and 5 lakh to 10 lakh we are giving under Tarun. Then Stand Up India scheme. So banks loan over 10 lakh and up to 100 lakh. That is, so sometimes we are getting question how much maximum amount we can give under Stand Up India. Under Stand Up India, we can give up to from 10 lakh to 1 crore. Whom we are giving? Who will be the target customer under Stand Up India? SC, ST, women entrepreneur for setting up greenfield enterprises without any collateral security or third party guarantee. If they want to establish or they want to start a new business, for them we are giving. Manufacturing, service and trading, all the sector we are giving. Non-individual enterprises, if suppose they are having any organization or they have create an enterprises, then we have to see 50% of the shareholding should be by SC, ST or women entrepreneur. Contactless banking platform for MSME. This we have seen 59minutes.com. There is a portal where customers are coming, customers are giving in principle sanction in 59 minutes. Access database, GST, IT department, bank statement, real-time basis, it is being calculated. Here only thing is TAT for application with CGTMSE coverage. From here, sometime we are getting questions. So TAT, turnaround time for application with CGTMSE coverage, 7 days from the date of getting in principle application. That turnaround time we have to maintain. And TAT for application with collateral security as per MSE code, that has to be given. So any loan we are receiving under CGTMSE coverage and through this portal, it has to be sanctioned within 7 days. And one more thing is there, sometime we are getting question, what is the maximum amount sanctioned under this portal? So maximum loan amount can be sanctioned up to 5 crore under 59minutes.com. Then collateral free loan. So collateral free loan we are giving up to 10 lakh, that is mandatory as per RBI guideline. We should not take any collateral security. Then now as per CGTMSE new guideline, we can give collateral free loan up to 500 lakh. 5 crore loan can be given. Educational institutions are also now covered under CGTMSE. So bank is having another option. If the bank want to give more than 5 crore a loan, then up to 5 crore it can be covered in CGTMSE. So additional part they can do, they can take the additional collateral security. So that is called hybrid security. So hybrid security is also available in CGTMSE coverage. Now target under MSE. There should be minimum 20% year-on-year growth in credit to micro and small enterprises. So this is the RBI guideline and we are getting sometime question. Then 10% annual growth in the number of micro enterprises accounts. So accounts should be increased 10 years year-on-year. And then 60% of total lending to MSE sector as on preceding March 31st, that should go to micro entrepreneur. And here, a target of 7.5% of ANBC or credit equivalent, that target we have to achieve it. Now we are going on question answer section. Mudra loan above dash to dash will be termed as Kishore. So Kishore we can see 50,000 to 5 lakh will be Kishore, up to 50,000 will be Shishu, and 5 lakh to 10 lakh will be coming under Tarun category. Mudra card can be used to operate what percentage of working capital limit? In Mudra card, we are giving 20% amount of working capital limit. Here margin requirement for online Sishu Mudra, we have discussed for online Sishu Mudra, there is a no margin. What is the periodicity for obtention of a stock in a statement for secured OD up to 50 lakh under Tradewell scheme? Here we can see friends, under Tradewell scheme, for any amount, even SOD or OCC, we have to update, we have to obtain a stock statement once in a quarter. So here answer is once in a quarter. Again, what is the periodicity for obtention of a stock statement for secured OD above 50 lakh under Tradewell scheme? Again, once in a quarter. Then what is the periodicity of obtention of stock statement for OCC? Under OCC also same thing is there. So here we should not get confused. Once in a quarter we have to obtain the stock statement. The CGTMSE would provide cover for credit facility. Now it is up to 5 crore. It has been increased from 2 crore to 5 crore. Scoring model is done for MSME with exposure. So below 1 crore we are doing scoring model only, and above 1 crore we are going for RAM rating. As per RBI guideline, there should be minimum dash year-on-year growth in credit to micro and small enterprises. Just now we have seen when we started MSME slide that 20% year-on-year growth should be there, and in MSME, and that is the guideline given by RBI. As per RBI guideline, what will be the target for this micro sector for ANBC or credit equivalent amount? So that should be the 7.5%. A composite loan up to what amount can be sanctioned to enable the entrepreneur in micro and small enterprises sector to avail of their working capital and term loan requirement through single window. So through single window, friends, we are providing up to 1 crore of loan. Credit Guarantee Fund for Micro Unit CGFMU is managed and operated by whom? So CGFMU is being managed and operated by NCGTC. Again, Credit Guarantee Fund for Stand Up India, that is CGSSI, is managed and operated by. So CGSSI is also being managed and operated by NCGTC only. So for CGFMU and CGSSI, they are being managed and operated by NCGTC. Then margin requirement for MSME sector for OCC and OD book debt. So margin has been specified 20% for OCC and OD book debt. What is the minimum net working capital requirement under second method of MPVF? So from this option we can see under this second method of MPVF, the 20% of total current asset should be the margin. The TREDS, which undertakes clearing and settlement activities, would be governed by the regulatory framework put in place by the Reserve Bank of India under which act? So this TREDS, friends, working under Payment and Settlement Act 2007. So whenever we are getting this question, we can answer as Payment and Settlement Act 2007. Then factoring transactions take place through which platform? So this TREDS platform, only these factoring transactions are taking place. So here answer will be TREDS. Then question is, eligible participants in TREDS platforms are. So in TREDS platform, seller, buyer, financiers. So all are eligible participants. They all are taking part. So all the above should be the answer. Then what is net working capital? So net working capital, this will be any surplus of long-term sources over long-term uses will be the net working capital. In case of account with annual turnover more than what amount, audited financial statement to be submitted. So in any account annual turnover more than 1 crore, the customer has to submit the audited financial statement. Maximum loan that can be sanctioned under MSME vehicle. In MSME vehicle, we are sanctioning maximum loan up to 2 crore only. Quantum of term loan under my own shop in case of firm and company. So how much amount we can sanction? Here it has been given 5 times of the cash profit of immediate preceding year, or 4 times of average cash profit for last 3 years, higher of A or B, not related to cash profit. So here we are sanctioning higher of A and B, higher of 5 times of the cash profit of immediate preceding years, or 4 times of average cash profit for last 3 years. Then MAPC will be headed by, at least by, so we all know MAPC is being headed by either CM or AGM. Which one of the following is a measure of debt service capacity of a firm? Here we can see current ratio, quick ratio, interest coverage ratio, and debtors turnover. Here interest coverage ratio only can be the debt service capacity of a firm. From this given option, interest coverage ratio is the debt service capacity of a firm. A medium enterprises in an enterprises where investment in plant and machinery and turnover should not exceed. Just now we have discussed micro, small and medium enterprises. Micro we have seen 1.5, small we have seen 1050, and this medium enterprises we have seen 50 and 250. Verification is required from any one of the 4 database credit information companies in case of loan amount of, so loan amount less than 50 lakh or up to 50 lakh we are getting 1 CIC report, more than 50 lakh we are taking 2 CIC report. Mudra stands for, so here Mudra is Micro Unit Development and Refinance Agency. Margin requirement for Mudra loan, Tarun. For Tarun, the margin requirement will be 15%. Time frame for disposal of MSME credit proposal beyond 5 lakh and up to 25 lakh. So just friends, we have seen if amount up to 5 lakh, it can be disposed of within 2 weeks, and if the amount is 5 lakh to 25 lakh, it has to be disposed of within 3 weeks. Margin for Weaver Mudra scheme above 50 lakh to, above 50,000 to 2 lakh. So here margin for Weaver Mudra scheme, that should be 20% of the project cost. Margin for IB Mudra TVS scheme, this margin is 15%. Maximum loan quantum under IB Tradewell is rupees dash for SOD facility. So in any product, if we are giving SOD facility, friends, maximum we can go for 2 crore. So here also we can go for 2 crore. Under IB Doctor Plus for fresh passed out students, maximum exposure is rupees. So here for passed out students, we can go maximum up to 2 crore. Quantum of term loan under my own shop in case of individual or professionals, how much we can give. So here option has been given 36 times monthly gross income or 60 times monthly net income, higher of 1 or 2. So in this case, in case of individual and professionals, we can go higher of 1 or 2, 1 and 2. Margin for secured OD under IB contractor on EM property. Whenever we are giving loan under IB contractor scheme and the scheme under SOD, we are taking margin 50%. So half of the amount only we are sanctioned. Then what is the maximum loan amount that can be sanctioned under my own shop? So my own shop, we can go up to 10 crore. Which among the following is correct regarding IB contractor? Here options we are getting: contractors in the line of business for at least 3 years, should have made net profit for last 2 years, subcontractors are also eligible for finance, and all are correct. Here all the options given are correct. A small enterprises in an enterprises where investment in plant and machinery and turnover should not exceed. So just we have seen a small, it should be 10 and 50. A micro enterprises is an enterprises where investment in plant and machinery and turnover should not exceed. So for micro it should be 1 crore and 5 crore. Which of the following is a long-term liability? Here we can see current assets, revenue and expenditure. They are not long-term liability. Here term loan has been given. So term loan will be the long-term liability. Then exposure maximum under IB Mudra TVS scheme. So as per scheme, we can go up to 2 lakh under IB Mudra TVS King scheme. The extent of CGTMSE coverage is -% of credit facility of rupees 50 lakh for micro enterprises. Here we can see, friends, for micro enterprises, we can go 85% up to 5 lakh. We can go up to 85%. Only 2 slabs are there for micro. If the amount is up to 5 lakh, it will be 85%. If amount is more than 5 lakh, it will be 75%. And it will be for a specialized category, it will be 80% up to 50 lakh. The extent of CGTMSE coverage is -% of credit facility to women entrepreneur for loan above 5 lakh to 50 lakh. For loan for women entrepreneur, it is 85%. Purpose of IB Doctor Plus. What is the purpose of IB Doctor Plus? To set up clinic clinic cum residence, nursing home, hospital. They can purchase machinery, they can purchase equipment for hospital. So all are correct only. Maximum loan amount to be sanctioned under Tradewell term loan. So under Tradewell term loan, we can give maximum up to 5 crore. Borrower should be advised that dash percent per annum over the applicable rate will be charged for the delay in submission of a stock statement. So minimum 1% we have to charge if there is a delay in submission of a stock statement. Minimum amount of loan to be sanctioned under IB Doctor Plus, minimum loan we have to sanction 1 lakh. What is the frame for disposal of loan application for loan up to 5 lakh? Up to 5 lakh, we have to dispose the application within 2 weeks. Current ratio benchmark for fresh sanction of micro, small and medium enterprises. As per our credit policy, the benchmark is 1.1. Debt equity ratio benchmark for micro, small and medium enterprises as per credit policy, that is 4:1. Then who is eligible for Stand Up India scheme? This we have seen, all SC, ST and women enterprises, they are eligible to avail the loan under Stand Up India scheme. Applicable method of working capital finance for seasonal institution, seasonal industry, construction, contractor, software. So wherever seasonal industries are there, we are following cash budget method. In working capital finance, end use of fund is done through, how we are doing end use of fund? So we are doing regular visit to the assisted unit, inspecting the security, periodical scrutiny we are doing, conducting a stock audit. So all these things we have to do. So all the above should be the answer. Then minimum loan amount that can be sanctioned under Tradewell scheme. So minimum loan we can sanction 10 lakh under Tradewell scheme. Method of working capital assessment that is used for assessing working capital under IB Doctor Plus. So IB Doctor Plus, this is also like seasonal income we are getting. So we are following cash budget method. In case of accounts with credit facility more than what amount audited financial statement. So if the credit facility is more than 20 lakh, we should ask ABS from the customer. Maximum MSME loan that can be classified for priority. For classification under priority, there is no ceiling. RAM rating is must for fund-based and non-fund-based exposure of limit. If any limit above 1 crore is there, we should go for RAM rating. Purpose of Ind MSME E-Vahan product. What is the purpose? For any purpose, purchasing of 2-wheeler, 3-wheeler and 4-wheeler for business purpose. If it is being for business purpose, it can be purchased. So all the above. Maximum loan that can be sanctioned under Ind SME E-Vahan. So there is no ceiling. Any amount can be sanctioned under SME E-Vahan. Administrative approval for sanction of loan under Mudra scheme. If we are sanctioning any loan above 1 lakh under Mudra scheme, we have to take administrative clearance from the zonal office or administrative approval from the zonal office. The person seeking a loan facility under IB My Own Shop scheme should have been in the activity for so minimum experience they are talking about, they should have 3 years experience to avail the loan under My Own Shop. Then while funding capital expenditure to fund unforeseen increase in capital expenditure for MSCs, what may be sanctioned? So in case of this situation, we are sanctioning standby credit facility to the MSC unit. Under credit flow to MSCs, dash percentage of the working capital limit may be sanctioned as standby credit facility to fund periodic capital expenditure. Here we are sanctioning 25% of the working capital limit as a standby credit facility. CGTMSC has introduced dash product allowing guarantee cover for the portion of credit facility not covered by collateral security. That we have seen under hybrid security, it can be covered. Now monitoring of advance in MSME will include unit factory visit, stock statement, end-use verification, all these things we have to do under monitoring of the advance. So this was from our part, friends. We wish all the best to all the aspirants who is appearing in this examination. Thank you for attending the session.
check now. So that's it.
Let's start. Okay. Good afternoon, friends. I am Ashish Goyal, Chief Manager, Faculty Image, and the topic that I have been given is recovery and NPA. Friends, I have prepared this material for you from the policy, which is NPA Management Policy 2023 and 24. So let's start. The contents of this presentation will be why the NPA recovery is important, what are the various tools and strategies of recovery that bank has adopted, and for better understanding from the point of view of the exam, I have prepared it in the form of questionnaires. So we shall be going through it. So let's start. Why is NPA recovery important? Friends, this is a very important question because an NPA account, it stops earning income to the bank with immediate effect. Because it stops earning income for the bank, it directly impacts the profitability of the bank. Not only this, but bank has to make huge provisions out of the income which is earned by the other performing assets of the bank. On top of it, for recovering the amount that is already stuck in these NPA accounts, bank has to incur huge expenses for recovering that amount, which is in the form of legal expenses, which is in the form of publications. Then last but not the least, bank has to make a huge amount of legal expenses, which we are incurring in court of law, DRTs, DRATs, NCLT, NCLAT, and civil suits. So friends, what are the tools and strategies which are being used by the bank for recovery? Various tools and strategies are as follows. Upgradation. This strategy we adopt in the first year of the account becoming NPA, because at that time we have the best time that we can upgrade the account. Cash recovery. Any recovery which we get out of the OTS, settlement, compromise, or sale of the property, we call it cash recovery. We also explore if there is an opportunity for refacement or restructuring or rehabilitation of the account. Then SARFAESI action, it is a statute that provides us the authority to go for recovery. Suit filing, compromise settlement. We also take the accounts to Lok Adalats, CIRP, PIRP, non-cooperative borrower, willful default study, fraud examination, and lookout circular. So friends, now I shall start with the questionnaires which shall be helpful for you to understand the recovery and its aspects in a better manner. So the first of it, which of these is not a method of recovery? OTS, SARFAESI, CIRP, or willful default? Friends, willful default is not a method of recovery. Friends, it is just a strategy through which we make or we take such actions which will force the borrower to deposit the money to the bank. So it is just a strategy of recovery, it is not a method of recovery. OTS in respect of self-liquidating securities can be considered by whenever there is an occasion where there are self-liquidating securities like FDRs or LIC policies. Then if there is any fraud or any other thing like that and recovery is not possible in those accounts, in that case the OTS in those securities can be considered only by the management committee of the board. This is the latest update in the recovery policy of 23-24. Who is the authority to waive off the payment of delayed period interest in case of an OTS? Friends, the answer is it cannot be waived. There is no authority in the bank according to the policy that the OTS delayed period interest can be waived. What is the maximum right of powers of scale 1, 2 and 3 officers in OTS involving real balance greater than rupees 10 lakhs? Friends, according to this policy, there is no power to scale 1, 2 and 3 to grant any write-off for the accounts having real balances greater than rupees 10 lakhs. OTS can be considered in SARFAESI eligible NPA accounts without going for e-auction only if the proposed OTS amount is higher of present realizable sale value of charged securities, primary and collateral. In case of more than one EVR, highest realizable sale value should be considered. Present book balance of the NPA accounts, both A and B, only B. Friends, the first two, A and B, is the answer. This point is included in the recovery management policy for 23-24. This is the latest update in this policy. So in the accounts, without going for sale of the account, if the first two conditions are satisfied, we can go for OTS. Now, where should any recovery made in any NPA account be first appropriated? Friends, the answer to this question is option A. First of all, any recovery that is recovered in any NPA account will be adjusted against the book balance, which is principal balance. If anything is remaining after that, it will be adjusted against the unpaid legal expenses, which we call as MLE, Memorandum of Legal Expenses. After that, the amount remaining shall be adjusted to unpaid other expenses, which we refer to as MOX, Memorandum of Other Expenses. Then this new clause is added, which is unpaid charges. Further, remaining amount shall be updated in unpaid charges. And last but not the least, if the amount is still remaining, then we will adjust it against the unpaid interest, which we know by the name of MOI. What is the threshold limit for deduction of TDS by the auction purchaser in respect of sale of immovable property under SARFAESI Act 2002? Friends, the option is A. As per the Income Tax Act, the limit is set by 50 lakhs. Any property sale or consideration happening above 50 lakhs, then the purchaser has to deduct TDS. TDS on sale of immovable property is deductible under which section of the Income Tax Act? Answer is B. Section 194IA of the Income Tax Act 1961. All the authorized officers to ensure that while the payment of the rest of the 75% of the amount is being made by the auction purchaser, if he is purchasing any property above 50 lakhs, then he has to ensure that the applicable rate of TDS has been deducted and deposited by the purchaser in the property holders or in the property owner's PAN. In this case, the policy stipulates very clearly that the TDS has to be deposited against the PAN of the property owner. In this case, the mortgager of the property with the bank shall be the owner, and he against his PAN, this TDS will be deposited. What is the full form of SEC? SARFAESI Enforcement Committee, Security Enforcement Committee, Security Entrustment Committee, Securitization Entrustment Committee. Friends, the answer is B, which is Security Enforcement Committee, which is constituted at various levels from ZO, LCB, from ZO to the SAM Large and to FGMO. Who is the chairman of FGM Security Enforcement Committee? Friends, the answer is B. He is the Deputy General Manager of the FGMO. If he is not able to attend the meeting for certain reasons, then in his absence only the Field General Manager will act as the chairman of the FGM SEC. Who is empowered for empanelment of recovery agents for branches? Whenever there is an empanelment of recovery agents in the bank, then for branches which are working under the zonal offices, then for them the ZLCC is authorized to impanel the recovery agents. who is empowered to allot accounts to SAM large branches to recovery agents. Friends, the Security Enforcement Committee constituted at SAM large branches is authorized to allot the accounts of SAM large branches to its recovery agents. On admission of an account to NCLT, the sale under SARFAESI can be done within. Friends, the option is B, it cannot be done. Please understand, this is very crucial, even from the point of view of normal functioning in the branches, that while a corporate account is admitted in the NCLT, as soon as the admission is declared, there becomes a moratorium on all other legal actions like suit filed in DRT or any SARFAESI action. Those actions will cease. So this point, please be noted. Which of the following is considered as cash recovery? Recovery in a compromised settled accounts, recovery from sale of charged assets, cash recovery in fully written off accounts, or you can say AUCA, AUC, account under collection. Friends, the answer is D. Any recovery made through any of the above modes will be considered a cash recovery. The demand notice for recovery is issued under which section of the SARFAESI Act 2002? Friends, we usually call it demand note 13.2 notice. So the answer is A. It is issued under section 13 and subsection 2 of the Act, that is 13.2. What is the time limit given for depositing the entire sum due after issuance of demand notice under SARFAESI Act 2002? Friends, as per the stipulation of the Act, an authorized officer while issuing a demand notice can give maximum of 60 days for depositing the entire overdue sum under this Act. The authorized officer AO only is permitted to initiate SARFAESI action in eligible NPA accounts. Who can be appointed as authorized officer for SARFAESI action? Friends, in this case, the answer is C, all chief managers and above. Friends, it is stipulated in the recovery management policy of the bank that all chief managers and above can function as an authorized officer at any given time whenever required. In this case, I want to tell you that the chief managers who are posted in the branch will automatically function as authorized officers for the accounts of their branch. In case of the accounts of other branches which are not headed by chief manager and above, for those accounts, the Security Enforcement Committee at the zonal office will allot or assign those accounts which are SARFAESI eligible to the authorized officers of other branches or the zonal office chief managers posted wherever. Under which section of SARFAESI Act can an authorized officer take possession of a charged immovable asset? Friends, the answer is D. We usually call it 13.4, and under this Act it is defined under section 13 and subsection 4 of the Act. There is a detailed guideline and circular by the bank in this regard for clear understanding of the field functionaries, in which the detailed SOP and timeline is also given for enforcing the SARFAESI action. I request all of you to kindly go through that also for better understanding of SARFAESI action and its related timelines. After taking possession of the immovable property under SARFAESI Act, the authorized officer will put the property on sale through e-auction mode and issue a sale certificate. What will be the notice time given for conducting such first auction? Friends, the answer is A, which is 30 days. While it is 30 days, it has to be clear 30 days, because when we issue a sales notice for putting any property on e-auction, at that time there is a time which is taken in publication of the notice, in sending the notice through registered acknowledged due to the borrowers and all the stakeholders in the account. So taking that time into account, we generally give clear 30 days time for sale, Generally, if we have to put it on sale after 30 days from today, then we will put it on sale for say 29th of February, or we will put it somewhere in March or first week of March, so that the clear 30 days time is given. After initiation of SARFAESI action, if any objection is received from the borrower, what is the timeline for replying to the same? Friends, it is very important to understand that whenever an authorized officer has initiated a SARFAESI action, he has issued the demand notice under section 13(2) of the Act, then there is a chance that the aggrieved borrower or his guarantor may come to the bank for submitting any query or question related to the demand notice. In that case, the authorized officer has to treat such a objection as objection under section 13(3)(a), and the reply to the same has to be given within 15 days of receipt of such a objection. So this is very important. If the authorized officer fails to reply to such a objection of the borrower or guarantor or any of the stakeholders of the account, in that case the SARFAESI action will have to be initiated all over again. So that will be a loss of time for the bank. Who is the competent authority for fixing the reserve price of a property? Friends, the answer is D. The Security Enforcement Committee at various levels only is authorized to fix the reserve price of a property, which are at various places of zonal office. Zonal office is responsible for fixing the reserve price of the branches under its command. Then the Security Enforcement Committee at SAM large branches. For SAM large branches, the SEC committee at the SAM large is responsible. For SAM small branches, the SEC at FGMO is responsible for fixing the reserve price. What will be the reserve price while fixing the initial reserve price for first sale? Friends, it is realizable value. The revaluation of the property is done. In that case, what is the realizable value? We put first auction on that value itself. In case of multiple valuations, the higher of the two valuations, a realizable sale value shall be taken and it will be fixed as the reserve price. Who will be the convener of the SEC at SAM large branch? Friends, this is a committee approach. Since SEC is a committee, so it has certain members and there is a convener. The convener who will call the meeting, who will request all the committee members to come and attend the meeting. He is called as the convener. In this case, the law officer or a senior manager or the manager entrusted with recovery shall be the convener of the SEC at SAM large branch. How many days notice is required for conducting resale under SARFAESI? Friends, it is clear 15 days notice. The first sale notice has to be put for 30 days, which I just told you. The second sale, if the first sale fails and the bank intends to put the property on sale once again, then a clear 15 days notice has to be given. So the answer is C, clear 15 days. Under which section of SARFAESI Act 2002, an application can be filed with Chief Judicial Magistrate or Chief Metropolitan Magistrate or the District Magistrate of respective district for taking physical possession of the property. Friends, it is under section 14 of the Act. And this process is taken immediately after taking the possession of the property, after enforcing section 13(4). If there is no physical possession at the time of taking possession, then in that case, we have to request the administrative authorities of the district to initiate or give us permission to take possession lawfully. Who is the competent authority to accord approval for refund of the sale amount to auction purchaser in case of cancellation of sale held under SARFAESI Act due to court order? Friends, there have been instances where due to the objections of the borrower or guarantors, they have filed cases in the court of law of DRT, and the court has ordered cancellation of sale. In such cases, the sale amount, full sale amount, has to be refunded to the auction purchaser. In that case, the authority for refunding the amount of sale is the SEC, which is the concerned SEC. We have just discussed about the SECs at various levels. What is the maximum amount of refund of court fee available when there is an OTS in a suit file account? Friends, the answer is A, maximum of 50%. Whenever we are going to file a suit in a court of law, we have to deposit a court fee against the amount of suit. That amount can be refunded, a partial amount of which can be got refunded if we are able to resolve the account at our end through the means of an OTS or Lok Adalat. In that case, the maximum amount refundable is 50%. If the account is only at the suit file stage, if the hearing has started, we may get 25%. And if the hearing, after hearing the RC or the decree has been issued, then there cannot be any refund. For impanelment of advocates, based on their knowledge, experience and qualification in specified areas, the applications received are classified into how many categories? Friends, bank has a comprehensive criteria for impanelment of lawyers on its panel, and they have been classified into 3 categories: category A, category B and category C, based upon their qualifications, experience and handling of the specific cases. For a category B advocate, the minimum number of years of practice experience required is, friends, the answer is B. There are 3 categories, as I told you: category A, category B and category C. For category A, the minimum number of years of experience stipulated in the policy is 15 years. For category B advocates, the minimum stipulation is between 5 to 15 years, 5 to 10 years in fact 5 to 15 years, and minimum of 10 years generally bank prefers. In case of category C advocates, it is 3 to 5 years. Who is authorized to impanel or remove the advocate on the bank's panel for the zones / branches? Friends, the answer is C. An advocate can be impaneled or removed only by FGM LCC. What is the minimum score required to be obtained by the advocates for becoming eligible for interview for impanelment on the panel of the bank in respect of category A or B? Friends, as we talked, there are 3 categories of lawyers or advocates. But before their impanelment, their scoring is done basis their experience, their knowledge, their handling of the cases, their disposals. So we have designed, the bank has designed a scorecard for the same. On that scorecard, these qualifications are put and the marking or scoring is done. In that case, for category A and B impanelment, the minimum scoring has to be obtained is 60%. For category C advocates, this scoring comes down to 50%. What is the ideal number of impaneled advocates for a city center having number of branches in the range of 11 to 25? Friends, in this case, the answer is 30. So, as stipulated in the policy, whenever we are talking about the condition or the situation of the branch, then we have to stipulate the number of advocates. The bank has stipulated from various ranges the number of advocates which are required in a particular geography. The mode of SARFAESI sale through private treaty can be adopted only after exhausting public auction on at least how many occasions? Friends, the answer is 2. When we are going for SARFAESI action, we should ensure that if the property is not saleable on the two occasions of public auction, only then we can go for private treaty or Swiss challenge method of sales under SARFAESI action. Who is empowered to accord approval for conducting SARFAESI sale through private treaty for a reserve price of up to rupees 1 crore? Friends, in this case, the answer is FGM CAC. Credit Approval Committee at FGMO is the competent authority which can provide approval for conducting sale through private treaty up to rupees 1 crore. The NCLT has jurisdiction over the matters of, friends, the answer is B, a limited liability partnership. The NCLT only is dealing in the matters of the corporates, which are the LLPs and the companies. The rest of the matters are being taken care by the DRTs and DRATs. What is the minimum amount of default for filing in NCLT? Friends, the answer is C, 100 lakhs or 1 crore rupees. Earlier it was 1 lakh rupees, but later amendments updated this amount to rupees 100 lakhs. What is the limitation for filing in NCLT? Friends, the answer is B, within 3 years from the date of default. This is the limitation for filing the suit in or application in NCLT. On appointment, the IRP shall issue a public announcement and call for claims from all the creditors. This will be done within how many days? Friends, the answer is A, within 3 days of appointment. The interim resolution professional appointed by the NCLT shall give a 3 days public announcement and will call for claims from all the creditors. The creditors in this case can be financial creditors and the operational creditors also, including the statutory creditors, which are the government bodies like income tax or the customs. The ongoing CIRP, even after admission, can be withdrawn with the approval of, friends, the answer is D, 90% voting share of the COC. When any account is admitted in the NCLT and the CIRP, the insolvency process is already on, in that case also, given certain circumstances, if the COC wants to withdraw the CIRP, in that case, the e-voting has to be at least 90%. Who is the competent authority to grant permission for filing application before NCLT for initiation of CIRP? Friends, the answer is call CCGM. What will happen to the residual balance in an account after receipt of the proceeds of implementation of resolution plan? The account shall be written off, debit to the PNL account or provision account of the bank. Friends, any account after reaching its resolution through the NCLT, whatever the balance is recovered or received through the resolution process, the bank will credit the same and the remaining amount shall be debited to the bank's profit and loss account or the provision account and it shall be written off. What is PUFE in regard to the CIRP? Friends, the PUFE stands for preferential, undervalued, fraudulent and extortionate. This is a small term which is used for the accounts which are admitted in CIRP and which are reaching the stage of resolution, but before that, this exercise has to be conducted by experts. What will be the provisioning amount in respect of accounts against which the adjudicating authority under IBC has passed a liquidation order? There can be two types of orders. One is the rehabilitation or resolution, or the other can be liquidation. Whenever there is an order of liquidation by the adjudicating authority, From the date of the order, bank has to provide 100% against any such accounts. The full form of PIRP, Pre-Packaged Insolvency Resolution Process. Friends, this PIRP was introduced in the IBC 2016 wide amendment in 2021 to the Act. Who is the e-auction service provider for conducting e-auction through e-BICRA platform? Friends, the provider is in this case MSTC Limited, Metal Scrap Trade Corporation Limited. This company is a Mini Ratna Category 1 company of the Government of India. We have, for your information, 3 other e-BICRA portal, online auction portal also. A recovery agent has to complete 100 hours of training and pass debt recovery agent examination, which is conducted by the Indian Institute of Banking and Finance. While the empanelment of recovery agents is happening, this certificate is a must. Which loans can be entrusted to BCs, SHGs and community bank coordinators for recovery, CBCs for recovery? Agri loans, education loans, MSME loans and SHG loans with balances below rupees 10 lakhs. Friends, in the policy, the NPA Management Policy 23-24, a provision has been made that we can appoint BCs or SHGs or CBCs as recovery agents and we can entrust them recovery of the accounts which are below 10 lakhs in the above categories only. This decision is taken because these people, BCs and SHGs or CBCs, they have a larger understanding of the area and they have the locational or language related, vernacular related advantage. BCs, SHGs, CBCs can be impaneled as recovery agents owing to their locational advantage. What is the fee structure proposed for effecting recoveries by them? Friends, as per the policy, any recoveries made against the accounts are entrusted to them, they are payable with a 5% of the commission. What is the full form of the term CDRS used in recovery? Friends, CDRS is nothing but the Indian Bank's model code of collection of dues and repossession of securities. It is a guideline or a direction, you can say, which gives us brief modus operandi while effecting recoveries or while taking actions as recovery officers in the bank. In the branches, we have to follow this model code. While going to the borrower, it stipulates at what times we have to go to the borrower between in the morning 7 a.m. to evening 7 and what shall be our demeanor while interacting with the borrowers. What is the maximum fee payable per account to a recovery agent? Friends, bank has capped this because in large accounts there cannot be any infinite amount of payment of commission to the recovery agents. So bank has capped it at rupees 15 lakhs. What is the frequency of valuation of charged immovable assets under SARFAESI Act? Friends, in this case, any valuation report, it cannot be older than 1 year. What is the full form of DCCO? It is known as Date of Commencement of Commercial Operations, applicable for project loans, infrastructure or non-infrastructure, and it is to be strictly mentioned in the sanction terms and conditions at the time of financial closure of any project loan. What are the main elements for classification of a borrower as willful defaulter? Friends, answer to this is mainly top 3, which is siphoning of funds, diversion of funds, and end use of funds. But the 4th point, which is intentional, deliberate, and calculated, this is on part of the borrower. It cannot be sidelined. because until and unless there is an intention which is very much deliberate and calculated on the part of the borrower, he cannot be declared as willful default, and each and every case has to be looked at in isolation with the other cases. Who is the chairman of willful default screening committee? Friends, it is the executive director who acts as the chairman of this committee. There shall be 2 senior general managers or deputy general managers who shall act as the members of this committee. Who are the members of the willful defaulter review committee? Friends, once the willful defaulter screening committee has taken a decision, it goes to the willful defaulter review committee. So, the members of this committee are 2 independent directors of the bank, and it is chaired by our MD and CEO. The decision which is taken by the willful defaulter screening committee, and it is informed to the aggrieved party or the borrowers or the guarantors, then they have to submit a representation within 15 days of receiving any such order from the WSC. If they fail, then the decision of the willful defaulter review committee shall be binding and final. The final order of willful defaulter review committee, it will be served on the borrower or guarantor, and it will also be communicated to the RBI as well as the credit information companies like CIBIL, CRIF, Experian and Equifax within 7 days of the following month. That means if a decision on a willful default is taken by this committee in the month of January, then by 7th of February next month, this decision has to be informed to the concerned parties as above. Who is the discretionary authority to recommend the proposal for classification of an account as willful defaulter in case of a branch other than SAM or LCB? Friends, it is the respective zonal head. Every branch manager is not this authority who can recommend this proposal for classification. It is the zonal head's authority only. For SAM large or LCB branches, it is the branch heads, and for SAM small branches, it is the respective FGM who is this authority to recommend. Friends, whenever any account is declared as a willful defaulter, in such case, the RBI has come out with certain other guidelines that the account will be considered under prudential norms of income classification, asset classification, but there shall be an accelerated provisioning. Unlike the normal provisioning norms, the accelerated norms will apply according to the notification in terms of stipulations contained in RBI's Master Circular Number RBI 22-23-15 dated 1st of April 22 on prudential norms on income, Annexure 209 recognition, asset classification and provisioning pertaining to advances, provisioning in respect of existing loans or exposures of banks to companies having directors other than nominee directors of government or financial institutions brought on board at the time of distress, whose name or names appear more than once in the list of willful defaulters, will be 5% in cases of standard accounts. In standard account also we have to make provisioning in the higher side of 5%. If such account is classified as NPA, it will be accelerated provisioning as under. Friends, this is the table which I have prepared for you. If the asset classification is substandard and the account is fully secured, then in the first 6 months, the normal provisioning norm will apply, which is 15%. Accelerated provisioning, there shall be no change. But if the account exceeds more than 6 months and up to 1 year, the accelerated provisioning will apply. In that case, 10% more provisioning will be done, which is 25%. Friends, the second category is substandard, but the account is unsecured ab initio. In such cases, for the first 6 months, there are two types of regular provisioning already, which is 25% and 20%. Other than infrastructure loans, it is 25%. If it is an infrastructure loan, then it is 20%. But in accelerated provisioning, it has been kept as uniform 25%. If the account is greater than 6 months and 1 year, then in that case, the accelerated provisioning will go up to 40%. Friends, as soon as the account enters DB1 category, in that case, the provisioning will go up as high as 40% in the secured portion and 100% for unsecured portion, unlike in the regular provisioning where for secured portion it is 25%. As soon as the account migrates to doubtful 2 category, in that case, the bank has to make 100 provisioning for both secured and unsecured portions, unlike in the regular provisioning where bank has to make 40% for the secured portion and 100% for the unsecured portion. As soon as the account migrates to doubtful 3 category, friends, it is 100% provisioning for regular provisioning as well as the accelerated provisioning. I have put this table for reference of all of you so that you can note down the important percentages of provisioning required in such cases of willful default, and it is very, very important from the exam point of view. What is the maximum time in which the title deeds or securities will be handed over back to the borrower or mortgager after ascertaining that there is no direct or indirect liability? Friends, according to the policy, the maximum time stipulated is 30 days, but the policy at the same time suggests that this decision has to be taken within the first 7 days itself. Friends, with this, I come to the end of my session. I thank all of you, and I also give my special thanks to the association for providing me this opportunity to interact with all of you. Thank you so much. Sir.
Good afternoon. This is Partharthi Naik, Chief Manager Faculty from Image. I wish you all the best regarding the forthcoming exam, and being a 16, this is my 16, almost 16 year continuing in bank. I do believe that many of you will face the exam in your life. This is not the first time, second time, third time. So this is not the end of that if you will get selected or not. But my request to all of you, don't be demoralized, because in bank, this is one option that you will get multiple of opportunity if you have the intention to do good work and it is already be paid at the right time. Maybe 1 or 2 times you will not get the promotion, although you are deserving. But don't be demoralized regarding this. And today, the topic of discussion was given to me is loan policies. Although everybody that loan policy is one of the Bible of all the loans what we are giving, and in the morning session also, Madam has already covered regarding priority sector, and some part is already touched by our Mithu sir related to MSME and all. So in this regard, I just want to elaborate that loan policy. My request to all of the participants, have a brief in loan policy prior to the exam, because loan policy at least minimum 4 to 5 question direct question you will get, and to certain extent those are dealing with corporate credit and all, they will get some question related. But in particularly the question pattern what I faced in my tenure, particularly in loan policy, certain numericals will be called. So go tit by tit, line by line of the loan policy. Once you have completed the policy and you will be self-sufficient and you can explain, and even if you will be make comfortable by yourself in lending decisions. And regarding exam point of view, and my request to all of you, I will in this PPT I have prepared certain one or two theoretical part, and at least 30 to 40 MCQs are there. So because regarding other MCQs I will discuss also in touch. So first of all we'll know why this, what is the purpose of this policy? Emphasis on maintaining asset quality. As you know, in a bank, we are capable enough to do loans. But the thing is that whether our asset quality is in good or bad, that should be, we should be prudent enough to make our decision. At least unless until you know, as in the morning session, sir has already told, when you knowledge is power. When you know something, then only you have the voice and you have the power to make the decision right or wrong. And overall risk appetite of the bank. So whenever any loan, suppose by sitting alone itself in the branch itself, as you know, your advance cannot be increased due to the tough competition of peer banks. So now in this tough competition, if you are competent enough to do business, then only you have to go outside from the bank, just like nearby your traders, nearby your industrial estates, nearby your competitors. Let it be some banks, some customers, they are not satisfied with their banks, or some customer from our bank also not satisfied with the service, not just like rate of interest. So in this case, we have to be prudent enough to know that whose accounts are good and bad. Accordingly, we have to make our decision prudently. And approach to sanctioning, managing and monitoring the credit risk. Sanctioning approach should be, I do believe that unless this loan we cannot prosper and we cannot get any interest income, whatever the interest income we are getting, and at the end of the day we are getting salary, what are the operational expenses and all, everything we are getting from that. And being a public sector bank, we are also having some social obligation, and we, at the end of the day we have to do some loans related to government sponsored scheme, PM Mudra Yojana and PMEGP scheme. So in that case, we should be prudent enough. And regarding managing and monitoring is one of the vital part. When you have sanctioned the loan and the monitoring part comes, I do believe that your responsibility is somewhat at 200 times, because once money is given to someone, our right is to recover the money from the person timely. And being a prudent officer, you should know that monitoring plays a vital role also in our loan portfolio, starting from disbursement to documentation. Then first of all, after getting the sanction, you have to execute the document, then from disbursement, and then post follow-up. So these are certain various stages of monitoring. And nowadays DMC is also introduced, and after the implementation of DMC, there is a less number of documentation irregularities there. And being a branch person, you already know that how much it is helpful for a branch person to get it rectified and get it done at the timely. So these are certain things related to loan policy. And so related to documentation and all, we are in a position that once your loan is sanctioned and it is properly documented, you are supposed to upload in DMC and all. And regarding objective purpose of policy, we have already emphasized that these are the certain things we have to do. And regarding objective of policy, what is the objective of our loan policy? That also we have to discuss. And being a banker, being a public sector bank, our main objective, generally there is a segregation. A bank has already segregated to LCB, MCB, and other retail-oriented branches. LCB, everybody knows that 150 crore and above proposals will be processed there, and for MCB, 25 crore above and up to 150 crore proposal is there. And I do believe that everybody is now accustomed to the MAPC's culture, where it is headed by a CM and AGMs, and accordingly, a CM-headed MAPC is obviously when you are giving CM-headed MAPC, it is now previously there is no such group concept is there. Now a CM-headed, it is the sanctioning authorities. Per group exposure it is 6, and for AGM headed it is 10 crore, and per group exposure 20 crore. And everybody, I do believe that you know that what is a single exposure and a group exposure. And single exposure as an individual basis, and group exposure where suppose a person is a common partner, guarantor, voting rights, or have the authority to managing the decisions and all. That categorically elaborated in that credit policy, have a glimpse of that. So in these cases, maybe one question will come related to what is the discretion of that, and accordingly you have to make your answer. And bank has already strategically make positioning of bank with large corporate, mid corporate, retail bank. Retail bank we are already doing what are the bank branches, and this large corporate and mid corporate is exclusively designed by bank for segregating the dots. So you may get a question related what is the exposure related to large corporate branches and mid corporate branches, and balanced deployment of credit to various sector and geographical regions. It is being a bank, we are nationalized bank, we are supposed to do, we are having a national presence of 5,800 odd branches in all over the India. And our credit should be in such a way that it should be deployed in every sector. And everybody must aware about that cluster-based scheme. For example, this is just one point I want to touch, that cluster-based scheme, which is on the basis of your ODOP product related to your area. ODOP means one district, one product, which is designed by your state government or your central government on the basis of availability of your product. So bank has already having ODOP product in various around 72 plus odd ODOP product respective, and still going on these products. And the biggest advantage in the ODOP product is that we are getting this interest rate and this commission at a liberal rate prior to implementation of that MSME Uthan Utsav. So that I want to percolate to all of you. Kindly look the MSME dashboard, and you can check that this cluster-based scheme also, if your area is in that area, so that you can negotiate with the customer along with a reasonable rate of interest. And if your area is allocated to certain stages of ODOP product, that also you can negotiate with the customer. Negotiate with the, if at all certain cluster-based approach can be developed, we can take up with the matter through the zonal office to MSME department, so that maybe in that area that product will be designed as ODOP product, so that you can negotiate with the whatever the loans you are sanctioned in your branches, what are the structural loan products, and what are the business, basically what is the business happening in your area, that will be related to your ODOP product. And accordingly this may be designated as ODOP, and to certain extent you can negotiate with the customer with the reliable rate of interest. Generally nowadays customers are measure talking about what is the rate of interest and what is the security you are offering. And I do believe that everybody is aware about that MSME Uthan Utsav campaign is going on, and now it is extended up to 31st March 2024. And please have maybe one or two questions it will be asked, and in that MSME Uthan Utsav, up to, if you are having a CMR 124 and you are having a 100% collateral security, you can bank and go to a rate of interest up to repo plus spread, that is up to 9.20%. And being a branch person, I know how much tough for negotiating the rate of interest, and bank is now offering the most reliable, and that is at par with all the peer banks. So we can negotiate with that. And if it is a other CMR 5 and above cases, that is certain exemption, and if it is a 50% enhancement in case of existing cases also, that also in this case this Uthan Utsav scheme is also applicable. So please be aware of these products. Maybe certain one or two questions will be asked in that exam. So these are all. And regarding CMR, I just want to tell this is a new concept, civil MSME rank. And everybody, I do believe that they should know that what is CMR and all. This is just like a CIC report concept generated by civil. And it depends upon the last 24 months credit history of the customer, along with it is on the basis of last 24 months credit history. The next 12 months, what is the fate of the account is analyzed. And accordingly, being a branch person, it is gives a rank on the basis of CMR 1 to 10, out of which CMR 1 to 4, CMR 1 to 5. We can go for a fresh sanction. I am repeating once again, CMR 1 to 5. There is an amendment in 10th August. Came around one letter to all general office. There is a CMR 1 to 5. We can go for fresh sanction. And for that, maybe one numerical will come. And in the CMR 1, there is a least chance of default of 1.1%, and CMR 10, there is a chance of default of 94.4%. So these are certain things may be asked in this exam. And regarding due compliance of various regulatory norms, guidelines issued by Government of India, Ministry of Finance, RBI, CBC guidelines, suggestions by RBI, IBA. So these are certain things when you are doing as a policy maker, bank is implementing this policy and certain amendments are there. If at all it will come, it will automatically come as a policy. Now we'll discuss certain questions in the form of MCQ. So if you see, mid-corporate segment is identified for exposure involving dash crore and above to less than rupees dash crore from our bank. So it is 25 to 150. So if at all mid-corporate segment is identified for the exposure 25 crore and above, but less than 150 crore. But if the account it is 150 crore and then you have to segregate it as a large corporate. And regarding proposals, certain proposals, if at all falling under the CO authority, MCB will directly submit the proposal to corporate office under copy to JDO and CO. In this case, what is the responsibility of JDO and CO? They have to give a comment. But the thing is that there is a time frame to be maintained to make the turnaround time. As you know, everybody, that turnaround time is the biggest thing in a loan portfolio. If you are not maintaining the turnaround time, the customer having multiple options to shift. So within that time frame, we have to make the things to be done. So as per this, our answer will be 10. Within 10 days, JDO and FGMO will submit their views and observation on the proposal to corporate office for the proposals what is submitted by MCB. Now, large corporate segment is identified for exposure corporate of rupees 150 crore and above, and from our irrespective the sector, size of the loan and group of accounts. So whenever a proposal comes over 150 crore and above, that is supposed to be treated as a title will be large corporate branch. And being another question also will come, large corporate vertical will prepare group assessment report for groups having aggregate exposure rupees dash crore and above on yearly basis and share details with all verticals. So here our answer should be 300 crore. So being a large corporate branch, they are supposed to submit a group assessment report for groups having exposure of rupees 300 crore and all. And above yearly basis, share the details with all the verticals. So that maybe comes as a numerical. Now regarding NBG, this is a amendment came after our policy, after 22-23 policy, there is a recent amendment related to NBG. If the for fresh connection, there are two type of varieties. One is for fresh connection, another is for existing one. For fresh connection, for proposal with existing external rating BBB and above, separate approval through NBG is not required. So NBG proposal for external rated BB and above, that too MSME and agriculture is not required. For the cases, that is CMR score in the range of 1 to 4. So if a account, if NBG which is external rated, that is a BB and above, then with a CMR score 1 to 4, then it is not required to approve the NBG. And for CMR score CMR 5, the exposure is collaterally 100%, then also that NBG approval is not required. And NBG approval is not required for that MSME and agriculture borrower in the exposure of rupees 10 crore and above and less than 25 crore falling under criteria 2 and 2, that above 2 criteria, if it is there, means it is not that NBG approval is not required. And in all other cases, approval of various other NBG committed for exposure 10 crore. If at all, bearing all these above cases, 10 crore and above, if at all it is external rated BB and below, then if the sanctioning authority is up to COLC's GM, then the concerned authority of approving the NBG approval is COLCCED. And unrated for accounts eligible of external rating, and exposure falling under the stress sector identify RMD on quarterly basis and updated on RMD helpdesk subsector as exempted from stress sector shall be excluded. So here, if at all, if it is a sanctioning authority up to power COLCCGM, then some concerned authority for approval of NBG is our COLCCED. And if the sanctioning power is COLCCED and above, the respective sanctioning authority, then external rating applicability is mentioned, that is not applicable. Now excluding PSUs and exposure to taken in unrated SPBs where promoter and sponsor agencies externally rated A and above. And then for existing cases, for enhancement proposal in all existing accounts, with internal and external, above investment grade BBB and above, and MSME and agriculture borrowers, internal IB BBB and having external rating BB and above is applicable cases. NBG approval is not required. So in that exam, maybe you will get some questions as if at all it is external rated, what is it, BBB and above, and BBB and below, certain amount they will fix whether if the sanctioning authority is COLCCGM, who is the competent authority to sanction the NBG proposal. So one or two questions we can expect. So on the basis of that, you can frame your question and accordingly make a note of it. And particularly if at all it is the COLCCED cases, then respective sanctioning authorities for passing the NBG, and there is a NBG. Okay, and these are under Atmanirbhar Bharat, our bank has launched 3 products for promoting investment credit. And what are they? These are Krishi Infra Fund, Micro Food Processing Enterprises, Vasudhan Mitra. Regarding all 3, I think we do have discussed in the priority sector classes. But particularly in micro food processing unit, when we are nowadays getting from most of the proposals in branches. And why I'm telling this micro processing units is somewhat related to this ODOP product, and accordingly here in ODOP product we can get up to subsidy up to 10 lakhs. So this is one of the initiatives. Please do have a liaising with the concerned DIC office or your MSME department so that they will make certain campaign, and accordingly these proposals we can get some subsidized rate. And if it is all a cluster based thing also, to simultaneously you can correlate, and along with some interest rebate you can provide in the form of interest rebate and some processing pay to the customers. Now regarding credit principles, the first thing is that careful selection of the borrower. Whenever any proposal came to you, first of all, we are being a branch manager or branch officer, we do have the habit of whether this loan he will pay or not, or he is a competent person or not. At the end of the day, because after implementation of MAPC and various verticals of credit, being a branch person, we have only power to make the borrower credential of the borrower to be verified and due diligence of the borrower to be verified. That is the only thing we have to do prudently, because the things at the other end they are checking on the basis of documents, and so it is the prerogative of the person who is sending the proposal. He should be cautious related to this thing. It should not be used for any speculative purpose, any unlawful activity. Due diligence process will regard to credential of the borrower, purpose of loan, financial position of the borrower. Due diligence is a broad term. Regarding due diligence part, our bank has already given 27 sites to verify the fate of the returns, starting from your PAN card, GST number, your UD number, your SSI, and your company cases, your company site. You can go and verify there everything. So there are certain 7 sites are given. Accordingly, you can go and check the fate of the customer. And regarding SSI and other thing, I just want to tell that nowadays only checker concept is there, and in that there is a condonation delay previously that suppose a loan you have sanctioned, you are supposed to do the set aside within 30 days. But previously, if at all any delinquencies there in your respective branches, that delinquency period they have now removed, and if at all something is pending at the branches, we can dispose of. So that liberty they have given. Previously, there is a condonation delay charges is there. And regarding within verification, everybody, as you know, that regarding balance sheet and all, we are supposed to verify the balance sheet for accounts rupees for limit 20 lakhs and above, and credit turnover 1 crore and above from the concerned individual concerned chartered accountants, and accordingly they are supposed to give we are supposed to give him letter to them that whether what is the fate of this audited balance sheet and all. Accordingly, they have to give their reply along with their number, their registration number, and that to be keep in record. That is one initiative we have to put. And regarding IBD number, this is the advantage that we can verify whether the things are done. And regarding income tax return also, I do believe that everybody is filing their income tax by their own. So with the help of third party agency also, so sometimes we are verifying the income tax return and all. In that case, we can verify by your own ID. We can ask their customer their user ID and password. We can verify at the by your own end. And robust internal credit rating and scoring model. We do believe that everybody is aware about that scoring model, what is related to various retail loans and various small loans, and accordingly that RAM rating model is applicable for 1 crore and above, and there is a maker checker concept, and up to 2 crore you can deposit at the branch level, 2 to 5 crore you can deposit at the zonal office, 5 to 10 is at the FGM, and 10 crore and above concerned of scale 4 and above, that is designated by CRO sir, CRO sir, who is they will pass the rating. So regarding rating, prudential rating, I do believe that everybody is aware about that. Kindly, whenever we are rating something, don't do anything favoring the customer, because at the end of the day, when you are rating any account, you are somewhat kindly go to the file, have a glimpse of that, and kindly go check the credit history, kindly check the turnover, kindly check the whatever the transaction, if at all is sister concern transaction or associate concern transaction is there, kindly remove from their from the calculation of turnover. And certain extent, if at all this type of transaction is frequently repeating, you have to ask the customer what is it, because maybe this transaction will be not taken into as a turnover in this account. So these are certain things whenever you are doing any internal rating, and you can have a brief idea about the credit history, what is the connection, what are the holding period, certain things. If suppose if at all any check return is there or not, so certain small things you have to categorically analyze. A well-defined system of delegation power to sanction and approve the credit facility. Bank is already having a discretion power, delegation power booklet, administrative power booklet. I do believe that everybody is having that knowledge of regarding what is their credential limit or what is their administrative power. So don't delegate your discretion power unless until it is specially permitted by the competent authority. And as per our MDA statement, we are supposed to submit the next by next month, 7 days, 7th day of next month, and it is supposed to be checked by within 30 days by the concerned authority at the zonal office, and it should be whatever query is submitted, that to be replied within 15 days. So these are certain things related to delegation power. And credit facility can be disbursed unless the standard loan documents in specified form can be executed. As we have, bank is already having certain stage of sets of documents, and accordingly we have to execute the document, and at the end of the day DMC is there, and we are in a position to upload the document perfectly, so that at the end of the day it is already in archived state, and it is easy for if at all any time any document is required, it can be reconciled and it can be retrieved. So being a officer, I do believe that everybody is following this. So my honest request to all of you, because once you get a certificate related to this DMC, you will be self-satisfied that whatever the documentation I have done, that is checked by someone, and majority of the irregularity will not come through the RBIA inspection. Any fresh exposure to borrower having working capital limit of rupees dash crore and above, from the banking system other than specially permitted category, advances shall be under consortium arrangement. Our answer should be 500 crore. So any fresh exposure, if you are giving to any borrower which is having a 500 crore and above exposure, that in consortium arrangement, it should be preferably 5 crore and above. It should be go for with a consortium arrangement. Don't go for a sole banking. Now, who is the competent authority for sanction of loan under consortium arrangement? And it is advised that if we are going for a consortium arrangement, then our share should be at least minimum 10% and above. For sanctions, consortium arrangement, if the share falls below 10% of the total exposure up to CLCC GM power. So if the our contribution falls below 10%, then competent authority to sanction the loan is CLCC ED. So I have made certain questions because as per the policy, if you go, it is around 267 pages for the domestic branches. So if you go, what are the small questions, you can have a frame at your end. So certain question that is somewhat tricky. So you have to, I have tried to make a certain few of them. So this is one of them. So if at all, our because as per our policy, it should be preferably to 10% and above. We should go for a consortium advance, and if our share falls below 10% up to a CLCC GM power, the competent authority to sanction the loan is CLCC ED. Now, joint lending arrangement is a concept which is arrangement is applicable for a single borrower with aggregate credit limit and both funded and non-funded of rupees dash crore and above, involving more than one public sector bank. So our answer should be here 150 crore. Now corporate loans. What are the loans that are classified under corporate loans? Existing and new customer having combined internal rating IB triple and B and above. So any existing and new customer whose rating is your combined internal rating is IB triple B and above, we can classify under corporate loans, but there are certain other criteria also they have to satisfy. And all corporate borrowers or non-corporate borrowers, partnership firms and LLPs under MSME category, and under MSME category only medium enterprises are eligible under corporate loan. And regarding partnership fund and LLP, I just want to tell that there is a difference that in partnership fund, individual partners obligation is unlimited, where LLP is it is limited. LLP is behaved like a company, and they have to audit their books of account, and there are certain restrictions. So whenever you are processing a proposal, maybe one or two questions will come: what is the limitations of partnership firm and what are the formalities of LLP, that you should know. Power to consider the corporate loan is vested on at the corporate office level only, and minimum loan is 1 crore and maximum there is no ceiling, and tenure of the loan is 6 months to maximum 5 years. These are the features of a corporate loan. And regarding this policy, there are various framework in our loan policy, starting from your applicants to MSME, agriculture, jewel loan, and real estate. So in this program, I just want to touch up whatever the things can be covered. I will tell. So disposal of application on agriculture, up to 25,000 we can dispose on up to 15 days, and beyond 25,000 to 5 crore fresh limit and increase of limit we can dispose within 4 weeks, and above 5 crore to fresh limit increase in we can dispose within 8 weeks. These are maybe come one or two numerical maybe came. And regarding MSME also, I think one of my friends has already touched some part of MSME. MSME policy also comes under our corporate loan policy. So loans up to 5 lakhs can be disposed within 2 weeks. 5 lakhs to 25 lakhs can be disposed within 3 weeks. Above 25 lakhs can be disposed within 6 weeks. And regarding central fraud registry, so everybody may be aware about that. There is a whenever we are opening the account in the system, there is a menu called central fraud registry. In that SISLA also there, we have to put it as anything, because I think MAPC and JEDO is having the IDs. So my request to all of you, whenever you are opening an account, please ensure that previously there is a caution advice coming to the branches that what are the fraud happening, other banks and all. So nowadays it is dispensed with. So only it is started in 2016 onwards. So there is a portal, and on the basis of that, if your ID is credential is filled up, if you are having some fraud related thing, then it will show, unless until it is, if you are not having so some like that, then it will not show as not applicable. So for limits 1 lakhs and above, now it is required for to register in to have a verification in Central Fraud Registry. So whenever you are doing any type of loan from 1 lakh and above, you are supposed to take this CFR copy. Now regarding LSR and genuineness certificate to be obtained in every dash years for accounts where valuation of the property is dash crore or exposure is more than dash crore. So in that cases, we have to take the legal opinion for 3 years, within 3 years, and with a valuation of the property 5 crore, and regarding lawyers, if the exposure is also 5 crore. One important thing here I want to tell, when we have to take two valuation. So if it is a non-structured loan product with exposure 5 crore, if it is a non-structured loan product with exposure 5 crore, then we are and the valuation of the property is more than 50 lakhs, then we have supposed to take a two valuation. Structured loan product, I do believe that everybody is aware of that. I just want to disclose one circular number, ADB 245, 4th December 2021. ADB 245, 4th December 2021, where 18 structured loan products were there. Out of this, your IB Micro and Jaldar is now there, it was closed. So after that, certain products like MSME LAP and your pharmaceutical product one up to that is 22nd, 9th February, one product is also there. So these are the, if at all, any loan that is a non-structured loan product with 5 crore and above, then it will that with the limit 50 lakhs and the valuation of the property is 50 lakhs, then you are supposed to take two valuation. And if it is a structured loan product with 1 crore and above limit along with 50 lakhs and above valuation, then we have to take two valuation. These are certain things we have to take. And regarding genuineness certificate, we have to take a certified copy of that property along with the different EC, and we have to ensure that our charge is registered in our bank, in that sub-register office. Whenever you are taking the EC, you are supposed to ensure that at the time of whenever you are taking any EC and all, generally there is a provision that after mortgage we are supposed to take after 4 months. We have to take a EC, ensuring that our charge is better make it a practice once the mortgage is over, as quick as possible, within a week you apply, because certain times that mortgage updation, it depends upon the register to registered, it will take 1 to 2 days or up to 7 days, but immediately you ensure that the EC should be applied and our charge to be checked whether it is noted or not. Now regarding passport, now after this Nirav Modi incident, now banks RBI is strict related to passport details guidelines, and passport details of directors and guarantors and promoters is applicable to be captured. There is a confusion, not confusion. There is. I just want to clarify that for input in CBS, it is mentioned as per the circular, it is 5 crore, but for the appraisal part, when you are capturing, it is 10 crore. So in that case, you have to take, if at all the customer or director or the partners who are having a loan agreement with our branch or bank, then you are supposed, if they are not having the passport, then you have to take an undertaking from them that we don't have the passport and we have to update within the scheduled time frame. That undertaking should have an affidavit related to this should be taken. Now for borrowers, guarantor, directors, partners, trustees appearing in the defaulter list of RBI not suit filed, fresh sanction and enhancement of limits shall be considered first time at CO by dash on merit up to its power and respect. So if at all a borrower is classified as your defaulter, that in the RBI non-suit filed cases, then the competent person to sanction to check the approve the loan is ULCCGM. And in certain cases, if you see, when the advance granted to same party or their associate concern Associate concern shall be read in the line with group accounts, group connected counterparties defined in that policy as classified as NPA. Suppose if at all your group account is NPA and then with other bank, the delegation power to SLB except for fresh and ad hoc limit is the CULCC ED. These are certain questions that is very tricky. So in this case, we might think that when the account is NPA, it is no one has the power to sanction. So please ensure these are certain things to go by line to that policy. So these are one or two questions, maybe another 2-3 option it will come with a answer. So please ensure that it is CULCC ED. And regarding statutory certificate, generally we are having a whenever we are giving any loan, we are supposed to, if at all any obligation related to any government entity and everything will come, then first that will be paid first. So in that case, a certificate from an independent company secretary or a firm chartered account to the effect of on a yearly basis for borrower accounts up to what crore and above accounts we can take a certificate regarding there is no pendency of statutory due from any statutory authority. So that is the amount is 5 crore and above. So you have to take a certificate from that concerned chartered accountant or company secretary. Now branches and zonal office shall collect copy of details submitted to SEBI from the listed companies. Those are already listed. For whom our bank has considered credit facility more than dash crore on a monthly basis on, for submission of the same to the sanctioning authority. Then the limit is 10 crore and above. So in this case, we have to, for 10 crore and above, we have to submit. And credit proposal beyond dash crore should be accompanied by TEB study from an outside agency. Generally, up to 10 crore, if it is existing account, up to 10 crore, that is done by your CRM officer, 10 to 25, the IDO. And beyond 25 crore and above, we are supposed to take from the outside agency. Now, DAS will be empowered to empanel any agency for TEB study work, and DAS is competent authority to waive the TEB in all cases. So, who is the competent authority? We can empower, who is empaneled, we can empower to empanel any agency for TEB study, and who is the competent authority? We can waive this. So, first of all, the first answer is CULCC GM, and second one is CULCC ED. So these are the two authority we can as the authority to empanel and as the authority to waive. And second legal opinion to be obtained by security by charge to the advances of rupees dash lakhs and above, that is 1 crore and above, you have to take a second legal opinion. And bank cannot grant any loans and advances on security of its share in terms of section 21 of which act? It is Banking Regulation Act 1949. Now, in case of takeover of accounts from any other bank where our EDs or MD and CEO have worked earlier for all loans have rupees dash crore, MC should be the sanctioning authority. The answer will be 25 crore. And regarding takeover, you might have faced one or two questions related to retail loans. What is the minimum criteria for a retail loan to take over? Generally, the account should be standard and regular, first of thing. And the last 6 months, previously it was 12 months, now it is changed to last 6 months repayment should be there. And regarding takeover, one precaution we have to take whenever you are taking the loan documents from the bank, please ensure to check the documents with the list of documents submitted by the bank as per the MOD. There should not be any mismatch, and if at all something delinquency is there, then at the, when we are at the receiver end, we will be held responsible for returning the document. So please check that. And particularly in the DMC cases, whenever you are sanctioning in takeover cases, in that case, you have to upload the document after receiving from the concerned bank. And regarding business loan, I just want to tell that the minimum, the condition for business loan to be takeover, there is a condition for business loan also that 30% maximum enhancement, suppose you can go for that. And 30% enhance means if at all it is there, then FGM previously maximum we can go for 30%. And now FGMCC has the power to considering the merit of the same from case to case basis. And regarding closure of, if at all a account is closed more than 3 months and we are getting this application for that, we have to ensure that the loan is closed by the individual sources. It is not from any speculative purpose or from not from any bank and all, any debt and all. On the basis of that, we can consider it as a consider the proposal. And regarding takeover in other retail loans, I do believe that for retail loans, home loans, the competent authority is the sanctioning authority, and bearing home loan, the other retail loans takeover is the ZLCC power. And if at all any security related issue is there, security dilution is there, then CLCC GM is the competent power. Now, relaxation in financial covenants, the competent authority up to two parameter by dash 4 meter, 4 parameter and more than 4 meter. So, financial covenants, everybody is aware that whenever we are doing any proposal, there are certain ratios we have to maintain. And in that case, if it is up to 2 parameters, relaxation can be given by FGMC CAC, and up to 4 parameters, if that will be CLCC GM, and more than 4 parameter, the competent authority is CLCC ED. And regarding takeover, which case cannot be considered in case of takeover, account which have been restructured unless it is permitted by your MC or CAC, account which have been restructured or TS settled accounts with other banks irrespective of the nature of the facility, and parties appearing the default list of RBI, CBIL, ACGC, RBI caution list, borrower not having a borrower and their group accounts under suit file category for liquidating liabilities with priority money lenders, and advance restricted by our bank loan and credit management policy, unless it is permitted by CAC and MC, we cannot consider the taken over cases. And regarding what is the minimum amount of loan can be taken for the agriculture KCC category and in other loan, for KCC and all 3 lakhs and above, and other loan 10 lakhs and above. But in that case, if it is a subsidy related loan or government sponsored, whatever the loan amount, we cannot go for the takeover. Now, regarding accessment of limit, there is a various methods are followed, and if you see limits up to 5 crore other than the trade limit, we can have the turnover method, and under specific circumstances for limits up to 5 crore other than trade segment, turnover method or MPBF second method of lending, whichever is higher is permitted. But if you are following the MPBF second method, then you are up to give the certain region for that. And in MPBF second method, the margin is 25% of TCA, and it's somewhat as stringent, so it was followed. And limit for more than 5 crore MPBF second method or modified MPBF method is there. Modified MPBF method, 1 or 2 questions may be asked. In that modified MPBF method, please ensure that there is 3 conditions. First is your 100% collateral should be there, and the margin should be 15%, and the current ratio is 1.17. And regarding NBFC, educational institution, hospital, hotels, and real estate, where so particularly service type of industry, then cash budget is method, cash budget method is there. Maybe 1 or 2 numerical will come related what is, if at all industry is there, and what type of method for assessment of working capital is there. In that cash budget method, there is a cash flow statement we have to take. What is the cash receivable and what is the cash payment? Accordingly, what is the difference? Maximum difference will be treated as your cash budget method. There is a calculation in that. So, being branch person, we are supposed to take the data and we have to submit it to the concerned sanctioning authority. But you should know that which type of industry carries what type of calculation. On the basis of that, we can ask the customer to submit the financials. Now, what is the margin, collateral percent and current ratios in modified MPBF method? That we have already seen that 15% is the margin, collateral is 100% and current ratio is 1.15. Sorry, it is 1.17. 24, question number, repayment of term loan beyond 10 years other than structured loan products shall be approved by COLCC, GM and above at CO with their delegated power subject to a maximum of how many years, or 85% of the economy life, up to 25 years. As you know, in structured loan products, we are having the maximum repayment is in SME secure, where the maximum tenure is 15 years. And there is a recent change in IB trade will. that previously the margin was what is that? Right now the 25% margin is there, and there is a change in submission of stock statement also. That please have a gone through that product, because one or two because recently what is the circular from 1st April to and adjourned date, have a glimpse of that. Certain question related to structural loan product may be asked. Now, any application request for credit facility by the working capital or term loan of greater than equal to rupees dash lakhs, or unit having turnover dash lakhs other than home loan, education loan, should be accompanied with audited balance sheet. So as per our bank's policy, we should take 20 lakhs and 100 crore. So 1 crore, sorry, 20 lakhs and turnover is 1 crore. So in that case, we have to take the audited balance sheet. And now the level of unsecured loan that can be treated as quasi capital for calculation of net worth to be restricted to dash of the tangible net worth, excluding revaluation reserves. It should be restricted to 100%. And quasi capital, as you know, quasi capital is one of the capital which is taken from your friends and relatives, and it should be during tenure of the loan. It should not carry any interest. If at all you are paying any interest, then that rate of interest should be lower than our bank's rate of interest. And if at all your interest coverage ratio is more than 1.5, then you are to some extent you are eligible for that, pay that interest. Now, extension of moratorium period. Generally, holiday period of payment of interest shall be not more than dash year, and moratorium per period of insurance shall not be exceed dash year. So, in that case, it should not be extended more than 2 years, and per moratorium of principal should not be exceeded more than 3 years. And CULCC, GM and above sanctioning authority has the power to extend. So, this is one presentation. Please, it is already there in our lending policy. If you see, certain ratios are there, starting from benchmark of benchmark, ZLCC, FGM, CLC, CULCC, GM, and considering of various ratios, current ratios, TOL by TNW, rate equity ratios, and your DSCR, FACR, and your security coverage ratio. And I do believe that 1 or 2 numericals related to what is the minimum benchmark for a, for example, TOL, TLW for general category, it may be asked in that exam, what is the minimum average, what is the average DSCR, or what is the minimum DSCR. Accordingly, kindly check. This is related to review renewal concept, review renewal model, and another is related to your fresh cases. So these are 2 categories. Accordingly, you have to, what are the industry you are relating, and certain in your branches, whenever you are receiving the proposal, we have to ensure that this ratios is must be meticulously followed, unless until you have the justification to if at all any financial covenants are there, then that sufficient justification supported by documents should be there. And zero effect, zero defect, it is one of the MSME related thing where there is a 3 criteria: gold, diamond, and platinum. On the basis of that, we are getting some rate of interest reduction 0.25%, and for platinum 50%, for diamond 35%, for gold it is 25%. So this is the advantage of a JDD account. And regarding CGTMSE, I just want to intimate that that total slab is now increased to 500 from 200 lakhs to 500 lakhs, and there is certain addition related to person with disability, and MSME promoted to Agnibirs and JDD certified MSMEs. Bearing that almost all are similar, only thing is that amount has increased from 2 crore to 5 crore. So one thing is I want to tell in CGTMSE cases, please ensure to make the NPA registration timely. And suppose today is the date of NPA in an account 21st January 2024, and the time to mark the NPA in CGTMSE portal is the next quarter. By 30th June, you are supposed to mark the NPA in the system. This is the only thing in CGTMSE part. which is the most vital part, and we are this is comes under ZTA. If you are not aware of the account that is covered under CGTMSE, although you are not involved in the sanctioning process, you are somewhat liable for that. And another important thing is that in CGTMSE, 18 month is the lock-in period. And last but not the least, unless until you receive the first claim, you are supposed to remit the CGTMSE premium. This is the latest updation in CGTMSE is there. And recently there is an amendment in for Tamil Nadu government. That up to 40 lakhs they can go for a 90. If it is a manufacturing industry, they can claim up to 90%. But there are some modus operandi is something different. But that claim they are having a tie-up up to 40 lakhs. And even if it is a collaboration with CGTM also, up to 90% they can have the. And there are these slab rates up to 10 lakhs 0.37 and 10 to 50 0.55, 50 to 1 crore 0.60, 1 to 2 crore 1.20, and 2 to 5 crore 1.35. This previously there is almost 2 to 3%. Now it is increased. Now it is decreased to almost. If you go for a higher side, 2 to 5 crore, it is comes around 1.35%. And additional concession relaxation in guarantee fee to be following categories. There are certain relaxation that will be given for women beneficiary and for Northeast regions and JDD certified cases. Now regarding margin, as you know, this take up from the part of the borrower. And for OCC ODD, that is for MSME sector, it is 20%. For term loan and land and building, 30%. Second and machinery, 35%. And ZLCC, further 10%. Relaxation is permitted as below borrower accounts up to ZLCC power. And for Sisu margin is 10%. For Kishore margin is 10% and Tarun 15%. TREDS platform, as we have already discussed in the MSME, this is one type of platform where the MSME entity who is the seller and the buyers are the corporate buyers and the various banks, financial institutions. There is three parts. They have to register in the TREDS platform, and the TREDS platform they are ensuring the fate of the due diligence part of the part. Only thing is that being a banker, we can negotiate the bills related to various good corporate clients. And there are, as per the latest RBI guidelines, there is three registered TREDS entities, that is RXIL, Invoice Smart, and M1 Exchange. Maybe one or two questions related to it will ask. And regarding MSME restructuring, there is during COVID for MSME loans which are stressed but in standard category as on 1st January 2020 with aggregate exposure fund-based, non-fund-based up to 25 crore. And restructuring of the borrower account is completed by March 31, 2021. And the borrower which are already in GST registered entity there, so they are eligible, and those are not. However, this condition is not apply MSME for exempted. For example, food category, food of fruits category. And CAP is a corrective action plan, whatever you are taking to get it restructured and all, and it should be timely done unless recovery process should be started. And regarding interest rate, up to 25 crore, there is a for WCTL and for FITL, WCTL MCLR plus 0.5 and FITL MCLR plus 0.75. And other categories for 25 crore and above, there is a various hierarchy of there is a various agency. For example, the journal office is the member. There is, if at all it is a lead bank related thing, then what is the time frame to complete the restructuring? And here only thing is that the rate of interest is somewhat higher side, MCLR plus 2.45 plus WCT. And regarding priority sector lending, this is also one part of our lending policy. And being a public sector bank, we are supposed to do total priority sector 40% of the ANBC and COB credit exposure or balance sheet exposure. And for out of which agriculture should be 18%, micro enterprises 7.5%, and advances to ICAT section should be 12%. For foreign banks, 20 branches and above. The major thing is that 32% goes to the export sector out of this 40%. And for RRB, the ratio is somewhat at higher side for priority sector at 75%. And agriculture almost equal with other commercial banks, and micro enterprises 7.5%, and in advances to ICAT section somewhat at 15%. And small finance bank 75%, and agriculture it is 18%. And for micro enterprises it is 7.5%, and advances to ICAT section it is 12%. This is the calculation of ANBC, where bill bank credit in India minus your whatever the bill rediscounted with RBI, you have to minus it, and bonds, debenture in non-SLR categories held in STM category or other investment, that you have to plus with a net bank credit, and we have to make the minus of eligible and exemption issuance long-term bond for infrastructure and affordable housing, and along with eligible advances extended in India against the incremental FCNR and NRE deposits, as these are repartible. So these after this calculation, we can get the ANBC, and accordingly with the rated amount of priority sector to be calculated. And as per this slide, you can see financial 2020-21, the small and marginal fund 8%. Now for 2023-24, it is 10%, and accordingly for weaker section, it is 10% to for 23-24, it is 12%. And the applicable for lending to corporate farmers for FY 2023 13.78%. Please ensure to mark it, because this is the latest update. Maybe you will get some questions. And regarding priority sector lending, this is the achievement and related to our what is the target stipulated by RBI against 40%. We have achieved 42.83. Agriculture 18%, out of 18% we have achieved 19.08. This is the figure related to position of 30th September 2023. And classification under priority sector, up to 5 crore for FPO, up to 30 crore renewable energy, and 70 lakhs for NWR in ENWR. NWR, I want to have an idea that negotiable warehouse receipt previously, the warehouse receipt that was generated manually, there is some mutilated or some correction, some under stock, some excess stocks are there. So to remove that, WDRA, Warehouse Development Regulatory Authority, they have given NWR. On the basis of this, we can negotiate, and up to 75 lakhs we can give loan. And for agriculture infrastructure, 100 crore per borrower. Loans up to 50 crore to startups. Startups, as you everybody know, we are already bank is having a center CGSS scheme for coverage the guarantee of startups. And startups, the definition, if you see, there is at least there should be 10 years, below 10 years, and their turnover should be below 100 crore, and certain other conditions are there. And regarding education loan, below 20 lakhs, and if at all any repair renovation they are doing, 10 to 6 for metro area 10 lakhs, and for other cities 6 lakhs. And for NBFC, not bank credit to registered NBFC towards individual borrower, maximum 10 lakhs. Loans to up to 50 crore to startups, as in MSME, as directed by Ministry of Commerce and Industry, Government of India. And loans to individual up to 35 lakhs for metropolitan population, and 25 lakhs for other center, with a project cost of 45 lakhs to 35 lakhs. And regarding housing finance company, their process is somewhat at liberal side, and being a branch, we are somewhat at our process, and their process is somewhat different. But up to 20 lakhs, there we can consider up to priority sector lending, and banks loan up to 5 crore for setting up schools and all for social infrastructure. That also comes under priority sector. Loans up to 10 crore. These are certain numericals we might have faced in that exam. So bank guarantees for more than dash years shall be issued only with prior clearance from, so up to 10 years we can issue at the branches, but above 10 years we have to take confirmation from CO. And interchangeability of limit for original sanction, sanctioning authority may permit the interchangeability of limit. This is the recent changes in our policy, and between funded and non-funded facility at the time of original sanction, except for interchangeability from BG to working capital, funded facility, or BG to LC. However, CLCC AD and above is permitted to allow the interchangeability from BG to working capital, funded facility, or BG to LC with proper justification. Now, these are the things which we have to, for what are the modification. Funded to non-funded, working capital funded facility to LC changeability may be permitted by FGM CSC, FGM CAC for proposal up to the power of FGM CLC. And interchangeability may be permitted in CLCC GM ED proposals by CLCC ED, and only CLCC ED and above are vested with the powers to permit the interchangeability of and working capital funded facility BG. So there is 3 hierarchy from funded to non-funded, non-funded to funded, non-funded to non-funded, and non-funded to funded. Who is the competent authority? For example, non-funded to non-funded, AGM, CAC, and above may permit 100% non-funded to non-funded interchangeability from LC to BG, not vice versa. However, COL, CCED, and above have the authority to permit the such interchangeability, and CAC may permit interchangeability in MCB proposals in case of exigencies. And in case of non-funded to funded, non-funded to best, LC to funded working capital interchangeability may be allowed by FGM CSE up to 50%. Now, for issuing assignment, if it is if you issue a bank guarantee with assignment clause, then if, with 100% margin, the respective authority up to ZLCC with 50% FGM CAC, and COLCC GM up to 25%, and COLCC AD, CAC, and MC up to nil margin. And if it is a from overseas branches, then the concerned respective CO and DGM 100%, COLCC GM of less than 100 up to 75, COLCC AD, CAC, and MC up to nil margin they can issue. Now, one last question, sir. Deviation reporting framework is applicable for fresh enhancement proposal of rupees dash crore and above, which will be properly recorded by credit verticals and reported CMC on that is 50 crore and above, and reported to the monthly basis. And this is one last slide I just want to tell to all of you. Please have a idea, have a look at this. If your proposal comes under this category where CIBIL score is 700 and above, and maybe the write-off limit amount is up to 10,000 below, then who is the power of below ZLCC, 10 to 25 ZLCC, 25,000 and 50,000 FGMCC, 50,000 to 1 lakh CLCC GM, and 1 lakh and above CLCC AD. And the revised authority for write-off and OTS amount settled shall not be applicable for agricultural loans except the settlement under specific scheme as per the approved by RBI and government umbrella bank board. In case of retail loans having CIBIL score of 700 and above, if the return of OTS settled in credit cards is beyond 3 years, then ZLCC has the power to 25,000 ZLCC and above consider the proposal having write-up and OTS settlement on the merit of the same. So thanks a lot, and wishing you all the best. This is what I want to deliver in this tenure. I do believe that it will somewhat helpful to all of you. My request to all of you, kindly have a what are the database related to in lending policy, kindly have a look in that. Maybe certain question related to directly data will come, but majority of the questions, some analytical question may come. So have a read of that. Thank you all, and wishing you all the best.
So good afternoon, friends.
I am Vinay Ashok Kumar Darra, Chief Manager and Faculty here at Image. First of all, I would like to say thanks to our Officers Association and our Image. They have given us the opportunity to give us one-day training on various subjects. So I am allotted topic of foreign exchange. So we'll be understanding the various concepts of foreign exchange through various questionnaires. And some questionnaires are based on the domestic forex policies. Some are based on the recent circulars released by the bank. So let us begin, friends. The first one is, what is the role of RBI in foreign exchange markets? So if you talk about as per the FEMA Act and as per the preamble of the RBI has entrusted with the role of facilitating external trade and payments, promoting the orderly development and maintenance of foreign exchange market in India, issuing licenses to AD category banks, full-fledged money changers, and selected financial institutions to deal in foreign exchange. If we talk about role of FEDI stands for Foreign Exchange Dealers Association of India. So basically, FEDI is an association of AD category banks, and it has been formed for the following purposes. So first of all, the role of FEDI is issuing guidelines and rules for forex business in India. It provides training to bank personnels in the areas of foreign exchange business. It also provides the accreditation to forex brokers in the various interbank dealings done by the Treasury branch. Many times we have to take the help of brokers. So accreditation is being done by the FEDI. It also advises, assists member banks in settling various issues and matters in their FX dealings. It also represents member banks with government, RBI, and other bodies. Also, it announces rates, various rates on a periodical basis. Coming to the role of DGFT. DGFT stands for Directorate General of Foreign Trade. It comes under the Ministry of Commerce and Industry. So the basic role of DGFT here is the implementation of the EXIM policy and the foreign trade policy. When we talk about the foreign trade policy, currently the foreign trade policy is in force as FTP 2023. Usually the foreign trade policy is for 5 years. If we look the last FTP, it was from 2015 to 2020. Due to COVID in 2020, 21, 22, it was not revised. But in the year 23, it was revised. And this time, the foreign trade policy is basically a dynamic approach. There is no expiry date. Like in the last policies, we have seen 5 years expiry date was there. But in this FTP, there is no expiry date attached to that. And it can be modified, changed as per the requirements. So the market is very dynamic. So as per the requirements of the markets, as per the requirements of the various regulators, the policy will be amended and modified from time to time. It also issues IEC codes, importer-exporter codes to importers and exporters. It also maintains and documents ITC, Indian Trade Classification Harmonized System Codes. So various goods and services are being provided the various codes for the identification, that also being maintained and documented by the DGFT. It also provides platform for updating EBRC. EBRC here is Electronic Bank Realization Certificate. What does it mean? Basically, as we know that whatever exports, let us say whatever exports are being done from India, equivalent amount of foreign exchange should be received by the India. Similarly, whatever imports are being done by country, equivalent amount of foreign exchange should go from the country. So basically here EBRC, it means the bank is giving a certificate that yes, whatever exports has been done by a particular exporter, equivalent amount has been realized and the bank is certifying that. So DGFT also provides the platform for updating the electronic bank realization certificate. Now, what is the important factor for deciding the NRI status as per FEMA, non-residential Indian status as per the FEMA? So if we talk about as per the FEMA, a person will be classified as NRI when his or her intention to stay abroad is for an indefinite period. But if you talk about the Income Tax Act, it is more than 182 days. So if a customer is going abroad, if he is having account with our branches, so we should not wait for 182 days to change the residential status. Immediately after getting the information that yes, the customer is moving abroad, we should reclassify the status as non-residential. So basically, as per the FEMA guidelines, intent is very important. So intent to stay abroad for an indefinite period is must. Now we have seen who is an NRI. Now we will be talking about who is not an NRI. So basically, Indian citizen who goes abroad for tourism, business promotion, receiving imparting training, obtaining medical treatment, sports and cultural activities. Persons of Indian origins residing in Nepal, Bhutan, Pakistan and Bangladesh, and the crew members working for shipping, airline companies posted in India, and those companies whose registered offices are in India. So basically, Indian citizens who are going abroad for all such activities, they will not be treated as non-resident Indians. Maximum period for non-residential external term deposit is, and additional rate of interest whether it is applicable to the staff. So the maximum period for which the term deposit in the NRE category is 10 years, and there is no additional rate of interest to the staff. What are the accounts that a tourist visiting India can open? So a tourist visiting India can open only NRO account, non-resident ordinary account. So here basically we need to understand what is the difference between the NRO and the NRE account. Basically, NRO account is for the local legitimate credits. It is for the local credits. When we talk about the NRE account, it is basically for the inward remittances from abroad. So if a customer is going abroad, so immediately after getting the information, we should change the status to non-residential, and the existing SB account to be converted to the NRO account and not to NRE account. And a fresh NRE account can be opened for getting the inward remittances. In this case, if NRO account is opened for tourist visiting India, the maximum period for which it should continue is 6 months. Before 6 months, it should be closed and the amount should be repatriated. If not closed within 6 months, then RBI approval is required. So whether NRI can be joint holder in residents, SB, EEFC, RFC, exchange earners, foreign currency account, resident foreign currency account, whether the resident can be a joint holder? Yes, resident can be joint holder, but here the operating instructions should be former or survivor. Can persons resident in Nepal and Bhutan have accounts in India? If yes, then what type of accounts? So for the persons resident in Nepal and Bhutan, they can have accounts in India, but only normal SB account, and we should not open NRO account for them. Can a Bangladeshi, Pakistani national or an entity owned, controlled from Bangladesh and Pakistan have an account in India? Yes, they can have account in India, but the condition is that with RBI permission and valid visa, we can open the accounts. Can NRIs, PIOs residing abroad open NRI account from overseas when they are unable to visit the local branch? Yes, they can open. Here in this case, attestation from foreign embassy or local branches required. They can open the accounts on getting the attestation. Should all the NRIs desirous of opening joint accounts be residing in the same country? Let us say if one person is residing in US, one is in Australia. So whether they come together and open the account, yes, it is possible. So NRIs residing in different countries can also open joint accounts. It is permissible. What operations by power of attorney holders in the NRE accounts are restricted? There are some powers given to the power of attorney holder, but there are some restrictions attached to that. So what are those restrictions? First is the power of attorney holder cannot open the NRE account. They cannot close the NRE account. They cannot gift. They cannot gift from the NRE account, and no third party remittance to be allowed. Remittance can be done only to the NRI customer and not to any other third party. This has to be taken into considerations whenever we are getting the power of attorneys from our NRI customers. What is the interval at which periodic updation of KYC for NRI customers is to be done? So the interval is 2 years. Every 2 years, the periodic updation of KYC for the NRI customers has to be done. If a person, foreign citizen, is the spouse of an Indian citizen, they are considered as person of Indian origin. Sonia Gandhi is one of the examples of person of Indian origin. She is having the resident of Italy, married to Rajiv Gandhi, who was a resident of India. So she is called as person of Indian origin. NRIs having business interest in India may open dash account for handling bona fide business transactions. So in case of business interest, NRI can open SNRR account, special non-resident rupee account. And the maximum time limit fixed for the SNRR account is 7 years. Or for the purpose for which it was opened, for that bona fide business purpose, whichever is less, either 7 years or for the purpose, bona fide business purpose, the duration for which it was opened, whichever is less, it has to be closed within that time frame. If not closed within 7 years, then here for renewal, RBI approval is required. In case of FCNR, foreign currency non-resident account or NRE deposits, joint account with a resident, close relative may be permitted. Yes, it is permitted, but here we have to take into consideration the operating instruction as former or survivor. Which category of branches cannot open NRO capital gains account? So, rural branches are not permitted to open NRO capital gains account. Loans against NRO capital gains account is permitted or not? So in the lines of the normal capital gains account, in that account also loans are not permitted. So in the same lines, the loans against NRO capital gains account are not permitted. The currencies in which the FCNRB, foreign currency non-resident bank account, can be opened in our bank. So total, there are 8 currencies in which we can open FCNRB account. What are those currencies? US dollar, Australian dollar, Canadian dollar, Singapore dollar, Great Britain pound, euro, Japanese yen, and Swiss franc. So in this 8 currencies, FCNRB account can be opened. What is the threshold level for reporting under FATCA? So FATCA is basically Foreign Account Tax Compliance Act. It is applicable to the US citizens who are staying abroad or the green card holders of US. Basically, all the financial institutions, many countries have signed a treaty with US where there has to be compulsorily reporting of the assets of US citizens who are staying abroad and the green card holders of US. So there is a threshold below which the reporting is not required, but when the amount crosses 50,000 US dollars, this is the threshold. If their asset crosses 50,000 US dollar, then reporting under FATCA is required. Now, how much currency component of FX in respect of travel to the various countries? So what are the currencies, what are the amount of the currencies one person can carry in respect of travel to, let's say, Iraq? So for Iraq, it is permitted as 5,000 US dollar. For Iran, it is permissible at 250,000 US dollar. So basically 250,000 US dollar, it is the maximum permissible limit as per the LRS, Liberalized Remittance Scheme. So full amount can be taken in the form of currency. For Bhutan, the eligibility is 0. And for the other countries, apart from the 3 countries, the limit is 3,000 US dollars. RBI has permitted resident individuals to open the following 3 types of foreign currency accounts. So a resident individual can open foreign currency accounts. And what are those types? So basically, resident individuals can open resident foreign currency account, resident foreign currency domestic account, and exchange earners foreign currency account. So what are these accounts? We will be seeing in the upcoming slide. Maximum number of diamond dollar accounts permitted is 5. Okay, so quickly we will see what are the deposit accounts for non-residents Indians which can be opened by the banks. First is NRE account. It is basically a rupee denominated account which both NRIs as well as PIOs can open. It can be held in the form of savings, current, recurring, or FD. It is totally repatriable. When we say repatriability, it means money again moving to the country from where it was generated. Joint account with resident possible on former or survivor basis. If you talk about the NRO account, as we discussed, it is for the local legitimate credits. It is also maintained in rupee. Non-resident Indian can open either savings, current, recurring, or FD. Repatriation, the most important thing here is repatriation is not fully allowed. Here the repatriation is allowed only up to 1 million US dollar per individual per financial year. Only after obtaining Form 15 CA and CB. Now what is Form 15 CA? Form 15 CA is basically an undertaking from the customer that yes, I have paid the taxes, and Form 15 CB is a certificate from the chartered accountant that yes, the person has paid the respective taxes in India. Again, it can be held jointly with resident on former or survivor basis. SNRR account already we have discussed. Again, it's a rupee denominated current account which is opened for business purpose. FCNRB account, foreign currency, it is denominated in foreign currency as the name suggests, foreign currency non-resident bank account. It can be opened by NRIs and PIOs, but here the minimum tenure is 1 year and the maximum tenure is 5 years. It is fully repatriable. Jointly can be held with the resident on former or survivor basis. Okay, now we have seen in the earlier slide deposit accounts for non-resident Indians. Now we will see deposit accounts for residents. First is EEFC account, Exchange Earners Foreign Currency account. It can be opened by exchange earners. When we say exchange earners, they are nothing but the exporters. It is a non-interest bearing and it can be credited with 100% export earnings. It allows the exporters to keep funds in the forex, foreign currency, for meeting the future expenditure. And it can also be used for current and capital account transactions. Now, what are current and what are capital account transactions? So basically, as per FEMA, if you talk about the capital account transaction, basically whenever there is an alteration in the assets or liability of a person resident in India, outside India, or whenever there is alteration in asset or liabilities of a person resident outside India, in India. Apart from these transactions, all other transactions are current account transactions. So our imports and exports also comes under the current account transactions. The various outward remittances for medical treatment, for education, for the survival of our family members like mother, father, children, they will all come under the current account transactions. Next is RFC account, resident foreign currency account. So basically again it is a non-interest bearing account. And what amount can be credited? Unspent amount of foreign exchange acquired from AD category banks for travel abroad, gift from close relative, forex received as a payment, service, gift, honorarium for all the permissible and current and capital account transactions, it can be utilized. One more account is there, RFC account. So basically, the main difference between the RFCD and RFC account is that this account can be opened by the individuals whenever there is a change in the residential status. Let us try to understand. If a customer who has gone abroad, we have changed the residential status immediately. We have not waited for 182 days because that criteria is as per the Income Tax Act. If the same person is coming back to India and intention is to stay for an indefinite period, again what we will be doing? Either we can close the NRE account and funds can be transferred to NRO and later on the NRO status to be changed to normal SB account, or what can be done? Whatever the amount is there in the NRE account, they can be converted into foreign currency and it can be held in the RFC account. We have also discussed on diamond dollar account, 5 accounts are permitted. So basically, what are diamond dollar accounts? These are basically accounts which can be opened by firms and companies who are eligible under the foreign trade policy. It's a non-interest bearing account. In this account, export proceeds as well as local sales in dollars can be credited. The purpose is rough, cut, polished diamonds, both pre and post shipment finance availed in USD can also be credited to such account. And this can be utilized. Let us say if a exporter who is exporting diamonds, he might import rough diamonds, he will make some cuttings, he will make some processing on that, and then after that he will be exporting to the other country. So to make payments for the imports of raw diamonds, amount can be utilized from the diamond dollar account. LRS, liberalized remittance scheme, is available to resident individuals for what purpose? LRS is basically liberalized remittance scheme. The maximum limit allowed is 2,50,000 US dollars or equivalent of any other foreign currency. So this limits can be utilized for both current capital or a combination of both. So an individual can utilize the LRS limits for current capital or a combination of both. A returning traveler is permitted to retain traveler's check and currency, foreign currency up to 2,000 US dollars. Person surrendering foreign currency more than 5,000 USD or foreign currency or traveler's check more than 10,000 US dollar, they should submit currency declaration form, CDF form with the custom authorities. Branches operating on the nostro accounts maintained by the treasury branch are called as category B branches. So there are three categories of branches. Category A. Category A branches are those branches who are maintaining independent nostro account with the foreign correspondents. So our treasury branch Mumbai is a category B branch who is maintaining independent foreign currency account with the foreign correspondents. So category B branches are those branches who are operating on the nostro accounts maintained by the treasury branch. These branches are also called as the authorized branches for forex business. In our bank, branches who do not handle foreign exchange transactions on their own, they are called as category C branch, also known as non-authorized branches. So whenever the transaction pertaining to either imports, exports, remittances will come to such type of branches, they will be handling the transactions through the nearest authorized branches. All transactions taking place in nostro account will be reflected in dash account for reconciliation purposes. So there is mirror account. Mirror account is nothing but it is a reconciliation account held at category A branch, that is treasury branch Mumbai. So it is a reconciliation account. It is a reflection, it is a mirror of the nostro account. So whenever the transaction like credit happens in the nostro account, so it will reflect as a debit in the mirror account. And similarly, whenever there is a debit in the nostro account, it will appear as a credit in the mirror account. So it is basically for the reconciliation purpose. FEMA 1999 was introduced in India with effect from 1/6/2000. So prior to FEMA, there was FERA, Foreign Exchange Regulation Act. So basically, why FEMA was introduced? Because FERA was a draconian act. Whenever there was a violation in any of the laws, it was treated as a criminal offense. Whereas in FEMA, if there are violations in the operational aspects, it will be treated as the civil offense. There is a clear-cut distinction between what is a current account transaction and what is a capital account transaction under FEMA. Earlier in FERA, there was no such clear-cut distinction. Residential status has been clearly defined under FEMA, as we have seen if you talk about the NRI. So it's a person whose intention to stay abroad for an indefinite period. So such kind of additions were there in FEMA, and it was introduced in India with effect from 1st of June 2000. Latest version of UCP, Uniform Customs and Practices for Documentary Credit. Basically, it contains all the rules and regulations pertaining to the LC business. So the latest version is 600 and effective from 1st of July 2007. Number of articles in UCP 600, it is 39 articles and effective from 1/7/2007. Who is the authority to compound the contraventions under FEMA? So here we have to understand what is compounding. As we discussed under FEMA, the violations, the operational violations are considered as civil offense. So whosoever person has done that, they should feel guilty and they should plead that yes, I have done the violation, kindly regularize my violation. So this power has been given to RBI. Under FEMA, RBI can compound. Here, compounding means regularizing the violations. So RBI has been empowered to regularize the violations under FEMA. Schedule 1, Section 5 of FEMA current account transactions, it deals with the prohibited items. There are 3 schedules, out of which first schedule deals with the prohibited items. In our bank, interbank transactions are undertaken only by, when we say interbank transactions, there are 2 types of transactions. One is interbank transaction. As the name suggests, it is basically the transaction between the 2 banks. Another transaction is merchant transactions. When the customers are involved, the importers and exporters are involved on one side, and on the other side, bank is there. So the transactions between both of them will be called as merchant transactions, which can be undertaken by our category B branches, forex authorized branches. So here, the interbank transactions can be undertaken only by our category A branch, that is Treasury branch, Mumbai. Transactions where the exchange of currencies take place on the second succeeding business day. So there are various settlement dates. So here when you talk about the second succeeding business days, it is called as spot. Transaction date plus 2 days. There are various other terminologies like cash. So when we say cash, the settlement of the currencies takes place on the transaction day itself, T plus 0. The day when the transaction is hit, same day the settlement of the currencies or exchange of the currencies will happen. When the exchange takes place on T plus 1 basis, it is called as TOM. TOM here stands for tomorrow. And when the settlement happens on T plus 2 days, so it is basically spot. If the settlement takes place after T plus 2 days, it is called as forwards. SBI's JPY account with a bank in Tokyo will be a dash account for Indian bank. So here we have to first understand the Nostro account. When we say Nostro account, it is basically account maintained with a foreign correspondent in foreign currency by Indian bank, called as Nostro account. Similarly, if the foreign bank is maintaining account with Indian bank in INR, it is called as the Vostro account. But here in this case, SBI's JPY account with a bank in Tokyo will be a Nostro account for State Bank of India. But when Indian bank will be using that account, it will be called as Loro account for Indian bank. Exchange earners can retain dash percentage of foreign currency received in exchange earners foreign currency account. So we have seen what is EEFC account. So exchange earners can retain 100%. 100% they can retain, but whatever amount, let us say, if received in the month of January, in the succeeding month, last business day, last forex business day, it has to be converted into INR. This is one condition to be followed. What are the different types of EEFC account can be opened? This already we have seen. So what are those accounts? It can be opened only in the form of current account. EEFC can only be opened in the form of current account, and no interest is to be paid on this accounts. Is there any restriction on withdrawal of rupees from the funds held in EEFC account? No, there is no restriction, but one condition needs to be adhered. amount withdrawn in rupees, it shall not be eligible for conversion into the foreign currency. Whatever withdrawal has been done, it cannot be again converted into foreign currency and for recredit to the account. This is not allowed, but yes, there is no restrictions on the number of withdrawals. Withdrawals can be made for n number of times, but this condition to be followed. Who can open EEFC account? So all categories of foreign exchange earners such as individuals, companies who are resident in India. Important thing is resident in India. NGOs can receive donation from foreign donors as per the Foreign Contribution Regulation Act 2010. In case of an NGO who receives donation from foreign, whether prior approval from Home Ministry is required for change in board members more than 50%. Here in this case, no prior approval is required, but online intimation through the portal is enough. Supplies to projects funded by United Nations agencies is called as deemed exports. So first we understand what is meant by deemed exports. As we are aware that whenever export is happening, let's say from India, so equivalent amount of foreign exchange should come to India. But in this case, let us say if it is a big project happening in India, where the funding has to come from United Nations. So here one condition is fulfilled that yes, the money is coming from outside India, but here the supplies will be in India only. The goods will not move out from the country because the implementation, the execution of the project is happening in India. So here in this case, funds has come from outside, one condition is met, but as the project itself is executing in the home country, so this mechanism, this phenomena is called as deemed exports. Import remittances for goods should be completed within dash months from the date of shipment. So here we meant by import remittance means the money should go out from the country. So the maximum time frame is 6 months. In 6 months, the import remittances for goods should be completed from the date of shipment. But in case of capital goods, the time limit is 3 years. The time limit allowed is 3 years. ECGC premium on whole turnover packing credit. So there are two types of credit given to the exporters. One is packing credit, also called as pre-shipment credit, and another one is post-shipment credit. So here the premium paid to ECGC is 10.5 paisa per 100 per month, and this premium is to be paid by the customer. When we say packing credit, it is basically for purchase, processing, manufacturing or packing of goods prior to shipment or for working capital expenses. ECGC premium on whole turnover post shipment advances is 5.5 paisa per 100 per month, and it has to be borne by the bank. Maximum liability cover under ECGC whole turnover packing credit for our bank is 600 crore. So it's from 1723 to 3624. Similarly, maximum liability cover available under ECGC whole turnover post shipment credit available to the bank is 350 crores. Again, the same dates 1723 to 3624. Import bill of entry follow-up is nowadays done through the IDPMS, and for the exports it is EDPMS. As for the country risk policy of our bank, The classification which we are following is based on the ECGC classification given by Export Credit Guarantee Corporation. We are following the country risk classification as per the ECGC. Loan against checks, drafts representing the advance payment is nothing but your pre-shipment credit. Government of India approved the interest equalization scheme in respect of pre and post shipment credit for exports up to, and what is the rate. So basically this is the scheme by Government of India. It can be understood in a similar way like interest subvention scheme to maintain the competitiveness of the Indian exports. So basically this scheme has been extended till 30th of June this year, and 2% is the interest equalization for other exporters, and for the MSME manufacturer exporters, the interest equalization is available as 3%. How much additional allocation Cabinet has approved for this interest equalization scheme? So additional allocation approved is 2,500 crores. Advance payment for import of goods may be permitted by AD banks up to how much amount? It is $5 million US. Till this amount, advance payment can be made for the imports of goods by the AD category banks. ICC is headquartered at Paris. In order to hedge the exchange risk prevalent in foreign exchange business, our loan policy insists for obtention of forward cover. So basically to hedge the foreign exchange risk, forward cover has to obtain for various importers and exporters. Prior approval for RBI should be obtained by authorized dealers before issuance of performance guarantee for advance for exports in respect of caution listed exporter. So as we understand that exports, whenever exports are happening, so equivalent amount of foreign currency should come to the country. If the exporters failed to realize the export proceeds even after 2 years, then on the recommendation of the authorized dealers, it is caution listed by the RBI. So here in this case, whenever we are issuing performance guarantee for advance for exports, prior approval of RBI is required. Proposals for issuance of guarantees in favor of financial institutions. So when we say financial institutions, it can be banks. So guarantees in the favor of financial institutions, it forms the part of interbank exposure. So it is permissible only by the corporate office. For a bank, non-fund based facilities are main source for improving the non-interest income. A contract of guarantee is a contract to perform the promise or discharge the liability of third person, and when bank is involved, it is called as bank guarantee. Application of funds in case of nostro credits to be made within dash days. So the maximum permissible time by which the nostro credits should be given to the customer's account is T plus 5 days. And for the nostro debits, the time frame allowed is T plus 1 day. Overseas direct investment, FDI and ECB transactions in India are governed by FEMA. RBI depends on the data available in dash for caution listing the exporter. So RBI will take the data from EDPMS, Export Data Processing Management System. Issuance of solvency capability certificates is basically we are issuing on the basis of tangible net worth. World ranking of LC opening bank and the country rank should be verified from where? So it should be verified from Bankers Almanac. And what are the conditions for adding confirmation? When we say confirmation, so basically whenever the LC will be issued by the LC issuing bank, and if the exporters feels that the LC issuing bank is relatively a smaller bank, or there is a sovereignty risk in the country where the issuing bank is situated, in that cases exporters may demand that I need a confirmation from another bank, let us say in my country. So in that case, confirmation to be given wherever the issuing bank falls within the 500 ranking, and the country ranking should be within 10 as per the Banker's Almanac book. Delegation of powers for permitting advance remittance in respect of merchanting trade. So when we say merchanting trade, basically let us say if the exporter is in US and importer is in Australia. So if the goods are moving from US to Australia, where the middleman is in India. So what happens? Let us say if the trade is for $1,000, the customer, the seller in the US is supplying the goods at $1,000 to the Indian intermediary, and the intermediary will be selling this at, let's say, $1,100. So this 100 will be the commission or the profit for the Indian intermediary. So such type of trades are called as the merchanting trades. So here the delegation of powers are same as the other advance remittances. Reasonable time for acceptance or refusal of documents under UCP is 5 banking days. This is the maximum time limit available for the issuing bank to check the accuracy of the documents under the UCP. In case of export of goods in physical form, the date of export means, here the date of export means the date of shipment. If the expiry date of LC is, let's say, 15th of December 2023, so it is the last date for what? It is the last date for presentation of documents to whom? To the nominated bank, from where the payment will be made to the exporter. Proceeds of goods and services exported by status holder exporters. When we say status holder exporters, these are basically the big export houses who are instrumental in achieving maximum exports for the country, and they are given certain criteria like 1 star, 2 star, 3 star, 4 star, 5 stars. So depending upon the export turnover in US dollars, exporters are categorized under various categories from 1 star to 5 star. So for them, the maximum time period for proceeds of goods and services exported by the status holder exporter are required to be brought into India. Again, here also the time limit is 9 months, which is available to the normal exporters. The same time limit will be applicable to the status holder exporters also. So within 9 months, the proceeds of the exports should be brought back into India. Bank of America, New York, maintaining a rupee account with a model branch is account called as Vostro account. TCS on LRS, liberalized remittance scheme, the threshold limit is 7 lakhs. IFSC banking unit of our bank is situated at Gift City, Gandhinagar, Gujarat. So it is basically foreign branch on Indian soil. Threshold limit for card rate transactions in US dollars is 10,000 USD. Import advance remittance in respect of PSU may be permitted by AD banks without guarantees and standby as per our domestic forex policy. It is permissible up to 1 lakh USD. And for import advance remittances in respect of other than PSU, it may be permitted by the AD category banks without the guarantee and standby up to 2 lakh US dollars. As per our bank's policy, domestic forex policy, who is the delegated authority for affecting advance remittance against import of goods above 2 MIO USD or its equivalent and up to 3 MIO USD or its equivalent without SBLC or guarantee. So basically the power rests with GM, IBD. And between 3 to 5, it rests with call CC, GM. Declaration in respect of software exports is to be done in the SOFTEX form with the custom authorities. Revaluation of foreign currency assets and liabilities is being done periodically as per the accounting standard 11. So as per the accounting standard 11, revaluation of foreign currency assets and liabilities has to be done periodically by the banks. Bank acquiring INR from the customer for exchange of foreign currency, it is basically a sell transaction. When we say bank acquiring INR, it means that bank is selling, let us say, foreign currency. So whenever we say the sale purchase transaction, it has to be from the point of view of the bank. So here, bank acquiring INR, it means bank is selling USD or let's say any other foreign currency. So it's a sale transaction for the bank. In respect of two-way quotations, type of quotes given by the market maker. When we say market maker, so market maker is those who will give two-way quotes, bid and offer, means purchase and sale. So let us say if the market maker is giving a quote of let's say 83.20 and 83.23. So he is ready to buy dollar at 83.20 and he is ready to sell dollar at 83.23. Pre-shipment credit in foreign currency, it is also called as PCFC, packing credit in foreign currency. Maximum period for which pre-shipment finance at concessional rate can be extended is 360 days. After which, for the overdue period, ECNOS rate will be applied. Export credit not otherwise specified. And if exports not at all happening, then commercial rate should be applied. Advance against bill sent on collection basis. So bill sent on collection basis is nothing but post shipment credit. Exports made to warehouse situated outside India. Here the realization period permitted is 15 months. When we say exports to warehouse means it is not directly going to the party, to the buyer, wherever it is going to the warehouse, from where the later on it will be given to the importers. So here the maximum realization period permitted is 15 months. As per the RBI guidelines for import of aircraft, the maximum amount that can be remitted by AD banks as advance remittance is 50 million US dollars. Banks can have access to information in the Indian Customs EDI, Electronic Data Interchange System, through the portal. That portal is called as IceGate. So IceGate stands for Indian Customs Electronic Data Interchange Gateway. It is the national portal of Indian Customs of CBIC, Central Board of Indirect Taxes and Customs. This platform provides e-filing services to the trade, cargo carriers and other trading partners electronically. Settlement of forward contract, how does it take place? Exporters will book the purchase transaction. See, when we say forward contract, what does it mean? Let us say if the exporters has done the exports and if the realization is, let's say, after 2 months. So exports done in the month of Jan, realization in the month of March. When the exporter feels that the rupee may go down in the March, so it will hamper the converted INR value. So whereby the exporter can enter into export contract, purchase here, exporter will sell the foreign currency to the bank and bank will buy the foreign currency. And on the due date, what will happen? the inward remittance. As the export is done, so inward remittance will be there. So inward remittance is received towards the realization of the export bills or the documents which are tendered on the due date, and the exposure is adjusted. If you talk about the import transactions, in import, what the importer will do, importer has to make payment in foreign currency. So ultimately he will buy foreign currency from the bank. So it will be a sell transaction for the bank. So here on the due date, the ED branches, they will utilize this forward sale contracts and they will debit the customer account and remit the bill amount to the overseas supplier bank. Now it may happen that there can be early delivery or early utilization of the forward contract, both in terms of purchase as well as sell. As we discussed one example that exports happening in the month of Jan and the exporter is telling that realization will be done in the month of March. What happens if realization is done on the same month, let us say in January? So in this case, there will be early delivery. So when customer utilizes the forward contract on a date earlier than the contracted date or the option period which is permitted as per the FEDI guidelines, so in that case, what will happen? It has two implications. There will be a swap difference and there will be the cost of funds. It can be either inlay or outlay. Let us understand this. When we say swap difference, what does it mean? On early delivery or utilization of the contract, while effecting the transaction at the originally contracted rate, so the bank is required to do what? For purchase transaction, the bank will enter into sell by swap. And for the sale transaction, the bank will enter into buy sell swap to reverse the position. For the residual period, up to the original maturity date. For what purpose? To reverse the original swap which was done at the time of booking the contract. So this reversal will be done at the prevalent market rates on the date of early delivery or utilization as the case may be. Now here, due to the entering of the another swap, the swap difference may arise. So the swap difference will be paid on a sell by swap for purchase transaction and is recovered from the customer. Whatever the swap difference bank is paying on a sell by swap for purchase transaction, it will be recovered from the customer. And whatever the difference received on buy sell swap for sale transaction, it will be passed on to the customer. Now, in case of early delivery of forward purchase or sale contracts, bank needs to recover. Yes, the bank needs to recover the swap cost or the outlay of funds, and the bank has to pay the swap gain or inlay of the funds to the customer. When we say inlay of funds, what does it mean? For the purchase transaction, here purchase transaction means the bank is purchasing foreign exchange. So here when the originally contracted rate is less than the current spot rate, let us say if the original contracted rate is 83.40 and if the current spot rate is less than 83.45, so in that case the amount will be paid to the customer. And for the sale transaction, when the bank is selling foreign exchange, in this case the originally contracted rate, if it is more than the current spot rate, if the current spot rate is let's say 83.20 and if the originally contracted rate is let's say 83.25, so in this case the amount will be paid to the customer. And what is outlay of funds? Again, for purchase transaction, when the originally contracted rate is more than the current spot rate, in this case there will be outlay of funds for the bank, so this amount will be recovered from the customer. Again, in case of sale transaction of foreign currency, when the originally contracted rate is less than the current spot rate, in this case, amount will be recovered from the customer. When we say originally contracted rate, so it was the rate decided at the time when the first contract was entered. And when we say the current spot rate, at the time when the early utilization or delivery of the contract will be done. What is the rate applied? Now we have seen what is swap difference, what is inlay and outlay of funds. So what is the rate applied for inlay and outlay? If we talk about the inlay of funds, the rate applicable for the domestic term deposit for the appropriate lower slab of the residual period. So whatever the residual period is there, the lowest slab of the domestic term deposit rate will be applied and it will be simple interest. For the outlay of the funds, MCLR for the appropriate higher slab. Now here it is higher slab. Higher slab of the residual period plus spread of 400 basis points means 4% will be applied. Rupee denominated masala bonds can be issued under automatic route. There are two types of routes. One is automatic route, one is approval route. When we say approval route, it is basically approval from the government is required. Whenever any foreign investment is coming into the country, it may take the automatic route, it may has to go to the approval route. So here it is 50 billion INR per annum masala bonds can be issued under the automatic route. When we say masala bonds, what are masala bonds? It is rupee denominated bonds that Indian entities issued outside of India. The primary liability to pay under an LC arrangement, it lies with the LC issuing bank. This is nothing but the importer's bank. What is the rate prescribed by FEDI for clean inward outward remittances? So here, in case of clean inward outward remittances, it is for clean inward remittance, it is TT buying rate. For clean outward remittance, it is TT selling rate. Now, in case of bills, in case of foreign currency bills, whenever it is purchased, discounted, negotiated, at which rate? So it will be done at bill buying or the contracted rate. Retirement of import bills, it will be done at bill selling rate or the contracted rate. So thank you, friends. This was all from my side. I wish all the participants very best. They should give their 100% in the written test and they should come out with the flying colors. I once again thank our Officers Association and our Image for giving us the opportunity to present or to give a one-day training to all the officers in scale 1, 2, and 3. Thank you, friends, and all the best for the written exam. Thank you.
Sir, you can start, sir.
Manish sir, respected participants, I am Umesh Joshi and I am from Staff Training Center, Noida, friends. And the topic that has been given to me is the risk management. So basically, this session would be more of a conceptual base. They may not be MCQs. My intention will be to have the conceptual clarity to you. So my session I have divided into 6 parts basically. So with the introduction, I will discuss about what is risk and what is the business model of the banking business. Then various types of risk in banking. Then we will have the Basel 1, Basel 2, Basel 3. We'll discuss about the background, 3 pillars, capital conservation buffer, liquidity coverage ratio, net stable funding ratio, leverage ratio, systemic domestic important banks. Then at last, we'll discuss about the credit risk management policy of the bank, including latest amendment, friends. So we'll start with the risk. What is risk basically, friends? If we know the definition of banking basically, as per section 5B of Banking Regulation Act, friends, banking means acceptance of deposit for the purpose of lending and investment. So the very definition of the banking tells us that there is risk in banking. So from the risk perspective, friends, the business of the bank can be classified into 3 parts: the banking book, the trading book, and the off-balance sheet exposure, friends. So what is banking book, friends? Banking book means all your deposits, all the borrowings, that is a part of your banking book. And what is trading book? Basically, trading book consists of those assets that can be traded in the market. So that is our trading book, like our investment are there. And then we have the off-balance sheet exposure. So what is off-balance sheet exposure? Where the bank has given the commitment, certain commitments, like the LCs, like the BGs, and so on. So this is the from risk perspective. These are the classification of banking business. If you see the balance sheet of a bank, friends, around 80 to 85% of the asset side of the bank, it generates income or it contributes income to the bank. Whereas if you see the liability side of the balance sheet of a bank, around 90 to 95% of the liability side of a bank has a cost associated with it. So it's an average. It may differ from bank to bank, but on an average, around 80 to 85% of the asset side of a bank generates or contributes to the income, while around 90 to 95% of the liability side of a bank balance sheet has a cost associated with it. So the difference of 10 to 15 exposes the bank to various kind of risk. In the same way, if you see the income statement of a bank, out of total income, around 80 to 85% of the income of a bank comes from the interest income, which eventually affects the bottom line. So if there are increasing NPAs, so automatically it will affect the 80 to 85% of the interest or the income part of the bank. So definitely there will be loss to the bank. So we can say the business model of a bank is such that it is always exposed to bank risk. We all know that banking is a highly leveraged business. Deposits are the main sources. Investment and loans are the main deployment. So there is always risk in banking, and the question is whether bank can avoid the risk. Yes, definitely bank can avoid the risk, but it is not that we will not take the risk, because we as a banker, we have to take risk, because if you do not take risk, then we are losing the opportunity. So that's why taking risk is inevitable. But the real question is how to mitigate the risk. So when we quantify the risk, friends, so quantifying the risk means it is basically the quantification of risk is nothing, it is the loss. So whatever loss is there due to the risk, that of course that may be a expected loss or an unexpected loss. Expected loss that we can calculate it. And unexpected loss is over and above the expected loss. So we'll deal it later on. So basically, the ultimate result of risk is basically the losses. They may be expected, they may be unexpected. Since the time constraint is less, so I have to cover a lot of things. So many a times I may have to go a little bit fast, friends. So from risk point of view, the risk in banking may be divided into 2 parts. One is the financial risk and second is the non-financial risk. So friends, what is financial risk? Basically, this risk comes into existence due to the financial transaction between the bank and the customer. It may be a deposit holder, it may be a borrower, but there is a financial transaction. So that we use the word financial risk. and it have other variants like the credit risk, like the market risk, like the liquidity risk. Second risk is non-financial risk. Basically here, there is no direct interaction of, or there is no financial transaction between the bank and the customer, but of course there is a risk. In the non-financial risk, we have the operational risk, we have the legal compliance risk, we have the reputational risk, we have the strategic risk. Basically, it's not that it's only the classification. There are various classifications. Sometimes you will find the systematic risk, non-systematic risk. So many types of risks are there. But generally, from a risk perspective, financial risk and the non-financial risk are the main two types of risk. And then we have the sub-risk. Now we will discuss one by one. In the credit risk, as the name suggests, that is risk of the counterparty. So the credit risk is again divided into two parts. One is the transaction risk, one is the portfolio risk. So when I say transaction risk, friend, so transaction risk is basically whenever there is a problem with the borrower, basically. That is a transaction risk. Second variant of credit risk is portfolio risk. So it is basically dealing with the portfolio. In transaction risk, again, we have various types of credit risk. One is the default risk. So basically default risk, as you all know, it is nothing. It is the unableness or the unwillingness of the borrower. That is default risk. And when we quantify it, it becomes a probability of default. Second type of transaction risk, that is the credit transaction risk, is the credit spread risk. So it may be that the borrower is good, but there is a downgradation in the rating. So that risk is called as credit spread risk. Then we have the recovery risk. So recovery risk is basically there is a problem of recovery post default. That is called as a recovery risk. Then we have something called as exposure risk. So exposure risk is how much exposure I have at the event of default, which in banking terms we use the word loss given or exposure default. Then we have the maturity risk. So these are all variant of the credit risk under transaction risk. Maturity risk means, as you know, longer is the maturity of loan, longer is the risk. So that is your maturity risk. So these are transaction risk. Then next is your portfolio risk. As the name suggests, it is portfolio. Basically, it is at the portfolio level. So in portfolio risk, we have two risks: systematic risk and the concentration risk. So systematic risk is basically there is a whole macroeconomic negative variables are there. Some problem at the macroeconomic level. That is called a systematic risk. So whenever there is a problem, ultimately it is the credit loss which is the ultimate result of the systematic risk. Then we have the concentration risk. So when we are concentrating, we are giving loan to a particular sector. So that is called as concentration risk. That's why our credit risk management policy, we have certain threshold that what is the exposure limit in a particular sector. So that is nothing. That is a mitigation of concentration risk. So these are various different type of credit risk. Apart from this, there are two other credit risks which is not on the slide. One is the country risk. That is very famous risk. So whenever there are certain rules and regulations and imposed by a certain country, or whenever there is a problem with a certain country, so that risk is called as country risk. And there is a risk called as counterparty risks. But basically that is more of basically a market risk than a credit risk. Coming to this, friends, because we know that basically from Basel perspective, there are three risks: credit risk, market risk, and operational risk. Of course, there are other risks also. We will come to that later on. So credit risk I have completed. Now it is a market risk. So what is market risk, friend? Basically, market risk is change in the market portfolio due to adverse market variables, negative changes in the interest rate and so on. So that is called as market risk. So basically, our trading book is exposed to the market risk, friend. And market risk is again divided into various subcomponents. We have something called as interest rate risk. So you must have heard about that. Whenever the interest rate goes up, the yield on the bond goes down. So that is nothing. That is interest rate risk. Now again, interest rate risk it can be in trading book, it can be in banking book. So when we are talking about market risk, there the interest rate is basically related to the trading book. Trading book means the investment of the bank. Okay, like the yield and the interest rate are inversely proportional. So that can create some problem for the bank. Then we have the liquidity risk. Again, liquidity risk can be associated with the banking book as well as the trading book. So liquidity risk in trading book means there may be some problem in a bank to sell the investment. So the problem may be with a particular investment, that is called as asset liquidity risk. or the problem with maybe with the market, that is called as market liquidity risk. So this is the liquidity risk in the trading. Then we can have the forex risk. So any risk due to the adverse movement of the foreign exchange rates, that is forex risk. Then we have the equity price risk. Any negative variation due to the negative changes in the equity prices or indexes, so that is equity price risk. Then we have the commodity risk. So commodity risk is basically negative variations in the commodity price. Of course, banks are not permitted to take proprietary positions in the commodity, but that is a part of market risk, friends. Coming to the third risk, which is the operational risk. So what is operational risk? Nothing. It is a risk associated with PPS, process, people, and system. So operational risk means processes, people, and system. It has three subcomponents. One is the transaction risk. Now, one transaction risk was credit risk. Now, this transaction risk is a part of operational risk. This transaction risk basically means there may be some frauds, internal or external. So that may result in a loss to a bank. So that is a transaction risk under operational risk. And then we have the compliance risk also. So you all know that RBI many a times penalizes banks. So because of the non-compliance of certain terms and conditions. So that is compliance risk. Then apart from these risks, there are other operational risks also, like fraud risk, like the communication risk, documentation risk, competence risk, model risk, cultural risk, external event risk, system risks. These are all the other variants of operational risks. Now, apart from these risks, credit risk, operational risk, market risk, there are certain other risks which are also very dangerous to bank. And the most dangerous risk for a bank is the liquidity risk. And very surprisingly, up to Basel II, this liquidity risk was not being taken care by the bank. Only when the Basel III came into picture, then this liquidity risk was taken care by the regulator, that is the BCBS. And of course, in India, we have the RBI. So liquidity risk means, because as I told you, that bank's balance sheet is highly leveraged. So there is always a liquidity risk. 40% of my deposit CASA, and most of the loan is of long-term loan. Infrastructure loan, 15 years, 20 years, housing loan, 30 years. So there is a maturity mismatch. That is liquidity risks, which I'm talking about here. So liquidity risk can be a funding risk. Funding risk is that there may be certain positions that some premature withdrawal of deposit may happen. So that creates a funding gap, and that creates a liquidity problem to the bank. So that is a funding risk under liquidity risk. Then there is a time risk. Loans are not getting repaid timely. So that is creating a risk, liquidity problem. So that is time risk. Then there is something called as call risk. The contingent liabilities are being crystallized. So that is creating a liquidity problem to the bank. So that is called as call risk. So this liquidity risk is basically related to the banking book. And some moments back, I told you the liquidity risk in the market risk also. So liquidity risk had two variants. Liquidity risk in the market, that is a trading book, and the liquidity risk in the banking book that we are now discussing. Okay. Next is the interest rate risk. Now, interest rate risk has various variants, something called as gap risk. It may happen that a loan of 2 years is funded from a deposit of 6 months. So what will happen? During the 2 years, this deposit will be repriced 3 times. And if the interest rate goes high, then it will create problem to the bank. So this is called as gap risk. Basis risk is that whenever asset and liabilities, they are based on different benchmarks. So and whenever interest rate changes, so that creates a problem to the bank. So that is called as basis risk. And third variant of interest rate risk is embedded option risk. So whenever given option, call option, suppose a customer prematurely withdraws the FD. So that is basically that can, and suppose the interest rate goes high. So what the depositor will do, it will prematurely withdraw the deposit and then he will reinvest it. So that is the bank will incur a loss. So that is called as embedded option risk. Then there is a yield curve risk, which is also part of interest rate risk. Yield curve on the horizontal you have the time period, on the vertical you have the yield curve. So bank have, in the floating rate environment, bank may have different benchmark. So over a period of time, whenever the interest rate change, the yield curve may become steep, yield curve may become inverted. So that is your yield curve risk. Then there is reinvestment risk. I don't know when the next deposit will be getting mature, at what price it will be reinvested. So bank doesn't know that. So that is a reinvestment risk. And then you have the net interest position risk. Whenever bank has more interest earning assets than interest earning liabilities. And whenever the interest rate goes down, so it creates a problem. So that is called as net interest position. Then we have the strategic risk, problems with the strategy of the bank. At the management level, some strategy goes wrong and bank incurs loss. That is called as strategic risk. Reputational risk, all you know, some problem in the reputation of the bank. Systemic risk. Now this is systemic risk. A few moments back, I told you about systematic risk. So systematic risk was a macro level risk. But this systemic risk is, suppose there is a problem with a single bank, that problem transferred to the second bank, from the second bank it transferred to the third bank, and in this way there is a rippling effect that is called as a systemic risk. You all will know that 2008, it emanated from the systemic risk. Then we have the climate risk. All of you know about environmental, social and governance factor. So environmental part is the climate risk. And then we have, of course, that is the settlement risk. Basically, that is related to the counterparty. So these are certain other variants. These are the types of the risk in the banking. Now coming to the Basel guideline. Friends, Basel guidelines came into the picture on the failure of a bank which was called a Hus State Bank. In 1974, it was a German bank, a very big bank, but it took a lot of positions, a lot of foreign exchange exposures. And on 26th July 1974, the German regulator withdrew the banking license of the Hus State Bank. And on that day, millions and billions of Deutschmark, the then currency of that country, many of the banks all over the world have infused Deutschmark in the Hus State Bank with an anticipation of getting back the dollar next day. But on that day, the banking license was withdrawn by the regulator, and the bank failed, and the money, it could not repay the money to the counterparties. And due to the Hus State Bank failure, the G10 committees, they formulated a business regulatory body, which subsequently was renamed as Basel Committee on Banking Supervision. So there was a lot of negotiations, meetings, and then the first time the Basel I guidelines came into picture. It was introduced by the BCBS in 1988. In India, it was implemented in 1999. Basically, the Basel I was mainly concentrated on the credit risk. Its main focus was credit risk. The minimum capital adequacy was given 8% by the regulator, but by the regulator means BCBS. But our regulator RBI put it 9% to Indian banks. The capital adequacy ratio, which was the capital divided by risk-weighted assets, here only the credit risk-weighted assets were given. They were there because only credit risk was there. And risk weight, there were 5 types of risk weight were given from 0% to 100%. So the main feature, main was the credit risk there. In the meantime, in 1995, a 233-year-old bank called as Bearing Bank collapsed in United Kingdom. One of the employees, Nick Lesson, he took a lot of open positions in the market, and due to which the Bearing Bank had to incur loss amounting more than 800 million pounds, and the bank failed. Due to this, again, a meeting was convened, and in 1996, the market risk was made a part of Basel guidelines. Then came the Basel II. The problem with Basel I was, friends, what was the problem? Basel I was successful, but the problem was that one criteria fit for all was there. What was happening there? The risk weight for other exposure was 100%. So even if a loan is AA rated or BBB rated, the risk weight was same. Or if a loan is NPA, the risk weight was same. So it was not differentiating between the credit quality. So that was the disadvantage or the limitation. So subsequently, Basel II guidelines came into picture. It was introduced by BCBS in 2004. In India, Basel II was introduced in 3 phases: 2008, 2009, 2014. The main important thing in Basel II was the 3 pillars. The first pillar was the minimum capital requirement. Second was the supervisory review, and third was the market discipline. In the minimum capital, the capital was somewhat made more stringent vis-a-vis the Basel I. The minimum capital was 8%, but for Indian bank, it was capped at 9%. In the pillar 2, we were having supervisory review, meaning basically that there should be a well-defined supervisory methods, and every bank should have well-defined supervisory evaluations. Like a bank should have proper risk management department, risk management committees, ALCOs, all these things were supervisory, and RBI should supervise the banks properly. So basically, this was the supervisory review process And in this supervisory review process, a new concept was introduced, which was called as ICAP, Internal Capital Adequacy Assessment Process. So ICAP is a part of supervisory process. Third was the market discipline. So market discipline was basically concentrated with the disclosure part, that banks should disclose all the things. They cannot hide anything, and the regulator has to check it. So stringent market discipline, stringent disclosure norms were prescribed by BCBS and RBI. So Basel II was good, but again, it could not withstand the time. In 2008, there was a worldwide recession, and it was found that the Basel II was inadequate to address those problems. And then the Basel III guidelines were framed. So Basel III introduced by BCBS in 2010. In Indian banks, it was to be fully implemented by 31st March 2019, but subsequently it was delayed by RBI due to the capital problems of the Indian banks. Now it is fully, all the Indian banks, they are following the Basel III guidelines. So it was basically, it was the due to the problem in 2008, basically this Basel III guidelines came into picture. So there are three pillars, same like the three pillars in the Basel II. In the Basel III also there are three pillars, but the pillars have been more redefined. They have been more developed. Like the first pillar, which was minimum capital adequacy in Basel II, it was enhanced minimum capital adequacy. In the same way, the supervisory review, which was the second pillar in the Basel II, it was made supervisory review process for firm-wise risk management and capital planning. And the pillar 3, which was the market discipline, it was made more stringent in Basel III. So important changes that were taken care by the Basel III was, now the amount of the capital, not only the quantity, but as well as the quality of the capital was enhanced. A new concept called as capital conservation buffer was into a picture. A new concept called counter-cyclical capital buffer, triple CB, came into picture. New global liquidity standards were framed, like the liquidity coverage ratio, like the net stable funding ratio. A new ratio called as leverage ratio was implemented for banks, and some new banks were given the nomenclature systematically important banks or domestic systematically important banks. So these were certain changes that were framed by the Basel III. In the Basel III, the capital was 9%. But as I told you, a new item called as the capital conservation buffer, it was introduced. So the capital was again 9%, and the capital conservation buffer was 2.5%. Total is 11%, 11.5%. So 11.5 is the minimum capital adequacy ratio, including the capital conservation buffer. Out of the 9% capital, friends, it was again bifurcated into two parts. Tier 1 capital 7%, Tier 2 capital 2%. Tier 1 capital was called as the core capital or the going concern capital. Tier 2 capital was called as the supplementary capital. Tier 2 capital of 7% was again bifurcated into two parts. One was the common equity Tier 1 capital, 5.5%, and second was the additional Tier 1 capital, that is 1.5. Common equity tier capital was the pure capital. Additional Tier 1 was debts which were perpetual in nature, as good as capital. And the Tier 2 capital was basically general loss loan loss provisions, and so on. So this was the bifurcation. One important thing, the capital conservation buffer of 2.5%, which was introduced in Basel III, its quality will be same as common equity Tier 1 capital. This is an important thing. So the capital conservation buffer of 2.5, the instrument will have the same quality as the common equity Tier 1 capital. So this is about the quality and the quantity of capital. And then the important thing in the Basel, of course, in the Basel II, it was introduced. Various methods, various approaches of computing the capital charge were introduced. It was introduced in Basel II, and it was made more refined in Basel III. Then supervisory review process was made more stringent. ICAP was made more stringent. Basically, ICAP is nothing. See, in pillar one is talking about basically credit risk, market risk, operational risk. Apart from these three risks, whatever other risks are there, they are captured under the ICAP. From understanding purpose of point. Okay, so this is supervisory review. And then market discipline, it was there in the Basel II, but in the Basel III, it was made more stringent. If you have read the annual report of banks, there are certain disclosures, DF1, DF2, DF3. These are nothing. These are the disclosures that has to be mandatorily made by the banks as a part and parcel of the market discipline. Then the new, as I told you, the capital conservation buffer, it was implemented in various tranches. The last tranche of 0.625 was to be adhered by the bank by 1st October 21. So from 1st October 21, every bank in India has to have minimum 2.5% of the capital conservation buffer. What is this capital conservation buffer? It is acting as a buffer. So whenever there is a problem with the bank will not touch the tier 1 or the tier 2 capital. Bank will first take the help of capital conservation buffer. Okay. So friends, so what I told you that capital bank will be first using the capital conservation buffer, only then they will opt for the, in case of requirement, they will opt for the other capital. So it is acting like a buffer basically. And then apart from the capital conservation buffer, a new nomenclature was there introduced by the Basel III, that is called as counter cyclical capital buffer. So as the name suggests, counter cyclical, it is opposite to the cycle. So whenever there is a boom time, so what happens whenever there is a boom in the market? So the quality of the credit quality of the banks is very low. So at that time, bank will have to conserve more amount of capital that can take care in the problematic time. So that was the spirit behind the counter cyclical capital buffer. But till now, it has not been introduced by RBI. Okay, so it will be 0 to 2.5%, and it will be over and above the 11.5%. So this is your counter cyclical capital buffer, friends. So after that, Basel III introduced what is called as the liquidity standards. In liquidity standards, a very well-known ratio, liquidity coverage ratio, was introduced by the Basel. It is nothing. It tells you how much liquid assets bank have to take care of the next 30 days anticipated cash outflows. So that is your liquidity coverage ratio. So bank is calculating how much is the anticipated cash outflows from the bank branches or from the banks as a whole, and to take care of that 30 days anticipated cash outflows, how much liquid assets the bank has. Those liquid assets were called by the name high quality liquid assets. As per Basel III, now every bank in India has to have minimum 100% LCR. Our bank is at a very comfortable position. We are very higher than the minimum 100% LCR. So this was called as liquidity coverage ratio. You must have heard about the term rundown on the banks. Whenever there is a negative news about the banks, the depositors start standing in front of the bank branches to take out the deposit. So there is a hue and cry in the market. That is called as a rundown. So basically, to take care of that rundown on the bank, this LCR is very important. Then there is a new ratio introduced by Basel III that is called as net stable funding ratio. It is like, you can say it is like LCR, but it is taking care of up to 1 year portfolio, up to 1 year duration. So we are saying up to 1 year, whether we will be having the money to take care of the next 1 year obligations. So that is your net stable funding ratio. Again, it has to be at least 100%. So the ratio of net stable funding ratio is available amount of stable funding divided by required amount of stable funding. So it should be minimum 100%. Then friends, a new ratio was introduced by Basel III, leverage ratio. In the 2008, it was found that, already I told you, bank is a highly leveraged business. But in 2008, it was found that banks were leveraging at a very high rate. So to have a check over it, this leverage ratio was introduced. The formula for leverage ratio is capital measure divided by exposure measure. Capital measure is your common equity tier 1 capital, and exposure measure is total of a fund-based and non-fund-based exposure. As per Basel III, this liquidity ratio should be minimum 3%. But as per RBI, for Indian banks, the leverage ratio should be at least 3.5%. And for domestically systemic banks, it should be minimum 4%. So this was a new concept. And then a new concept was introduced by Basel III, global and domestic systematically important bank. So these some banks were chosen which will be a systematically important bank. That is, if they fail, it will have a very negative effect on the economy of the country. So they were given the name domestic systematically important bank. In India, RBI has RBI has nominated 3 banks as systematically important bank. Those are State Bank of India, HDFC Bank, and ICICI Bank. So they are our systematically important bank. And since they are systematically important bank, the capital regulations are more stringent for them. They have to have additional common equity tier 1 capital, like SBI. It should have minimum 0.60% additional capital, common equity tier 1 capital in comparison to other banks. And like ICICI and HDFC, they should have 0.20% extra common equity tier 1 capital. Now coming to the last part of the Basel, then we'll move to the credit risk management policy, friends. So capital charge, how to calculate the capital charge on the credit risk, operational risk, market risk. Friends, the Basel has given 2 methods for credit. One is the standardized approach. Second is the internal rating based approach. Most of the banks, including our bank, we are following the standardized approach. In a standardized approach, we are basically depending upon the ratings given by the external credit rating agencies. Based on those ratings, risk weights are assigned. So in a standardized approach, loans are divided into 2 parts. The retail exposure up to 7.5 crore and the corporate above 7.5 crore. So the corporate for corporates, we have to see what rating has been assigned to them by the external credit rating agencies, and accordingly the risk weight are given to them. For retail, we have the specified risk weight retail exposures. Now from standardized, we have to move to the internal rating based approach. Of course, our bank has already started the exercise. In the internal rating based approach, bank has to evolve their internal models. So in internal rating based approach, there are 2 parts, foundation and the advanced. So in the internal rating based approach, friends, bank will be calculating the expected loss, which will be probability of default multiplied by expected, multiplied by loss given default, multiplied by exposure at default. So this will be the method, this will be the formula of expected loss. In the standardized, in the foundation IRB, PD will be calculated by bank, and the remaining 2 factors will be given by the regulator. In the advanced IRB, all the 3 factors will be computed by the bank. So there is a long way in the credit risk. Coming to the operational risk, in the operational risk, there are 3 methods: the basic indicator approach, the standardized approach, and the advanced measurement approach. Most of the banks in India, they are following the basic indicator approach. It is a very, very simple approach, friend. In basic indicator approach, average of the last 3 years income is computed, and that income is multiplied by a factor which is called as alpha. The value of the alpha is given by the BCBS. As of now, the alpha is 15%. In the standardized approach, bank business are divided into various business lines. For every business line, there is a factor called as beta 1, beta 2, and so on. In this way, the capital is computed. So this is about operational risk. In the market risk, there are basically 2 types of approaches. One is called as the standardized approach, and second is called as the advanced measurement approach. In the standardized approach, we have again 2 types of approaches: standardized maturity approach and a standardized duration approach. So in the market risk, banks are using various ways. You must have heard about the macular duration, the modified duration, the value at risk. All these are being used to compute the market risk, friends. Now we will directly go to the credit risk management policy of the bank. So I have divided the credit risk management policy into 21 chapters or 21 modules, but we will only discuss about 2 to 3 modules. So the credit risk management policy of the bank is start from the purpose of the CRM policy, and it ends at the review of the policy. The purpose of the credit risk management policy of the bank is that we should have a well risk mitigated credit portfolio. And for that, we should have a proper risk governance. So like we have the board of directors, then we have various risk management committees. Under risk management committee, we have the credit risk management committee. We have the operational risk management committee. We have something called as ALCO. Then we have the RMD department. Then we have the nodal risk officers, the zonal risk officers. So these are basically a part and parcel of the risk management verticals of the bank. So every bank has to have this type of verticals. So basically in risk management policy, friends, the first thing is the credit risk appetite has been given. It's not that we can give any type of loan or any amount of loan. No, there is a ceiling, there is a threshold. In case of a single borrower, the credit risk management policy says in case of a single borrower, the maximum exposure is 20% of bank's tier 1 capital as per the last audited balance sheet. In case of a group, that threshold is 25% of the bank's tier 1 capital. In case of individuals, proprietary firms, proprietorship firms, other firms, HUF, one-person company, trust, society, association of person, that threshold is capped at 25 crore. In case of limited liability partnership, that threshold is capped at 50 crore. As far as capital market exposure is concerned, the threshold has been capped at 40% of the bank's net worth. Out of the capital market exposure, the financing of stockbrokers, the cap has been fixed at 12%. In this way, we have various exposures, like in the mortgages, in the residential real estate, the cap is to 250% of the bank's net worth, and in the commercial real estate, the cap has been fixed at 50% of the bank's net worth. And the new concept is there is something called as large exposure. So any exposure, it may be to a single group, a single or a group. If that exposure is 10% or more of the tier 1 capital of the bank, so that exposure will be called as a large exposure. And the sum total of large single or group exposure has been capped at 500% of the tier 1 capital funds of the bank as per the last audited balance sheet. And then friends, we have various ceilings on the various industries. Major industry sectors like chemical products, engineering, food manufacturing, infrastructure, power, transport, textile. So we have basically various ceilings are there, and then we have the ceilings on the if we are financing any Indian company for acquisition of equity in the foreign company. So the threshold, the exposure limit has been capped at 7.5% of tier 1 capital. In the same way, if the bank is giving or taking exposure on Indian joint ventures or wholly owned subsidiaries abroad, then the cap has been fixed at 20% of the bank's unimpaired capital funds. In the same way, if the bank is taking exposure on pooled assets, so in the pooled assets, the threshold has been capped at 5% of the total exposure of the bank as on the previous year. In case of co-lending exposure, again, there are two bifurcations, the single and the group. In case of single, so the limit on co-lending is 10% of the asset under management of the co-lender or rupees 1,000 crore, whichever is low. In case of group, so it has been capped at 10% of the AUM of the group or 2,000 crore, whichever is low. So these are certain thresholds that has been given. In the same way, there is a cap on term loan outstanding as per the CRM policy. For term loan outstanding, the outstanding limit should be maximum 70% of the gross outstanding advance. In the same way, there is a limit on off-balance sheet exposure. So the total non-fund based outstanding should not exceed 50% of the fund-based outstanding of the bank as on the previous year. In the same way, various caps are there whenever bank is investing or giving loan to various types of bank. So there is a threshold, there is a cap given. You can easily find it in the CRM policy of the bank. And then recently, some months back, there was an amendment in the CRM policy, in the credit policy. Some changes were there in the bank's exposure in financial institutions, primary dealers in banks. Now, whenever bank is taking exposure on NABARD, Exim Bank, SIDBI, NARCL, or any other strategic financial institution promoted by Government of India, so the cap is 20% of the tier 1 capital or 2,000 crore, whichever is low. In this way, there are various caps are given, friends. Now there is an item which is called as trigger limit. So what is trigger limit? Whenever bank reaches 85% of the ceiling, at that moment, the risk management department initiates a trigger. So that trigger limit is 85% of the ceiling. So the trigger will be, it will make alert the functional CGMs at the corporate office and the general managers that now you have to be more careful in advancing because that 85% of the ceiling has been reached. And then there are certain exposures which are exempted from this exposure limit, like loan or exposure to the central government or to the RBI and so on and so forth. Then coming to the rating. So in rating, friends, in our bank, basically we are doing, there are two things we are doing in rating. One is the score models, one is the RAM rating. So RAM rating 1 crore and above, score model below 1 crore. So as far as score models are concerned, friends, we have 15 scoring models as per the latest CRM policy, starting from housing loan, vehicle loan, personal loan, property loan, rent loan, and so on. And then when we talk about RAM rating, friends, so RAM rating is applicable for 1 crore and above. As of now, there are 18 models under the RAM rating. In the RAM rating, we compute what is called as the combined rating. So the combined rating is basically a combination of obligor rating and the facility risk rating. So when we say combined rating, basically it is nothing. It is the computation of expected loss. And when we are computing the obligor rating means rating of the borrower. And facility risk rating is rating of the collaterals. So from obligor rating, we are computing the probability of default. From facility risk rating, we are computing the loss given default. And then from the combined rating, we calculate the expected loss. So in this way, the RAM rating is done. There are certain exemptions on RAM rating. Loan against our own deposits, loan against NSC, LIC, and so on. Advances to staff members. So there are certain exempt categories are there. You can find the categories in the credit risk management policies. So there are, as of now, there are 18 RAM modules starting from the SME manufacturing model to SME services model, SME trade model, and so on. Now, when we talk about the validity of internal rating, friends, so the validity is if we have done the rating on the audited balance sheet, or if the entity is not under audit, I mean, audit is not applicable. So in that case, the validity of rating will be 24 months from the end of financial year of rating. And in case of provisional financial data are there, so the validity of the rating will be 3 months from the due date of the submission of return to income tax authority. If you are doing rating on the projected company financial data, so the validity period is 6 months from the date of first year of financial projections. And if you are doing the project rating, so the validity of the rating will be 18 months from the financial closing date of the rating year. So in this way, these are the validity periods given in the CRM policy. Now there is something called as dynamic rating module, friends. So basically what happens in certain loans when we are doing the rating more than one time in a year, so we have to do it under the dynamic rating module. Like if it is a listed corporate borrower, so whenever the listed corporate borrower, whenever they are publishing their quarterly data, so within 90 days, we have to compute the rating under the dynamic rating module. Or if the external rating has gone down, then also we have to do the dynamic rating or the midterm rating module, midterm rating under the dynamic rating module within 1 month when that external rating was downgraded. For corporates, friend, internal rating has to be conducted in an interval of 6 months. Or if the external rating of the borrower is C or D, then also we have to follow the dynamic rating module. Or when there is an adverse news about the borrower, then within 1 month of that news, we have to conduct the rating under the dynamic rating module, friends. And then whenever there is a downgradation of internal rating, friends, whenever the rating goes down, then the interest rate applicable to such borrower accounts, we have to refix them on the downgraded rate. Any kind of relaxation on interest rate or any other processing charges, they have to be compulsory reviewed. So in this way, there are certain criteria that are given for downgradation of internal rating. And then coming to the external rating, friends. So they are basically, we are taking the help of 6 external rating agencies: CARE, CRISIL, ICRA, India Rating, Acuity Rating, and Informex. One credit rating agency, Brickwork, its license was suspended by the RBI. So as on date, we have 6 external credit rating agencies. And then we also have certain foreign external credit rating agencies like Fitch, like Moody's, like Standard & Poor's. So these are certain external credit rating agencies. As per the CRM policy of the bank, for CREs and MSMEs, the amount is 25 crore and above. So for them, we have to compulsory conduct the ECR. For LRD, lease rental discounting loans to corporate borrowers, the limit is 50 crore and above. We have to conduct the ECR. And for other loans, the benchmark has been kept at 10 crore. So we have to compulsory get the ECR conducted by the borrower, friends. As far as entry barriers are concerned, so bank has certain entry barriers. What should be the rating whenever we are giving a loan? If it is an NBFC, HFC, so the combined internal rating barrier is IBA. So in this way, various entry barriers by way of rating grades are there that we cannot give the loan if the rating is coming down. We have to take permission from the higher authority, or we don't have to give the loan. So that entry barriers are given in the CRM policy, friends. As I told you that as far as the bank is concerned, we have to keep 70% of the exposure that which is for which rating is required. So the 70% should have to be IB triple B. And if you see the result of the bank of 30th September result, 90% of the portfolio which is required to be rated, that is IB triple B. So our position is very good in that respect. So in this way, there are certain other things are given in the CRM policy. Since it is very long, so I am leaving it. You can get it from the CRM policy. In case of takeover of loans, friends, as far as internal rating is concerned, for takeover, the minimum internal rating required is IBA. And if it is external rated account, or if the external rating is required in case of takeover of loans, so the external rating should be at least triple B. It should be at least investment grade. But if it is MSME or agro processing, so double B is also applicable. I mean, we can accept it. So this is about the rating criteria for takeover of loans. So then, friends, then there are certain rules and regulations for lending to stress sectors. So our risk management department, they identify certain sectors as stress sectors. It can be found in the RMD side also. So whenever we are giving any fresh or additional loan to the stress sector, the minimum authority is ZLCC and above. Or whenever we are submitting any NBG for the stress sector, so that NBG will go to the corporate office, minimum corporate office. So this is the lending to stress sectors industry. So this is given by the RMD department. You can find it in our RMD portal, friends. And then in the ESG part, environmental, social and governance. So that is also important part of the CRM policy. Environmental means the climate part. Renewable energy, greenhouse, climate risks. You know, bank has also recently come up with a policy on green bonds also. You can go through that circular also. And then social part is basically the health and safety of the employees, the working conditions of the employees, diversity and inclusions, human rights, and the impact on the local communities. So bank has to take care of these things also. And then we have something called as governance, corporate governance, what we call as ethical standards. So everything should be true and fair. The result should be given in a true and fair manner. Highest ethical standard should be followed by the bank. So this is called an ESG. And friends, in our bank, for a proposal of more than 100 crore, ESG aspect has to be commented in the credit appraisal note. This is our policy of the bank. And then, friends, now it is the last part of my class. Bank has recently come out with a RAROC framework. What is this RAROC framework? As I told you, RAROC is basically risk-adjusted return on capital. So now there was a circular recently 2 months back that from now all the corporate loans, they will have to follow the RAROC model. So up till now, what we are doing for 10 crore and more loan. So what we are doing, whenever we are giving a loan, we are also computing the RAROC also, and we are checking whether that RAROC is at least more than what is called as hurdle rate. So up till now we were doing it. So for loan we were computing the RAROC, but now a new circular has come which says that you don't have to calculate RAROC. The minimum required RAROC for the bank, it is already fixed. As of now, the minimum hurdle rate for the bank is 13%. So taking into consideration that 13%, what should be the minimum rate of interest for a loan? So that module is now it is active in the RMD portal. So what is basically RAROC, friend? Whenever bank is giving loan, so against that loan, bank has to keep certain amount of capital. So the capital is not free. So that is a cost associated with that capital. So that cost is called as cost of capital or hurdle rate. So based on that capital, when we are giving loan, so we are earning something on that loan that is called as a return. And when we factor risk on that return, it becomes a risk adjusted return. So what we are factoring? We factor the expected loss on the return. So it becomes the risk adjusted return on capital, risk adjusted return. And when we divide that risk adjusted return with the capital required for that loan, it becomes RAROC. And then we compare that RAROC with the hurdle rate. And RAROC at least should be higher than hurdle rate, only then that loan will be adding economic value to the loan of the bank. So up till now, what we were doing for loan of 10 crore and above, we were computing the RAROC at a particular interest rate to see if that interest rate is adding value to the bank. But now, from 3rd November 2023, so the bank is saying that for all the corporate loan, we will compute the interest rate based on the RAROC. So it may happen that there are 3 borrowers, for them rate of interest will be different from different borrowers. Or for a borrower, interest rate for working capital may be different and interest rate for term loan may be different. So basically, we are using a module that is active in the RMD portal, wherein we put some data, some input that what is the PAN number of the borrower, what is the collateral there. Based on that, the system will compute the minimum interest rate, and that interest rate will be the minimum that will be charged. So that REROC pricing framework has started from 3rd November. In the initial phase, the corporate loans and the pooled assets loans will have come under the ambit, and subsequently the MSME loans of 25 crore and more will also come under the REROC pricing framework. This is a new circular, so you can download the circular from the bank's site and you can go through that circular. So from friends, this was all about from my side, since risk is a very difficult and very complex subject. So to cover that risk in 1 hour is nearly impossible. But yes, whatever were the important things from knowledge point of view, from the conceptual point of view, I have covered that. So from my side, friend, I wish you all the very best from your examination. I presume that this class will not only help in the written examination, it will help you in your interview also, or in your banking career also, because in future the risk, that the credit risk or operational risk or market risk has to become one of the most important domains of banking, and knowledge of risk will be mandatory. Without having a knowledge of risk, we will not be called as a full-fledged banker. So my suggestion to all of you is either you do some courses like DTIRM or NIBM risk, or you try to learn more about risk from there are various things available in the Google. You can download that, you can learn risk. That will definitely help in your career. With these words, I am closing my session, and I wish you all the very best. Thank you.
Thank you, Mason. Thank you. You can be.
Okay, super. So friends, first of all, a very good evening. Myself, Dhiren Pratap Singh. I am Chief Manager, Faculty at Image, and my topic of discussion with you is inspection and audit. So because there is the inspection and audit, I have tried to cover as much as topic within this 1 hour. The theme of this session will be based on question and answer, and wherever it is required, I will take you to the conceptual based also from either from the policy or the SOPs. So the question which I have prepared, they are included both from the policy and SOP. I hope they will be useful for your promotion exam, which is due on 28th January. So without wasting any time, let's start our first session. So first is Basant Seth Committee recommendation led to setup of which of the following module. Now the question is which of the following module from the option like DMC, ATM, OSMC and LLMS. Which of the following portal or the module has been set up as per the recommendation of Basant Seth Committee? DMC, Atom, OSMC, or LLMS. So, as per the Basant Seth Committee recommendation, the OSMC portal, or what we call off-site monitoring cell, has been developed for. We all know the off-site monitoring cell. Alerts are generated on daily basis regarding the transaction which is done in the branch, and based on their gravity, their severity, or their seriousness, the alerts are generated in the OSMC portal, and branch have to respond or to rectify those alert based on their observation and their information. So, as per the recommendation of Basant Seth Committee, OSMC module has been developed after its recommendation. So, which of the following function as third line of defense? That is our second question. Inspection and audit, branch, risk management department, or compliance department. So, which of the following department function as a third line of defense in banking industry? Either it is inspection audit, or it is branch, or it is risk management, or compliance department. So, the answer is inspection and audit. Now, when we call it as third line of defense, there certainly is some question that what are the other two line of defense? So, that is the three line of defense in the banking industry. The first line of defense, second line, and third line. So, the first line of defense comprises of the business, means the front office or the front desk or the front force which is interacting with the customer, which is the branch only. So, what are their role? They are the ownership of risk and control. They are the main responsibility for risk management. They assess the risk. The key risk indicator is their area of operation, incident management, issue identification, and action management. So, first line of defense in the banking industry is the branch only. The first line of defense or the front line of defense is the branch. The second line of defense is risk management and compliance. What they do, their main responsibility is to oversight of risk management and risk profile, which is independent from line one, that is the branch. They ensure the compliance of all the stipulations or the guidelines or the prescription given by either the RBI or the other statutory bodies, Government of India, DFS, IBA, and our bank also. They review which are the challenges being faced by the first line of defense, and accordingly they suggest the measures. They assist in developing the risk management framework of the bank, which assess the risk of each and every segment, be it credit risk, be it operational risk, be it market risk, or be it other residual risk like strategic, concentration risk, and reputational risk, interest rate risk. They assess or they assist in developing a robust risk management framework in order to mitigate or they reduce or to overcome the risk which may faced by the bank in future. They are independent in reporting and acceleration. Now, third line of defense, they give the assurance over line and 1, 2 over the appropriateness. They check that whether the first line of defense or the second line of defense, they are working in conformity with the guidelines. They do check that what are the loopholes in the first line of defense or the second line of defense, and they pointed out those loopholes independently of first and second line, so that effective rectification can be taken by those the corporate office or the top management. As I have already told you, the third line of defense is independent from line 1 and line 2. They do not interfere in their working. They just audit them and they pointed out the loopholes, the irregularities, and accordingly some rectification measures are being taken as per their reports. It is the third line of defense, which is the internal audit. Again, they recommend improvement which is required in the line 1, that is first line of defense, or the second line of defense. So these are the three line of defense in the banking industry. First line is the branch, second line is the risk management and compliance, and third is internal audit. Now, third question is, find out the incorrect statement with respect to the coverage of risk-based internal audit. First is, all loan accounts sanctioned or renewed or restructured or disbursed from the date of last inspection or RBI to the present RBIA. Second, loan accounts where serious or critical irregularities with incomplete security documents, defective or imperfect mortgage, dilution of security, diversion of funds, transgression of discretionary authority, non-compliance of terms and sanction, they were pointed out in the last RBI inspection report or special report, but they have not yet been rectified. third is top 100 borrower account, and fourth is all standard loan accounts above rupees 10 lakh sanctioned or disbursed or renewed or restructured 4 years prior to the date of inspection. Now, we all know in the RBIA or the risk-based internal audit, or we commonly called as the inspection in the branch, this is the scope of the accounts which has to be checked during the inspection. So the question is, which of the following out of the four is wrong? So the answer is the D, all standard loan accounts above rupees 10 lakh sanctioned or disbursed or renewed or restructured 4 years prior to the date of inspection. The wrong in this is that as per the policy, apart from all the three which is mentioned in the option number A, B and C, they have to be mandatorily checked. Apart from these three, all standard loan accounts which are having more than 10 lakh rupees, which is the limit, sanctioned, disbursed or renewed or restructured 5 years prior to the date of sanction. It is not the 4 years, it is 5 years prior to the date of inspection. That is to be checked during the RBI of the RBIA or the inspection of the branch. Now, why this 5 year? Because as per the latest staff accountability policy, the last 4 year, 5 year accounts have to be checked to see the irregularities which has been either not identified, or if they have been identified, whether they have been rectified or not. So these four, all loan accounts which are sanctioned, renewed or restructured or disbursed from the last date of sanction or the RBIA, they have to be checked. Top 100 borrower account have to be checked. If there were some serious or critical irregularities which are identified in the last inspection, but they have not been rectified or special report have not been closed, they'll also have to be checked. Top 100 borrower account have to be checked, and all the standard loan accounts which are having a limit more than 10 lakh rupees, sanctioned 5 years from the date of inspection, from the last 5 years from the date of inspection, they have to be mandatorily checked in the inspection or the RBI of the branch. So here the answer is D. Now next question is, how many number of unit visit have to be conducted by the inspector during RBIA? 3, 4, 5 or 6? So the answer is three number of unit visit should be conducted by the inspector during RBIA. This is as per the policy that during the RBIA, whenever an inspector is going in the branch, they have to mandatorily visit 3 number of units out of all the loan they are checking. Minimum 3 number of units have to be checked by the inspector during the course of the RBIA or during the period of the RBIA. Now, transaction testing. This is the concept from the inspection audit policy. What is transaction testing? In this transaction testing, the inspector, they have to see that all the loan accounts which are either been renewed or sanctioned or reviewed with announcement, where the fund has actually moved from the branch. So how the transaction has taken place. Now, what is the criteria of it is that if the risk rating, the first criteria is for the transaction testing to be done by the inspector during the RBIA, that if the risk rating during the last audit of a particular segment is high. Now, what is this particular segment? Now, friends, when we conduct the RBIA or the inspection, there are all the irregularities which we pointed out in the RBIA or in the inspection. They are mainly categorized in 2 segments. One is the business risk, another is the control risk. So if we find that in the last audit, either business risk or the control risk has been rated high, then 50% of that particular segment, either business or the control segment, they have to be checked. There is a proper risk rating sheet of the during the last inspection. Inspector have to go through that sheet and see whether the business risk has been rated as high or the control risk has been rated as high. Out of that control or business risk, he have to see which all areas have been either deteriorated or they have been shown the substantial decline in the rating. So 50% of that particular segment have to be checked. Apart from that, first, if the overall rating of the branch in previous audit is high, then 50% is to be checked. If the rating is medium but increasing, that is previously from the last audit to previous audit, the rating was low, then in the last audit it is medium. So it is medium and increasing, then again 50% of that particular segment, the transaction testing has to be done. If it is medium but decreasing or stable, it will remain in the medium category, it was remain in the medium category, then 40% of the of that branch have to be checked for the transaction testing. If the rating is low in the previous audit, then 20% of the transaction testing has to be done. So this is the concept of transaction testing. Now we'll take question of it. So percentage of transaction testing which is to be checked during the RBI in high risk branch. So as we have discussed in the previous slide, for the high risk branch, it is the 50% which have to be checked. So the answer is C, that is 50. So 50% of transaction testing has to be checked during the RBI in case during the previous audit, the rating of that branch is high. Now again, another question based on that only, what is the minimum percentage of transaction testing which is to be checked during the RBI in medium risk branch while the risk is being increasing from the previous inspection? So as we have seen in it is 50% again if the risk is medium, but it is on an increasing trend, that is risk is increasing. So 50% of that particular segment also have to be checked. And what is the percentage if the rating is medium but decreasing? So the minimum percentage of transaction testing which is to be checked during the RBIA, it is the 40%. So 40% of transaction testing has to be done in the branch during the RBI if the previous rating was medium but decreasing or stable. So 40% of that has to be checked. Now in case of low, it is 20%. Now, minimum percentage of spot rectification to be ensured during the course of RBIA. Now, before going to the option, I would like to tell you what is the spot rectification. Like during the RBIA or the inspection, when the inspector is pointing out the irregularities, so let's suppose there is 1,000 of irregularities which have been pointed out. So minimum percentage of rectification which has to be done on the spot during the course of inspection, minimum percentage of spot rectification has to be done. That minimum percentage has been clearly mentioned in the policy, and this is and that minimum percentage is 30%. So what is this 30%? That out of all the irregularities which is being pointed out by the inspector during the RBIA of the branch, 30% of those irregularities have to be rectified by the branch during the course of the inspection. Suppose the period of the inspection is 7 days, like starting from today, it is 7 days. So within these 7 days, all the irregularities which has been pointed out by the inspector, 30% of those irregularities have to be rectified by the branch during the course of the inspection only. And this, the inspector also has to ensure that 30% is rectified. So again, the question which can come into a promotion is, what is the minimum percentage of spot rectification to be ensured during the course of RBIA? So it is the 30%. But my dear friend, it is the minimum percentage. But below that, it is not acceptable. Above 30, it is totally fine. So minimum percentage is 30%. So there could be a question that what is the maximum percentage of spot rectification to be ensured? So there is no maximum of it. Minimum is 30%. Now, question is, what is the minimum amount of business required for a branch to be included under revenue audit, other than top 100 business wise? 5, 10, 20, 60. So the answer is 10 crore. So the branches which has having a business of 10 crore and above, they will be subject to revenue audit. Now, this is the guidelines about the revenue audit. Can you please remove that? So this is the guidelines regarding revenue audit, that revenue and expenditure audit is conducted to ensure accurate computation and charging of all interest and non-interest income due and verification of various expenditure, including interest expenditure, to identify and recover leakage of income and excess debits to expenditure. So what is the logic of a revenue audit? It is to see that all the interest in the loan account has been charged correctly, all the non-interest income they have been realized, all the interest expenditure or the overhead or debits to expenditure, they have been duly vetted or duly approved, or they are in due course of action. All these have to be checked, and the revenue leakage, if any, they have to be identified and they have to be realized. Now, inspector or auditor, they will scrutinize all expenditure heads with special emphasis on expenditure BGS, where the increase over previous half year is more than 10%. So if when the inspector goes to the branch for the revenue audit, they will see all the expenditure BGS and they will see that over the last half year, if the expenditure head has the expenses over the expenditure has increased by 10%, so they will have to see that where this expenditure is being done in the course of half year. Cent percent transaction audit to be done where the expenditure had show an increase of more than 20% over the previous year. If there is more than 20% over and above the last expenditure which has taken place in the last year, 100% transaction audit has to be done by the inspector. All BGS have to be checked. Top 100 branches business wise as on either 30th September or on the 31st March, they will be subject to revenue and expenditure audit by the inspection centers. All branches which are having total business of rupees 10 crore and above, they are also subjected to revenue audit on half yearly basis on 30th September and 31st March every year. Now, how this will be done? Zonal office will identify all those branches and revenue audit is arranged by them to find out the income leakage and abnormal expenditure in any audit. So where the business is 10 crore and above, which are other than top 100 branches, zonal office will identify those branches and they will depute their own officials to go and check the revenue audit or conduct the revenue audit or expenditure audit. Now, for branches which are having a total business of less than rupees 10 crore, this screen, yes, thank you. Now, which are the branches which are having a business less than 10 crore, the revenue audit or the expenditure audit, this exercise will be carried out along with the RBI or the regular audit of the branch. There is no need for a special audit to be conducted by for those branches. When the RBI is being conducted, revenue audit will accompany with the RBI only, or they will only do it. Covering the period of that revenue audit will be since the last audit to the current or the present audit. So this is the guidelines in the policy of inspection or audit for the revenue audit. So our question was, this is not working. Yes, thank you. So our question was, what is the minimum amount of business required for a branch to be included under revenue audit? So it is the 10 crore for a subject to revenue audit. So the guideline is to top 100 branches will be subject to revenue expenditure audit. All other branches having total business of 10 crore, they are subject to revenue audit on half yearly basis. Now next question is, what is the periodicity to conduct the thematic audit? 3 branches per IC per month, 3 branches per ZO per month, 3 branches per district per month, or none of the above. So the answer is 3 branch per IC per month. Now, thematic audit is conducted in order to ensure whether the branch are taking care of the complying with the KYC or AML guidelines as prescribed by the our corporate office or as per the RBI guidelines also. So this is being conducted by the IC. The guideline is 3 branches per IC per month has to be undergo a thematic audit, and the idea of thematic audit is to see whether the KYC or AML guideline has been complied by the branch or not. Now, apart from thematic audit, there are other audits also, which I just wanted to give you a brief of it, which may come into question that what kind of which audit is the idea of which audit is to check the KYC compliance, or what is the compliance audit, what is the SNAP audit. So just to give an idea about what kind of audit is. So apart from thematic audit, this is SNAP audit. The SNAP audit, it covers select branches with specific reference to housekeeping problems. So thematic audit was for the KYC or AML guidelines, SNAP audit for the housekeeping problem. How it is done? Respective IC head, wherever the branch under the respective IC, the head will take a decision for SNAP audit of branch based on the serious nature of the finding in the audit reports, or based on the views of zonal office, or the level of compliance, or the level of rectification of irregularities, or on occurrence of a fraud. If any information which is of serious nature is being received to the IC either from the reports, either from the zonal office, or from the by looking over the compliance level or the rectification level, or if any fraud or any complaint has erupted or has been brought to the notice of the IC. So snap audit will be asked by the head to be conducted. The duration of snap audit should not exceed 3 days. Now, bank will have the provision for undertaking snap audit under critical circumstances. The snap audit can be for areas considered to be of higher risk, encompassing more than one branches or location also, like KYC non-compliance, irregular lending, ensuring exposure to corporate sector, credit exposure to capital market, accounts mobilization campaign, untallied accounts. So there are a number of things for which the snap audit can be asked to conduct, can be asked by the IC head to be exercised. Now, where all the snap audit can be conducted on? So if there is a signals from the off risk assessment from ZO, CEO, CMC, RMO, specific request from controlling officers or department that for that particular, please conduct the snap audit of that particular branch. Of serious, or if any serious issue or malpractice or frauds have been noticed or brought to the notice of the IC head, then also the snap audit can be conducted. So the area of the snap audit is not very clearly or very clearly outlined, but the main is the housekeeping problem. So housekeeping problem can be of anything. It could be advances, it could be operation, it could be compliance, it could be of anything. Now compliance audit. Compliance audit, ICs or ZO shall carry out compliance audit after receipt of FRC, that is file report closure, covering the only extremely high and very high risk rated branch. So compliance audit will be conducted wherever the audit rating of the branch during the inspection was either very high or extremely high, or branches which are rated as high under control risk. So there are 3 areas where the compliance audit can be done. Either the risk rating of the branch is very high or the extremely high, or if the control risk of a branch is rated high in the previous inspection, then the compliance audit will be conducted. Apart from that, in respect of repeated high risk branch, that is a branch which has been rated as high risk in 3 or more previous audit, compliance audit will be conducted mandatorily, even though control risk may not be high. So compliance audit is conducted for extremely high, very high, or to the branches where the control risk is high. But if the IC find out that one particular branch has been rated as high risk for the last 3 audit, so that branch will also be subject to the high risk for the compliance audit, even though the control risk is not high. But their overall rating for the past 3 years, for the past 3 audit is high. Now, this shall also be conducted, compliance audit shall also be conducted at the instances of zonal office, IC, and corporate office inspection and audit department in case of unsatisfactory compliance level of any branch and other serious trigger warranting compliance audit. So these are the 2 audit apart from thematic audit, which I wanted to share with you, that from where the question can come in your promotional exam. Now, again, based on that only, the compliance audit is done for which of the following rated branch, especially with specific reference to weaknesses control risk: high, very high, extremely high, D, all of the above. So answer is D, all of the above branch are subject to compliance audit. So now again, what percentage of number of proposal sanctioned, either fresh or review or renewal, they needs to be checked during management audit of zonal office if amount of advance is above rupees 250 lakh and up to rupees 100 lakh, 1000 lakh. So what is the minimum percentage of number of proposal have to be checked during management audit? Option A 10, option B 25, option B C 50, option D 100. So the answer is 25, that is B. So 25% of the proposal which are either be sanctioned fresh, review or renewal, they have to be checked during the management audit. If the proposal sanctioned, the amount of advance is 250 lakh to 100 lakhs or 1000 lakhs. Now, because of the management audit, so I just wanted to share you the guideline of our policy, that what is the scope of management audit. So if the cutoff loan account of a zonal office is up to rupees 250 lakh and the exposure is both funded and non-funded both limit. So the 10% on the 10% of number of the total number of account have to be checked. If it is above rupees 250 lakh and up to rupees 1000 lakh, 25% of the accounts have to be checked. If it is above rupees 1000 lakhs, then 100% of the account have to be checked, which are sanctioned, fresh, review, or renewal during the course of management audit. Now, it is also to be assured that minimum top 50 borrowable account have to be covered in the management audit. Apart from the compliance of the above 3 percentage, that is 10, 25, 100 as per their categorization. Now, if the business risk of a branch is low and the control risk is high, what is the branch rating in the RBIA? Now, as I have told you in the initial of this session, that the branch risk or the rating of a branch is based on the risk identified during the in the segment of business risk and in the control risk. Now, there is a set rating matrix in the inspection and audit policy, which will be I'll be showing with you in the subsequent part. So, if the rating is low, in that the question is, if the branch rating of the business risk of a branch is low and the control risk is high, what would be the branch rating? So, what is the options? A, medium, B, low, C, very high, and D, high. So, the answer is D, high risk. So, if the branch risk, business risk is low and the control risk is high, branch rating would be high. Again, if the risk, business risk is medium and control risk is high, what would be the branch rating during the RBIA? Option A, medium. Option B, high. Option C, extremely high. Option D, very high. Answer is very high. So, if in the previous business risk low, control risk high, so branch rating is high. But here the business risk is medium, but control risk is again high. So, the classification or the rating of the branch would be very high. So, what is the business risk? If the business risk is medium and control risk is medium, what would be the rating? So, answer is medium. No, this option is wrong. It is high. So, this is the rating matrix which I wanted to share with you. Based on this, the rating of a branch is decided. So, if you see that if the business risk is low and control risk is low, the branch rating would be low. But if the business risk is medium and control risk is also medium, the option, which is in the E quadrant of that matrix, the branch rating would be high. If the business risk is high and control risk is also high, the branch rating would be extremely high. So, based on this, there could be several questions which can be devised from this risk rating matrix, which may come into your promotional exam. So, my earnest request is, please do remember this risk rating matrix, because there could be a good number of questions which can be made. Especially, this is a common conception that if the business risk is medium and the control risk also medium, so what would be the rating? So, obviously, the mind will say that if both are medium, the rating would be medium. But no, in this case, when both the risk is medium, the rating would be high. So, that is my idea of in the last question, the option by clerical mistake, it has been wrongly answered. The answer was high. So, this is the rating matrix. It is given in the inspection and audit policy. I want all of you to please go through it once again before going for the promotional exam. The question can come handy in your promotional exam from this risk rating matrix. Now, branch to be rated high risk if leakage of income identified is not covered on the spot for rural branch. So, what is the minimum number of revenue leakage if that is not recovered on the spot for any branch to be classified as high risk? So, what is the option? If the more than 10 lakh revenue leakage is identified and not recovered, more than 5 lakh and not recovered. Option C, more than 3 lakh and not recovered. Option D, more than 2 lakh and not recovered. So, for rural branch, answer is D. That is, if in the rural branch, if the leakage of income identified is more than 2 lakh and it is not recovered on the spot, so the branch rating would be high. If it is less than 2 lakh, branch rating would be as per the risk rating matrix. So in case of semi-urban branch, what is the leakage of income which has to be identified, and if it is identified and not recovered on the spot for any branch to be classified as high risk. So branch to be rated high risk if leakage of income identified is not recovered on the spot for semi-urban branch. Again, option more than 10 lakh, more than 5 lakh, more than 3 lakh, more than 2 lakh. So for semi-urban branch, it is more than 3 lakh. For rural, it was more than 2 lakh. For semi-urban, it is more than 3 lakh. What is for the metro branch to be rated high risk if leakage of income identified is not recovered on the spot for metro or corporate branch? Again, option more than 10 lakh, more than 5 lakh, more than 3 lakh, more than 2 lakh. So option is A. In the metro or the corporate branch, if the revenue identified is more than 10 lakh and the same is not been rectified on the spot, the branch rating would be high in that case. Now, this is the criteria for classification of a branch to be high risk if the leakage of income identified is not recovered on the spot. So as we have discussed over the past 3 questions, so for metro or corporate branch, if the leakage is more than 10 lakh and not recovered on the spot, the branch will be rated as high risk. In case of urban branches, if the revenue leakage is identified is more than 5 lakh and the same is not recovered on the spot, then the branch would be classified as high risk. For the semi-urban branch, the revenue leakage identified is more than 3 lakh and same is not recovered on the spot, then it is high risk. The branch would be classified as high risk. And for the rural branches, if the branch is the revenue leakage identified is more than 2 lakh and the same is not recovered on the spot, we all know during the course of inspection or it is pending for recovery, the branch would be rated as high risk branch. So these are the 4 parameters by which if the revenue leakage identified is not recovered on the spot for the respective branches, the branch rating would be very high or would be classified as high. Now, which of the following statement is true with regard to the monitoring of transaction in staff accounts by concurrent auditor? That is, if any cash transaction more than 1 lakh and above has taken in the staff accounts. Second is, if there is a transfer transaction of 1 lakh and above in the staff accounts. So, which of the following is not true with regard to the monitoring of transaction in the staff accounts? So, option A, statement 1 is only true. Option B, statement 2 is only true. Statement C, both of them are true. And option D, none of them are true. So the option is statement 1 is true. If there is a cash transaction of 1 lakh and above in the staff account, that transaction have to be monitored by the concurrent auditor. But what about the transfer transaction? So the threshold is 2 lakh and above in the staff transaction. If there is any transfer transaction of 2 lakh and above in the staff accounts, that transaction have to be checked by the concurrent auditor to see the genuinity to the source of the fund which has been received by the staff, and they may need to ask the staff from why this particular fund has been deposited in your account. So again, for the cash transaction, the threshold is 1 lakh and above in the staff accounts, and for the transfer transaction, the threshold is 2 lakh and above. So here the wrong option is transfer transaction of 1 lakh and above, and the correct option is cash transaction of 1 lakh and above. Which is the competent authority to approve any change in OSMC alert and threshold limits? Who can approve any change in the OSMC alert definition or the parameters and their threshold limit also? Option A, Audit Committee of Executive, that is ACE, Audit Committee of Board, that is ACB, GM heading Inspection and Audit, and Executive Director heading Inspection and Audit. So which among the 4 is the competent authority to approve any change in OSMC alert and threshold limits? So the option is General Manager, who is heading the Inspection and Audit Department at the corporate office. He is the competent authority to approve any change in OSMC alert and the threshold limits. Now, next question is, IS audit shall work in coordination with following department for various operational and security guidelines covering various aspects of information and communication technology infrastructure used by the bank. Relationship with other department. Which of the following is true? Corporate office RMD, corporate office ISSD. Both the option is true. None of the option is true. Answer is B, corporate office ISSD. So IS audit will work with corporate office ISSD for the in coordination with the for various operational and security guidelines, which covers various aspects of information and communication technology infrastructure used by the bank. Previously, from this inspection audit policy, previously this is the one of the changes which has been brought in this, or the modification in the policy which has been brought in the present inspection and audit policy. Previously, it was corporate office RMD as well as corporate office ISSD. Now it is only corporate office ISSD only. So RMD has been removed for the for IS audit to have the coordination for the operational and other guideline infrastructure, technology infrastructure, etc. Now, which of the following is not a category of zero tolerance area? Friend, now because this zero tolerance area is of very utmost importance in the inspection audit policy. Previously, we will discuss in the later part of the session. This zero tolerance area is very important in the inspection and audit policy, which we are dealing in the subsequent part of our session in detail. So among for the timing, which of the following is not a category of zero tolerance area? If aggregate fraud amount is more than 10 lakh, whether it is a zero ZTA. Special report, if any, is pending for closure, whether it is ZTA. Incomplete or blank document, whether it is ZTA. And all of the above is correct. So answer is all of the above is correct. All the above three categories are zero tolerance area. So whenever any irregularity is being classified as zero tolerance area, the category of the branch or the rating of the branch would be severely affected. How? This we will see in the later part. So if the aggregate fraud amount is more than 10 lakh, this is zero tolerance area. If any special report is pending for closure, this is zero tolerance area. If any incomplete or blank document is pending, that is also zero tolerance area. So all of the above option in the question is zero tolerance area. Sorry. Now coming on to the zero tolerance area. Now previously, before this inspection audit policy, previously the policy says there was only 4 ZTA, which was EMMOD, end use is not ensured, sanction exceeding power, and fraud. These 4 were only the major, these were the only 4 categories of the zero tolerance area. But after the previous policy, the modification in zero tolerance has been substantially done in order to cover all the serious nature of irregularity which can be found in the branch, to classify them under zero tolerance area. And once if any zero tolerance area has been marked by the inspector during the inspection, the rating of the branch would be severely affected. So what are these zero tolerance area? We will discuss in the detail also in the later part. First is the non-creation of equitable mortgage or MOD or non-availability of legal opinion. Second, non-creation of charge over security, surcharge, ROC, etc. Sanction exceeding discretionary powers, end use not verified, pre or post sanction visit to unit, EM visit to EM property not on record, incidents of fraud due to weakness in internal control, special report any pending for closure, non-reconciliation of impersonal head of accounts, manual debit in BGL heads, time bar demand promissory notes, incomplete or blank documents, insufficient stamp duty, non-compliance of KYC, due diligence not complied for loan and deposit accounts, reference to CIBIL or RBI defaulter list or a SAL, that is a special approval list, ECGC restricted list not available, revenue leakage identified which is pending for recovery, that we have already discussed in the previous question, but we will deal here also, and non-submission of stock statement. These all are the 13 areas of the zero tolerance area as per latest inspection and audit policy. So there could be a direct question that how many number of zero tolerance area are in the inspection and audit policy? 4, 13, 9, 30 or anyone. So the correct answer is 13 number of categories are been defined in the inspection and audit policy, which are categorized for the zero tolerance area. Now in detail, what are the ZTA? So first is non-creation of EM or EMOD. So in case of non-creation of EM or EMOD, branch to be rated as high risk if mortgage is pending for any account having limit of rupees 50 lakh and above. Second, if number of accounts pending for mortgage creation is more than 5% of the total eligible number of accounts of the branch, where mortgage is to be created during the relevant audit period. If any of the two condition is complied or has been satisfied, the branch will be treated as high risk branch. Second option is CERSAI compliant for all accounts. Branch to be rated as high risk if account pending for CERSAI registration in a branch are more than 10 numbers. So if there are more than 10 numbers, that is 11, 12, 20 or 30 accounts which are identified during the inspection, that these number of accounts, 20 accounts are pending for CERSAI creation, branch rating would be high. If it is less than 10 number, then normal as per the risk rating matrix. Third option is non-availability of legal opinion. The branch rating would be high if legal opinion is not available in any eligible account in a branch having limit of rupees 10 lakh and above. So if any account is identified which is having a limit of 10 lakh and above, and the inspector do not find any legal opinion in that file, in that account, the branch rating would be rating as high if that inspector identified it as a ZTA. Now, creation of charge over securities. Branch rating would be high if creation of charge or ROC registration is pending for more than 50 lakh and above account. And again, number of accounts which are pending for creation of charge or ROC registration is more than 5% of the total eligible accounts of the branch. So again, if the charge creation or the ROC registration is pending in any account which is having an exposure of more than 50 lakh and above, or if the total number of eligible account which are pending for charge creation is more than 5% of the branch, the branch rating would be high. Third, sanction exceeding branch manager discretionary power. If any sanction is exceeding branch discretionary power, branch would be very high, would be rated as high. And is not ensured, pre or post sanction unit visit not found for the mortgage property or for the unit, a discrepancy of legal audit not rectified, branch will be treated as medium risk if the number of fresh sanction account during the review period for non-compliance of mentioned ZTAs are more than 5% of the total number of advances of the branch. So it is medium. The branch will be classified as medium if any of the ZTA which is mentioned in the end use not ensured is identified in more than 5% number of the accounts. The branch would be categorized as medium risk. Again, it is medium risk classification, not the high. Fifth is incident of fraud. A branch will be classified as high risk on confirmation of classification of an incident in the branch as fraud by corporate office FRMC, even though the branch has obtained a better rating as per the RBIA. So if any incident has been classified by the CO FRMC as a fraud in any branch, the branch will be rated as high risk, even though the actual rating of the branch in the RBI was medium. So then also the branch will be classified as high risk. If weakness in internal control in the branch have facilitated or led to the incident, or there are sufficient reasons to show involvement of internal factor in such fraudulent incident, more than 3 incidents of fraud are reported in the branch during a financial year, or aggregate fraud amount is more than rupees 10 lakh, or the incidents of fraud happened prior to 3 years, but it has been classified fraud presently, it should not be considered to downgrade the risk rating of the branch. In case of consortium or multiple banking account, if the borrower has been declared as fraud observed by the other bank, and if there is no fraud element in the account with respect to operation in branch, the risk rating did not be downgraded for reason of fraud. Now, apart from the above 3, if the 3 is satisfied, the first 3 is satisfied, branch will be treated as high risk. If the 4th and 5th is there, the branch rating will not be affected. It will remain as per the latest or the past rating of the as per the RBIA. Now, 6th is if any special report is pending for a closure, then the branch rating would be high, or that will be classified as ZTA. Non-reconciliation of impersonal heads of accounts, any manual debit in BGL heads like interest, commission, and operation in inoperative accounts not as per a guideline will make the branch rated as high risk, and that particular irregularity will be identified as zero tolerance area or ZTA. Now, next is time barred accounts. The branch will be rated as high if any account having limit of rupees 50 lakh and above is time barred. Otherwise, it will be rated as medium if number of accounts time barred are more than 5% of total number of accounts of the branch. But all such cases are less than 50 lakh and above, less than 50 lakh. If any account is more than 50 lakh, branch will be rated as high risk. Now, incomplete or blank documents, required stamp duty not paid, and documents not properly maintained, special attention to be given by the inspector to ensure that 100% spot rectification is done in those areas. If there is incomplete or blank documents, stamp duty is whichever is required, the adequate stamp duty is not paid, documents have not been properly maintained, the inspector have to ensure that all these irregularities have been rectified on the spot. But if the spot rectification is not done, branch will be rated as high if any spot rectification is pending for any account having limit of 50 lakh and above, or number of accounts pending for such rectification is more than 5% of total number of outstanding account of the branch. So first, the inspector and the branch also, they have to ensure that all this irregularity of incomplete or blank document or adequate stamp duty not paid or documents not properly done, this has to be rectified during the course of inspection or at the spot rectification. If it is not done and any such irregularities is pending in an account which is having a limit of 50 lakh and above or more than 5% of the account, branch will be treated as high risk and the irregularity will be treated as ZTA. Now, next is if it is identified that KYC, non-compliance of KYC norms, due diligence for loan and deposit accounts not done, a non-availability of photo and address proof with authentication, non-availability of verification of genuineness of financial documents on which credit limits are assessed and approved, address confirmation for issuance of checkbook not available, all this irregularity will be classified as ZTA and accordingly the branch rating will be classified. Now again, if any of the above mentioned irregularities are identified, inspector as well as the branch, they have to ensure that these irregularities have been identified on the spot. If it is not done, and any such irregularities like non-compliance of KYC, due diligence not found, availability of photo, non-verification of genuineness of financial documents, they have been identified in any account which have a limit of 50 lakh and above or more than 5% of total number of account of the branch, branch rating would be treated as high and this particular irregularity will be identified as zero tolerance area. Now, references to civil, RBI defaulter list, ECGC, SAL is not available in the, is not done before the sanctioning loan. Such report is not available in the file. They have not been scrutinized. The branch to be rated as medium risk. So in case of civil, it will be rated as medium if number of accounts pending for rectification are more than 5% of total number of accounts of the branch. But the irregularity will be classified for zero tolerance area. Revenue leakage that we have already discussed, that if any revenue leakage is identified and is pending for recovery, this will be classified as ZTA and the branch will be rated as high if the revenue leakage identified and not recovered is more than 10 lakh for metro corporate branch, more than 5 lakh for urban branch, more than 3 lakh for semi-urban branch, more than 2 lakh for rural urban branch. So the branch will be treated as high risk and the irregularity will be as ZTA. And the last is non-submission of stock statement. Branch will be rated as high risk if submission of stock statement is pending in any account which have a sanction limit of 50 lakh and above, and if number of accounts pending for submission of stock statement for more than 3 months are more than 5% of total number of account of the branch. So friend, this is regarding the zero tolerance area. I find it very helpful that I request you that you please again revise these zero tolerance area. This is very important part of the inspection and audit policy. Please go through it again and see by how many categories a branch will be treated as high risk, by which category, which kind of ZTA will categorize the branch as medium risk. You please memorize them or remember them, because there may be a number of questions which can be generated out of this particular zero tolerance area, which can come into your promotional exam. So please go through it again. We have discussed there in detail, but please revise before going in the promotional exam. Now, what is the periodicity for rectification of ZTA identified during RBI? Now we have discussed the ZTA, what all there are 13 kind of zero tolerance area, and among those 13 kind of what are the different parameters or aspects of zero tolerance area. We have discussed them in detail. Now, why this zero tolerance area is important? As per the inspection audit policy, if any irregularity is classified as zero tolerance area, branch have to give special focus for rectification of those zero tolerance area. Now, I am telling you that as per the inspection audit policy, if any branch, the RBI is conducted in the branch, the total rectification of the branch has to be completed within rectification as well as the closure of the file of the inspection. It has to be completed within 90 days. So the periodicity of closure of inspection file is 90 days. Branch has to submit all the rectification to the respective zonal office or NDIC within 60 days. And the next 1 month or the 30 days will be taken care of in the compliance audit and the acceptance of rectification and the FRC closure. So overall, the 90 days is the limit for the closure of any inspection file of any branch. But what is the periodicity for rectification of ZTA? Because it is zero tolerance area, special focus have to be given by the branch. Firstly, to rectify these zero tolerance area or the zero tolerance irregularities identified by the inspector in the RBIA. So the periodicity is 45 days. Within the 45 days of the inspection of the branch, all the ZTAs which have been identified during the inspection in the inspection by the inspector, branch have to give special focus, special attention to rectify the zero tolerance area within 45 days. If it is not done, the APAR will be affected by the branch official. Zonal office also have to make the follow-up with the branch for rectification of the ZTA within 45 days. So the time limit for the rectification of ZTA is the 45 days by the branch. Now, what is the periodicity of audit cycle? Again, there could be a number of questions which can come into your promotional exam from this table only. So we will discuss one by one. So if any risk rating of branch or unit has been classified as low risk, the next audit of the branch will fall due after 18 months. That is 1.5 years. So after 18 months or within the next 18 months, the next audit will begin for that branch if the branch rating is low. If the branch rating is medium, the next audit will fall due on 15 months. After 15 months, the next audit will be conducted. If the rating is high, the next audit will be done in 12 months of that particular branch. If in the current inspection, the rating is the rating of the branch has been rated as high risk, the next audit will fall on within 1 year. For medium, within 15 months. For low risk, within 18 months. So normally for low risk, it is on the 16 or the 17 or 18 months. For medium, it is on the 13, 14, 15 months. For high risk, it is within 12 months. If any branch has been categorized or classified as very high or extremely high risk, the next audit will fall due from the 9 months of the previous audit inspection. So if the branch is classified as very high or extremely high, the next audit will fall due on 9 months. Now, what about newly opened? If any branch is newly opened, within the 6 months of opening of that branch, first audit will have to be conducted for that particular branch. So for newly opened, the periodicity of our first audit is 6 months. After 6 months, when the first audit is conducted, whatever is the rating of the branch, low, medium or high, very high, extremely high, whatever it is, the branch will be, the next audit will fall due as per the above 4 criteria or above 4 rating. Now, even if the rating is low or medium, if any branch is located at the border area of the country, the audit will fall due on 12 months. Or if any branch is having an advance of more than 100 crore, after excluding loan against deposit or a jewel loan, they will be also be subject to audit within 12 months, even if the rating is low or medium. So even irrespective of the rating, whether it is low or medium, the rating of the branches which are located on border area or which branches which are having advance of more than 100 crore, the next audit will fall due on 12 months. or for the large or corporate or SAM branches, for the large corporate or SAM branches, the audit will begin 12 months from the date of previous inspection. For foreign branches on Indian soil like GIFT City branch, the audit will begin on the after the 12 months of the previous inspection, or within 12 months from the previous inspection. Now, periodicity of management audit, we have discussed the period in this slide. We have discussed the periodicity of audit cycle of branches. Now, what about the management offices like corporate office, zonal office, FGMO, and other offices? Now, for all zonal office and FGMO, IC head assisted by DZM, not below the rank of AGM, or AGM from FGMO, or executive from corporate office. The frequency is annual. For all corporate office departments, frequency is annual, and it will be conducted by DGM from corporate office. For inspection center, either AGM or chief manager from corporate office inspection and audit department, the audit or the management audit of IC inspection center is conducted biennial or once in 2 years. For treasury branch, AGM having requisite exposure, frequency is annual. For image, AGM from corporate office, frequency annual. For any subsidiaries, IC head, wherever IC head, or as per the to whomsoever the corporate office will give the assignment, frequency is annual. Training center inspector from IC, frequency is annual. For regional rural banks, IC head once in 2 years. So if I have to tell you, apart from all the office, only inspection center and the RRBs, they are subject to management audit biennially, once in 2 years. Apart from IC and RRBs, all other zonal office, FGMO, corporate office department, treasury branch, image, subsidiaries, RRBs, their audit or their management audit will be conducted annually by the respective auditor, which is in front of you. Now, as per inspection and audit policy, concurrent auditor has to visit unit with total exposure, fund-based or non-fund-based, of rupees 1 crore and above once on every. So what is the periodicity of minimum, what is the bare minimum visit which has to be done by the concurrent auditor for an exposure having 1 crore and above? It is to be conducted fortnightly or monthly or quarterly or half yearly. So answer is half yearly. So a concurrent auditor have to visit, make the unit visit of all the exposure of 1 crore and above in the branch half yearly. Once in a half year, they have to visit a unit of all exposure having 1 crore and above. Which of the following is true with respect to concurrent audit of the branch? Visit of minimum 5 SHG per month in micro state branch. Visit of minimum 5 SHG per month in other branches where SHG business is more than 10 crore. So which is true? Only A, only B, only or both or none. So the option is C, both of them are true. The concurrent auditor in case of microstat visit of minimum 5 SHG per month, in other also minimum 5 SHG per month where the SHG business is more than 10 crore. Now, which of the following can conduct the credit audit? Inspector of IC, inspection center, concurrent auditor. So only A, option B, only B, option C, both, option D, none. So which of the following, inspector of IC or concurrent auditor, who can conduct the credit audit? So the answer is only inspector of IC can conduct the concurrent audit, credit audit. Concurrent auditor will not be entrusted with the task of conducting credit audit. Now, what is credit audit? As per the inspection and audit policy, all the exposure 5 crore and above having rating IB, triple B and above, they will be subject to credit audit by the inspector of respective ICs every year. But if the rating is IB, double B and below, the the minimum threshold or the exposure is 1 crore and above. If the rating is IB, double B and below, all the accounts having exposure of 1 crore and above, they are subject to credit audit by the inspector of IC on every year. If the rating is IB, triple B and above, the credit audit will be conducted every year. but the limit is 5 crore and above. Now, Spark is related to which of the following? So, what is the Spark? Supervisory program for assessment of risk and capital. It is related to inspection and audit, risk-based supervision, compliance, and none. So, the answer is risk-based supervision. This is the guideline which has been prescribed by RBI for having risk-based supervision over the NPA and the SMA account of the bank. So, you please remember the full form. Supervisory Program for Assessment of Risk and Capital, SPARC. It is related to risk-based supervision. Now, spurt in advance is not to be investigated against which of the following? We will see what is spurt. Branches having not completed 3 years. Spurt is due to loan against deposit or under MDL. Or spurt is due to sanction made at higher level. So 1 and 2, option 2, 2 and 3. Option C, 1 and 3, option D, all of the above. So among which of the following is not true, not to be investigated if there is spurt in advance? So answer is option D, all of the above. So if there is a spurt in advance in a branch which has not completed 3 years, this will not be investigated. If it is identified that spurt is due to loan against deposit under MDL, it will not be investigated. If any spurt is due to sanction made by the higher authority level, it will not be investigated. Now, where it will be investigated? What is spurt? This is the guideline regarding spurt in advance. So, zonal office shall place quarterly statement to ZAIS. ZAIS is Zonal Audit Committee of Executive with analysis for any spurt in advance of more than 10% by number or amount over the previous quarter. That if the zonal office has identified that for the last quarter, whatever is the number of account or the amount of the credit portfolio of any branch, it has increased by more than 10% in this quarter. Then a report will be placed to the ZAIS that how this 10% has been taken place. What are the reasons why this spurt has taken place? Wherever there is the increase in more than 10% either in the loan number or the loan amount. So the zonal office will submit to the ZAIS that this is the reason why this has been, this spurt is observed in this branch. Now ZAIS what will do? The ZAIS will deliberate on it and they will see whether there is any inspection or any investigation is warranted or not. So if it is identified, so ZAIS may get the same investigated by an officer either from the zonal office or by the inspector of branch, and the same should be completed within 50 days from the date of ZAIS. IC they have to forward this report of such investigation to Corporate Office Inspection and Audit Department. The analysis will be done by Corporate Office RMD in this regard. It can also be shared with Zonal Office or Inspection Center. And where it will not be conducted, if the branch has not completed 3 years, if spurt in advance due to loan against deposit, sanction under MDL, or spurt in advance is due to the sanction made at higher level. Apart from these criteria, if there is any spurt in advance of any branch, and if the ZAIS feels that it has to be investigated, so the spurt will be investigated by either by zonal office official or by the inspector of IC. Now, the next question is, during RBIA, it is observed that legal audit rectification is pending in 50 accounts out of a total loan accounts of 2,500. The rating of the branch in this case will be high, low, medium, D based on metrics. So we have studied in the ZTA that in case of legal audit rectification is pending more than 5% of the accounts in the branch, so the branch rating would be high. So here in this case, the number of accounts which are pending for legal audit rectification is less than 5% because the 5% of 2,500 is 125. So the rating of the branch will be based on the risk metrics and not will be classified as high risk. Now, during regular inspection, it is observed that legal opinion is not obtained or available in following accounts. A loan account with limit of rupees 20 lakh, a loan account with limit of rupees 50 lakh. So if it is observed that legal opinion is not available in the following accounts, which of the following is correct? Now, which of the following above condition will render the rating of the branch as high? So option A, only 1, option B, only 2, option C, either of the above, option D, none of the above. Now we have seen in the ZTA that for the threshold limit for any branch to be classified as high risk in case of legal opinion is rupees 10 lakh and above. So here both the condition is satisfying for the branch to be classified as rated high risk. So the answer is either of the above can render the rating of the branch as high risk. So the option is C. So friend, this is all from my side regarding inspection and audit policy. I have tried to cover all the facts which is available in the inspection and audit policy as well the SOP. And my earnest request is please go through this once again so that because it is more of the factual based. So many questions can come from the ZT area, from the other aspect of audit policy and SOP. In the last, my all the good wishes for you for your promotion exam. Thank you very much. All the best. Can start now. Okay, friends, colleagues, very warm good evening to all of you. So today we are at the last stage, means this is the last session of today's training program. First, I would like to thank the association for giving opportunity to us to organize this program. And hope that all have gone through such you can say 7 and 8 sessions. They have got a good materials as well as the good inceptions regarding to the all topics. So now this is the last topic. The responsibility to me was to go for the circular recaps. Since we have found that there are huge circulars, 600, 700 circulars which have been issued. But I have taken care of those circulars which are very important to you. I'm not there. The circulars, when we're finding that there are 3 types that they are coming. First, only information like that, just like IB approved this tribal agency. Second, information is coming on the operations part, means what are the operations, how you have to go to channelizations, all the things. Third is coming where information as well as the policies and some amendment in the products are coming. So I have taken the policies, amendment and something new which happened in the bank. Last 10 questions that is related to the recent thing happened and which has come into our bank also somewhere in anywhere. That's why I put into the last 10 questions. So now today we are going to start with that. Bank has moved to that regime from the labor regime from 1st of January 2022. First, let me clear what is the labor is the London Interbank Offered Rate. Earlier, what is happening in case of the foreign exchanges, the rate of interest among the banks, they are going to define by the London Interbank Offered Rate. Now it has been shifted from alternative reference rate from the 1st of January 2022. This alternative reference rate is, you can say it's a federal bank reserves and the private players they are coming, and it is a market driven rate. So it's a very one question. Next is that under IBDG online SB account, IBDG, our bank has come up with the lots of the you can say products in digital through the digital channel. One is that online SB account customer has been categorized. If I am opening this IBDG online SB account,
Then what will be the my categorization? As you know that we are going to categorize the customer. What is the categorization? Three type. What is the low, medium, and high? So in case of low risk customer, we are going to having a re-KYC in 10 years. If it is a medium, then 8 years. If it is high, then it's a 2 years. So in these cases, the risk customer is risk as a high risk. So it means in any account open under this, we have to do the re-KYC within the 2 years. ECGC has started publishing separate ratings of short terms and long term for country risk. ECGC is doing a country risk. And after the country risk, according to the country risk, we are taking exposure, and that is defined by the different discretionary authority. So what have been done? They have committed that they are going to be exposure-wise rating. They are going to do in the short term, medium term, and long term. Short term, they have defined that the exposure which is less than or equal to 360 days. More than 360 days exposure is there on any country, then it will come into the medium and long term. Maximum quantum of finance under home loan plus has been increased from, see what I have done in most of the cases, IBPS, what they are doing, what is today, they are not asking what is today, they are asking what was the previous. So I have taken care of that, whether there is a certain changes that, so I have taken the previous as well as the new. So it has been increased from 2 crore to 10 crore. Earlier it was the 2 crore under home loan plus maximum quantum finance, and it has been now increased to the 10 crore. Discretionary authority under home loan plus, they have revised since the amount has been increased to 2 to 10 crore. So they have revised. So what is the discretionary authority to the RAPC? They have only same 3 crore they can go, and ZLCC and FGMCC are the 3 crore and 5 crore. Means up to 3 crore discretionary home loan plus can be sanctioned by the ZLCC level, and if it is a 5 crore, then it will go to the FGMCAC. For all RTGS and EFT transactions where the value is amount and above 20-digit LEI number is mandatory. See, in this question they can ask that sometimes they are asking how many digits in the GST. Sometimes they are asking what is the how many digits are there in the company's SIN. So we have put it here that 20-digit LEI. If any question is coming that how much a digit in the LEI, then 20-digit it is there. Second thing is that from which date it has been started mandatorily, and what was the, you can say, threshold. The threshold is 50 crore. If it is going to happening 50 crore and above transactions, single transactions, then we need to get a LEI for 20-digit LEI from 30th June 2023. Okay, it's a mandatory now. For DRI beneficiary, annual family income should be, that's we have defined in the DRI, that is in the annual income of rural and semi-urban and urban. What is the annual income should be there for the DRI beneficiary? That is the 18,000 in rural and 24,000 in the semi-urbans. Okay. The Integrated Ombudsman Scheme 2021 has reduced. See, this is the way 2021 scheme it came, but initially they have given the time that in the 30 days you have to reply. Now they have reduced it to the 30 days to the 15 days. And most of the important fact is that if you are not replying in the 15 days, then they can pass the order. And against the order, you cannot again appeal. That is, they are very strict about that. So it has reduced from the 30 days to 15 days. They have bet that up to 1 lakh rupees they can charge for the mental harassment and also. So it's one of the very important question. Is a complete digital solution for issuance, amendment and closure of bank guarantee, resulting in substantial reduction in turnaround time in issuing. That's a BG. Now you know that our bank is the prominent one bank which are having you can say tie up with the National E-Repository NER Limited, where through the collaboration with them we have issued the EBG. Okay, EBG concept is there. EBG, what is that? It is the digital platform where BG can be issued and it can be cancelled and closed so that we can maintain the TAT as well as we can reduce the time. Okay, so this is the first, it is the EBG. Second is in how many states it has been implemented. It is now in the 20 states it is implemented, EBG. Under PMAGP, maximum cost of project unit admissible for margin money subsidy under manufacturing sector and business sector. It was initially, it has been increased to the 50 lakhs, and for the services sector, it is the 20 lakhs. As you know, in under PMAGP, we are giving a training to them. So next question is related to that. If EDP training in the PMAGP, if the project cost is rupees 5 lakh, then how many days training they will get? And if it is more than 5 lakhs, then how many days training they can get? So up to 5 lakhs, they can get up to the 5 days. And if it is more than 5 lakhs, so 10 days EDP is mandatory. RBI has permitted the banks may facilitate remittance by resident individual under what is the purpose that for payment of fees to the foreign university or foreign institution in IFSC. IFSC International Financial Service Centers, you know that it is in this Gujarat. So what is happening? In IFSC earlier, we can make a transaction for the securities only. No others for securities. Here they have given, now RBI has permitted that if anyone is going for study for abroad, then they can deposit the money, they can transfer the money under LRS scheme, and it is available to them. So it is for the studies abroad. They have, IFSC can take the money from them. Premium whole turnover post shipment advances decrease from earlier 6 paise per 100 per month to how much? That what is that? 6 paise. So post shipment there is a very less risk. So there is the premium they are charging is less. So every time they are reducing. And in case of the reverse, in case of the packing credit, it is more, so they are increasing. So here in this case, they have reduced from 6 paise to 5.5 paise. Premium on WTPC advance increased from the earlier 8.5 paise to, it has been increased to the 8.5 paise to 10.5 paise per 100 per month. RBI has permitted the banks may allow qualified jewelers to remit advance payment for how many days for import to silver through India International Bullion Exchange. So what is that? Now RBI come with that silver you are going to import, then you can make the advance payment for how many days? And you can take within 11 days, this should be completed. So it's a maximum days they have given, that the 11 days can be provided. Bank has been impaneled a clearing and settlement bank with clearing house of BSE and into MOU with BSE for extending collateral. What happening? In case of the stockbrokers, they have to put the margin on that. The margins they are putting into the FDR. So now the all stock exchanges, they are asking for the EFDR. Okay. So now our bank has make a, you can say MOU signed with ICCL, and the EFDR, whatever will be the margin will be there, which will be converted into EFDR, that will be maintained by only one branch, that is the Mumbai Fort branch. Okay, ICCL is the Indian Clearing Corporation Limited. We have made the arrangement with them so that we can boost our you can say liability portfolio, because this EFDR that is also be with us back. Export to be effected within months from the date of receipt of advance. Suppose I am exporter, I am exporting something again, and before exporting, what happening? I have a very good rapport with someone. I'm a star rated, and others, the importer, they have a belief, and my goods has been in fashion. You can say there is a very high demand. In that cases, next party importer, they are sending an advance remittance to us. When I am getting advance remittance from any importer, then I am bound to export the goods within 12 months. It's this 12 months is the maximum. There is no minimum. You can go for the 3 months, you can export, you can 6 months, but the maximum time is the 12 months. The same thing is that in case of these realizations, I have made export, the realization should be done. So from the date of shipments, when I have made export, export means always be the date of shipment. On the date of shipments, in how many days I have to get my money back, it means I have my export proceeds should be realized. It is the timeline is the 9 months. Within 9 months, it should be realized. When the borrower, guarantor, director declared net worth exceeds rupees, this lakhs, how many lakh? CA certified net worth statement are to be obtained from the CA of the company. When the company is there, we are in a company, the guarantors or borrowers or directors, whoever they are, if they are disclosing their net worth more than 1 crore, then in that cases we need to ask the CA certified net worth certificate from the CA of the company. Okay. EOTS, now in the flagship program, and now our recovery department, they have issued a circular related to the EOTS. EOTS means here it's a online OTS where customer can just go for the applying the OTS by their different channels. They can even go through the, you can say, net banking, or they can go for the branch help, branch assisted. Here through the our site, website, any customer can apply for the OTS. And in the beauty of this OTS is that after the money is credited in the account and it has been happened, full amount customer has deposited, immediately he can, we can say, download the no objection certificates from them. So there is no need to customer branches had to issue any kind of NOC. They can download the NOC through this EOTS. Now it is only for up to 10 lakh. Now it is planning to, in this year up to the March, they are planning to go for the 1 crore. All fraud examination in all non-cyber frauds. Non-cyber frauds means that is not due to the machinery or cyber attacks, nothing. It means in general what we are doing, all other than the cybers are coming into the non-cyber frauds. Whether advances or non-advances, that is the advances or non-advances, the operational fraud has happened. That is also coming into that. So advances or non-advances should be completed in how many days from the date of reference from various authorities. Means when date of reference, when it has been detected, from date of detection, it should be completed in all non-cyber frauds in 180 days. Okay. Bank has recently discontinued 2 MSME SLP scheme. Now we have a huge number of MSME, and one of the best products we have under MSME SLP. Now 2 schemes, first IB Micro and second IB Pure Jaldhara, these 2 schemes have been discontinued with the immediate effect that they are not in the existence. All credit card holders can get 1 reward point valued ₹1 for every how much spent, which will be credited in the monthly statement. See, here it is nothing, any kind of the cashback and nothing. It's a reward point, and earlier it was that they are going to getting ₹1 for every 200 rupees spent. Now they have made an amendment and now it is coming for the 1 reward point for ₹1 of 100 rupees spent. If I am spending 100 rupees, I will get the 1 reward, I will get the ₹1, and that will be credited in my monthly statements. So they may ask that what was the earlier? Now it's 100. What was the earlier? Earlier it is the 200 rupees. Under GST advantage, minimum civil score has been increased. So I have taken again. What was the earlier? It was the 700. Now they have increased to the 725. So in GST advantage, where we can go for the maximum 25 lakhs loan, and in GST advantage, that is the online. Here in GST advances, they may ask the question like this, that already the one customer, existing customer having enjoying a facility up to 10 lakh rupees. Now through this Ind GST, he is eligible for the 25 lakhs. So what will be the mode of operations? So in that cases, what we have to do, we have to just go for the open another, you can say in GST account, and that will be the 25 minus 10, it is the 15 lakhs. Okay, so maximum exposure can be go for the 25 lakhs. In case of KYC, there are lots of the circulars in the KYC. That's interesting things. What we found that a new facility they have introduced. The bank has introduced two facilities. One is the SMS. They can do through the SMS. They can send the SMS and they can do their re-KYC. And second thing is that they can send the mail, and through mail they can do their re-KYC. Means I am a customer. If I want to do my re-KYC, I can do it through the sending a mail in rekYC@indianbank.co.in. Simply, there is some structure is there. According to the structure, they can send the message, send the mail, and automatically the account will be re-KYC process will be completed. So interesting thing that who can do it. First thing is that, and when we can do it. First, the criteria is that if there is no any change in my address or any KYC, I'm finding that my KYC is good, there is no any change requirement, then this process can be implemented. Second thing is that what sort of the customer, those customers who are coming to the low and medium category, this facility is available only to them. Means even a higher category if I am, and I have no change in my KYC, then I cannot utilize this facility. Only it is only for the low and medium category customer. The duration of mandatory leave shall be at least that working days in a single spell every financial year and will be treated as. See, this mandatory leaves, you all know that the sensitive post that bank has given that all the sensitive post categorization, the person who are on the sensitive post, they have to take a mandatory leave for at least 10 working days. Remember, it's a 10 working days. If Saturday and Sunday is coming where a holiday, it will not be counted. First, earlier what was happened, the 10 working days that were going to reduce from your PL. Now board has passed it that it will be treated as a special leave. There is no any need to deduct your PL. End pension prime, that is one of the good scheme our bank has launched, where in the end pension prime scheme, the pensioner can get free accidental coverage and OD facility. Both it is coming to this product. So what is the amount of free accidental coverage? That is up to 10 lakh rupees. Under the pensioner who is taking a loan under this scheme in pension prime scheme, then they will be covered for the free accidental coverage up to rupees 10 lakh. Okay, provided they have given a one criteria that the first 1,000 pensioner they can get this facility when they are coming into the end pension. Second thing is that there is also a OD facility is available. Means I am the pensioner, I am supposed to, everybody is knowing pension is coming on that date, particular date. I am in need of some kind of OD against that account. Then we can give it the OD, and that will give the 2 lakh rupees OD can be given. They can get it. It's a very good product of our bank. Our bank customers are only allowed to perform contactless payment using debit cards and RuPay on the tap smart kitchens. You all know that our bank has a smart key where you have to you have to go and tap. So when you are going to tapping this, then how much amount maximum they have given that up to 5,000 rupees. You can just tap and go up to 5,000. You can just tap and go, and you don't have to do anything. You don't have to come with the PIN number. If you want to go for the tapping for more than 5,000 rupees, then they have just an NPCI or NFS, they have given a facility that yes, you can do it more than 5,000 rupees also, but there is an additional PIN number required. If I am going to having a tapping my key and I have to pay 7,000 rupees, then I have to put the PIN number on that. So it's a 5,000 rupees. There is no any need. Above 5,000, we need to have a double authentication in form of the PIN. Bank entered with National Electronic Repository for Finance to Farmers again ENWR. National Warehouse Receipt, that is the electronic. Them up to how much rupees we can finance against the ENWR and for what is the period. So they have given that against that we can go for maximum 75 lakhs and period is 1 year. If it is not ENWR, it is only NWR. It is not in electronic form, then we can go for the 50 lakhs maximum and the period is same 1 year. Under revised guidelines of end mortgage scheme, income of family members, adult children, parents, co-owners of the property can be considered for arriving at the eligibility repayment provided, sorry, it's not provided, it's a provided they are included as. Earlier, the concept was that they should be act as a, what we can say, co-applicant. Now bank has made it into that they should be as a co-borrower. If they want to take a facility under the scheme, they should be, you can say they should be, you can say treated as a co-borrower, not a co-applicant. Means we have to make them the co-borrower. They will take the liability of all. Under Indikisi Vahan scheme, payout to dealer, original equipment manufacturers. And in the morning, I was just there where man told that we have made an arrangement with MOU type with the Mahindra and Mahindra, TAFE, TMKL, this also Escorts. So in that cases, if the payout, if you are, how much payout we can give, the dealer who is there for a tractor dealer, who is going to selling a tractor of more than 10 in a 1 quarter, then they can get the 1.5% of the disbursed loan. Okay. What is the disbursement has happened? 1.5% of the loan amount they can go to get the, provided they have crossed in a quarter more than 10. Under home loan corporate entities, respective sanctioning authority can consider if external rating is and above and CMR is. In this case, see, in a corporate credit entity, we are going to doing a rating by internal rating and external rating. In case of external rating, it is a BBB and above. If the corporate entity who are going to taking a loan for the home, then they have to go for the BBB, externally rating at BBB, and CMR should be 1 to 4. Okay. If it is not, it means the corporate entity is not, you can say, eligible for the external rating. Then what we will do? Second question is when there is no any external rating application is there, then in that case we have to do the internal rating, and internal rating should be A and above. CMR will be the same 1 to 4, but internal rating should be A and above. Recently, ECGC revised country risk classification of Argentina from B to open cover 2. Every time you will find it that even a month-wise or quarter-wise they are publishing this ECGC classification of the countries. So when we are having any kind of exposure in that country, then exposure-wise delegated authorities are there. So that is the one thing we have to going to be cross-checked. So here it is, they are going to increase to the C1 restricted cover. Means there is more risk when we are having exposure on the Argentina. If any buyer or supplier is there in Argentina, then it is the category on the risk is of that country is the C1 restricted cover. Membership for Rupee Select debit card is how much membership we are going to make. There are lots of the things are there, but interestingly, this some point that is very striking to me. That's why I put it. It's a 1,000 rupees membership required for the Rupee Select debit card. And AMC for classic Rupee other than PMJDY, Rupee IBDG cards, domestic cards including ePUS cards and Visa Classic card is AMC. It's a AMC. So AMC is rupees 200 rupees. It's required. Okay. NCGTC is a nodal agency for credit guarantee scheme for startups, and it will be covered up to. You all know the startups schemes. So in NCGTC is the nodal agency. They are going to taking care of all the startups projects. In to startup projects, it is mentioned that irrespective of the facility, it is not for the CC and TL, something like that. Any facility it is available, and it is a debt, then up to 10 crore rupees that can be covered under the startup in NCGTC. Under CGSS, that's the same credit guarantee for startups. Credit guarantee scheme for startups, guarantee can be covered in two modes. Now they have given, NCGTC given that a guarantee can be covered in the two modes. First mode is what? First mode is the transaction based mode, and second is the umbrella mode based mode. So umbrella based mode is available only for the alternative investment funds where it is there, that is applicable. In this case of this transaction based mode, means based upon the transaction. So banks is allowed to go for the transaction based. Okay. So above rupees 5 crore, CGSS guarantee cover is available of amount in default. See, up to 3 crore in CGSS, the amount is covering the amount, default amount will be covered up the 80%, and 5 crore and above, it is the 65%. 65% covered under this CGSS startups. In vehicle loan elite, the maximum repayment period increased from this to the year with ROI. So in vehicle loan elite, increased period from 5 years to 7 years with the facility of fixed rate of interest. In vehicle elite loan, that will come under the fixed rate, and the repayment period has been increased from 5 to 7. Banks would return to borrower all securities, documents, title, deeds of mortgage property within days of repayment of all dues. Agreed to or contracted in case of consortium, it should be what? So bank has come, RBI said that within the 30 days, our bank has committed that within the 10 days, if the our finance is there where it is not coming under the consortium and multiple banking, then within 10 days of the repayment, we have to return all the things. In case of consortium and multiple arrangement, it is the 30 days. We have to. If you are not going to return in that, then they are coming with the 500 rupees per day payment penalty you have to pay. Under LRS, Liberalized Remittance Scheme, TCS will be, okay, tax collection at source will be applicable at the rate of for any other purposes. They have this year circular came that there is that education loan, medical purposes, and there is others. In education loan, they have come with that 0.5% it will be there if it is exceeding the 7 lakhs and above. Okay. In a medical also they have done 0.5% if exceeding that from the 7 lakhs and above. For other purposes, they have implemented that it's a 20%. 20% of what amount is 7 lakhs and above. If I am going to remitting at 20 lakhs, means 7 lakhs will be reducted. Now 13 lakhs will be taken care of at the rate of 20% to TCS. Okay, in one financial year. Up to what amount branch assisted digital journey vehicle loan is available? You all know vehicle loan, we have come out with the lots of the digital products. So here it is the up to 25 lakh rupees. We can branch assisted digital journey loan can be given. Loan sanctioned to agriculture infrastructure and food agro processing up to rupees what, how much amount it will classify under the priority sector. See here one thing miss that it will come under the, it will be the 100 crore rupees, but it should be in the whole banking system. If one customer has taken a 60 crore and another time that the same customer is taking a 45 crore from this other banks, then it will go to the 105 crore. So it will not come under the under priority sector. So the criteria is that 100 crore it should be from the whole banking systems. Under Grow More campaign, our bank has come with the Grow More campaign where we have to go for the agriculture investment credit. So here the under Grow More campaign interested concessions was there. That is how much and for which facility it is available. So interested concession was up to 0.75% from the card rate we can give, and it is available only for the fresh and takeover accounts. It is not for the existing customers. Bank launched ID and DGKC in which state after UP and Tamil Nadu? You all know in UP there was the 6 district, in Tamil Nadu it was full-fledged there. So in which state after this UP and Tamil Nadu they have launched this in DGKC is MP, Madhya Pradesh. Under SCSS, accounts to be open, senior citizen savings scheme, open for the person with the age of 55 years or more who has retired under superannuations or a special voluntary scheme. Within how many months he is eligible to open the account under this scheme? Earlier, it was that after superannuation, within a 1 month, anyhow, they have to open, they are eligible to open this SCSS. Now, it has been increased by the Ministry of Finance that it is go for the 3 months. Okay. On premature closure, that the same above scheme, if there is a closure within a 1 year from the date of extension and amount. Date of extension means SCS scheme, if you are going to having opening any FDR, then it can be in a block wise, you can extend it. Okay, so here it is said that if it is extension and you are going for the pre-closure, then in that case is 1% of deposit to be deducted, not a rate of interest penalty is not there. Here it's a word 1% of deposit to be deducted and balance will be paid. Means it is irrespective of the rate of interest, it is only on the balance. Whether we can go for takeover of education loan, there are two questions in that. Whether the education loan which is under moratorium, can we go for the takeover, or whether the loan, education loan which has gone, you can say repayment started, that kind of the education loan we can go for the takeover, or whether we can go for the takeover of any education loan. So here it says that only premier special elite we can go for the takeover of education loan. And even the account is in the moratorium period, even though we can go for the takeover or repayment has been started, again we can go for the takeover of education. Only for the premier special category institutions. Okay. Under Home Loan Plus modification, account should not have been, there is a modification and happen in the Home Loan Plus, that account should not have appeared in SMA2 during last years. Earlier it was. Means in Home Loan Plus, they've told that we can consider Home Loan Plus also, provided the account should not be in a SMA2 during the last 1 year. Earlier it was in the 2 years. Okay. It should not be in a last 1 year, it should not be in a SMA2. Okay. In case of takeover of home loan accounts, prior permission is to be obtained for closure of home loan accounts through single credit of more than 25 lakhs and release of the security. Sometimes you are finding in case of some banks, private banks, they have such kind of the procedure. They are sending a money in a one stock in the mail through RTGS or NEFT. They are crediting account and they are asking for the releasing of the security. Here, bank has come with that to put restrictions on the takeover and to pay more attention to the takeover. They told that if any account is going to be closed of rupees 25 lakhs and above with a single entry, only one entry, and then in that cases, we have to take a permission from the ZLCC before releasing the security. Sorry, that should be the ZLCC. It's not a 25 lakh, that's the ZLCC. Bank has increased the per day transaction limit of cardless withdrawal from 5,000 to through in-office mobile application. So you all know that even if you don't have a credit card, debit card, you forget to have a debit card in your wallet. Then even in in-office application, you can go at your ATM and we can withdraw the money. They will generate one token and that token we have to enter into that and immediately you can withdraw that. Earlier it was a restriction for the 5,000. Now it has been increased to the 10,000 rupees. Means without any debit card, through the end OSIS mobile application, we can withdraw from the ATM up to rupees 10,000 rupees. Earlier, it was only for the 5,000 rupees. Bank has web transaction done through in computation of laser folio charges, account skipping charges with immediate for all variants. Now bank has come with the idea that bank is charging for, in case of the CC and OD accounts, we are charging for the laser folio. Here it says that all the digital transaction which has happened in the account of only current account or variant of current accounts. We have a different kind of different current accounts variants. So they say that it is only we can waive off this ledger folio charges in all current accounts variant where the transaction is being done by the customer digitally. So if in case of the question will be there that in a CC account, if there is a customer is doing a digital transactions, then can we go for the waiver of the ledger folio? No, it is only for the current accounts. In pension prime, free group personal accidental insurance coverage, we have come up with that. Universal Sampo General Insurance Company Limited, that is our you can say partner in this when we are providing a 10 lakh rupees coverage, accidental coverage for the under Ind pension prime scheme. Under KCC Marine Gold, the limit shall be above rupees. This is the unique product where there is a fix. In as KCC Marine Gold, we can provide the you can say limit of above rupees 1.60 lakh to 2 lakh rupees. That is unique. We never find any kind, either we are saying that 10 crore, 10 lakhs and above or below. Here it is a band in 1.6 lakh to maximum 2 lakhs. SOD facility and the in-mortgage scheme has been increased to rupees under MSME activity. This SOD facility has been increased under in-mortgage from up to rupees 25 crore in mortgage schemes. And what is the authority? That depends upon the discretionary authorities. Civil MSME rank is applicable to borrowers who have availed business loan between this to this. This is the civil MSME, means it is the MSME activities. Civil MSME CMR is coming with this, civil is coming with the CMR scores. Which is based upon that last 24 months, how the business has been performed and what will happen in the next 12 months. So they are giving some kind of a ranking of that MSME activities borrower, and that rank is from 1 to 10. 1 is the very good, means the least, 10 is the very riskiest. So there is our circular come with that 10 lakh rupees to 50 crore. Means above 10 lakh rupees, 10 lakh rupees loan when we are going for, and up to 50 crore loan, we can have to see the civil MSME rank, CMR. MFPC headed by AGM, MFPC headed by CM can take group exposure. Earlier there was no any group exposure on that. Here they have given in that AGM MFPC can be MFPC AGM can go for the 20 crore and CM MFPC headed by the CM that can go for the 6 crore. This time they have just you can say make it a comparative with the ZLCC and ZLSCC. In Krishi Vahan scheme, margin criteria based upon. In Krishi Vahan scheme, as you know that we can go for the 10 lakh rupees maximum. That is very competitive. First time I have seen that any Krishi product, agriculture products have coming with the criteria that CIBIL score should be more than 700. So here they have given that the margin criteria, it is varying from 25 to 30%. That's a 30 to 40% that based upon the CIBIL score as well as the land holding. This based upon that they are going to having taking a margin, fixing the margin. Under in Krishi Vahan scheme, another feature is that it's a moratorium period is only 1 month and it is covered under CGFME. It is not covered under the CGTMSME. So this is the one striking point you should know related to the in the Krishi Vahan scheme. RBI had decided to designate all issued by government in fiscal 2023-24 as a specified security under fully accessible route. Fully accessible route means that there is no any need to take up permissions. If you want to invest in that securities, that is the convertible. Fully you can access. Some facilities, the securities, the RBI has permitted to the outsider, NRI or others, so they can invest in that security. There is fully accessible. There is no need to take up permission from the RBI. So they have issued one bond that that was not earlier classified, but they have now classified as a specified securities under FAR, that is the sovereign green bonds. Okay, sovereign green bonds is now be a specific that will be treated as a specified securities which is eligible for the fully accessible route. Insurance ombudsman offices across India has started admitting policyholder complaint that involve compensation claim up to. So earlier, what was the compensation they were taking? Earlier, it was up to 30 lakhs complaint. If you have, then you can just go for the insurance ombudsman offices. Now they have increased to the 30 lakh to 50 lakhs. Customer can do cash withdrawal under AEPS with a cumulative limit up to per month. Aadhaar enabled payment system, how much amount I can do the transactions in a per month under AEPS, that is the maximum 50,000 rupees per month we can do the AEPS transactions. The Reserve Bank has imposed a penalty of rupees 10,000 on which bank for violation of non-reporting and acceptance of. For violation of non-reporting is for Bank of America, and for the violation of acceptance and deposit norms from the NRI, it is the HDFC Bank. They are penalized by the 10,000 rupees each. RBI has asked to stop the sanctioned disbursal loans under two lending, e-com and Insta EMI card, which finance company has been stopped and they have been diverted to not to take a business under these two lending products. That is the Bajaj Finance. RBI has put restrictions on that. Which bank suspended IMPS transaction due to the technical glitch? You all know. Recently it was in a very, you can say news, that is the UCO Bank. What is the revised risk rate on credit card receivable for scheduled commercial? Again, what we are finding that the RBI has committed 25 to 50% increase in the risk weighting, risk weighted assets. So here, in case of the credit card, it is a 150% risk we have to take, consider for the credit card now. Which state has launched Amma Bank scheme, an initiative aimed at providing banking services through CSP plus banking outlets in all unbanked Gram Panchayat of the state. Which state it has? Then it was in a very news because it is pertaining to the banking sectors. It is the Odisha state who have launched the Amma Bank. What is the guarantee fee chargeable under the credit guarantee scheme for PM Vishwakarma? You all know it has been launched. Our honorable, you can say Prime Minister had told that it's in this scheme there is no fee charge for the guarantee fee scheme. That will be bear by the guarantee company. What is the rate of interest set by RBI? RBI has issued the 15-year government bond maturing 2073, last year in 2023. Generally, they are not issuing a bond like this, but now they have issued for the 50 years. And interesting thing is that in this 50 years bond, the rate of interest was very attractive. So what was the rate of interest? That is the 7.46%. See, for the 50 years bond. Commercial banks to present all unclaimed liabilities where the amount has been transferred to the DEF. You know that the DEF, Deposit Education and Awareness Fund, which is held by the RBI. In that case, they told that whatever the amount you are transferring to the DEF, where in your audit report balance sheet, where you will put it in that. They have just given a instruction that schedule 12, where the contingent liabilities we are showing, this amount should be shown on that. Okay. the credit institutions and credit information companies shall collectively take an overall maximum limit. So earlier, credit information companies, they were not coming under the ombudsman. Now they have been in the bracket or umbrella of the ombudsman. So any kinds of the complaints is there, they have you can say, resolve it within a stipulated time. So what they have given, that any kind of the complaint is going to happen, then it's a responsibility of the credit institution as well as the credit information company. So maximum time is 30 days. Within the 30 days, it should be resolved. But in 30 days, the time lag for maximum time to retain by the credit institutions, it is 21 days, and next 9 days, CIC will complete, resolve this problem. So total cumulative time is 30 days, where 21 days is for the credit institution and 9 days is for the credit information companies. RBI decided to enhance the bulk deposit limit for regional rural bank, single deposit, term deposit form. So single term deposit, they are coming into the bulk. If they are going to issue more than 15 lakhs rupees FDR, then it is coming under the bulk deposit. Okay, now they have increased it from the 15 lakhs to rupees 100 lakhs, that is the 1 crore. Up to 1 crore, they can issue. Up to 1 crore, their deposit will not be treated as the bulk deposit for the regional rural bank, RRBs. Which bank is in partnership with FIBE, formerly known as the early salary, has announced to launch India's first ever numberless credit card, where there will be no any card number, expiry date or CVV. That's interesting. It means that there is one product where there is nothing. It's a digital number if you have. And no on a plastic card ensuring absolute security and privacy. There is nothing in that. It's a digital number you have. Then that is the Axis Bank. They have come up with this. Okay. And the last question is that who has been awarded the Nobel Prize for Economic Science for having advanced study on women's labor market outcomes. So here are two questions that may be possibility this year. This Nobel Prize has been awarded in case of economics. For which purposes? To the women's labor market outcomes. They have done a study on that. And who has got this? Got Claudine Golding. That lady is there. She got this prize. So this is all about from this circulars what we have already. That was circular was issued by the banks. I would within 1 hour we cannot cover all the things, all the circulars, but relevant things we have taken in the. I have chosen in that MSME credit, then retails I have taken, then foreign exchange. I have picked up some very important. Even agriculture we have been covered. We have been covered the KYC. So that's we have taken this care of that every sector should be covered, and questions which are very important. That is the changes that have happened, particularly to 1 to 2 and 2 to 3, and even 3 to 4 some questions they are asking. So that is very important. Everybody should know. Our friends, colleagues who are going for appearing in the examinations. So I have made it this recap of the circular or gist of the circular in such a 1 hour, and hope that you will be benefited with this. And second thing is that see the trend is what is showing in that every time they are asking from the question from the policies as well as the circulars. In the morning session, our CGMs are also told that the circulars are very important. All participants should go through the circulars. I am too insisted on that. Reason behind it that when we are going for the circulars, then the circulars will give you the confidence for your interview purposes also. Because you are working in a credit, if you're working in a, I can say operations, then operations KYC they can ask. So we have image from the image side, we have provided one circular recap. In a circular recap, that is very important for all. Not for the 1, 2, and 3, and 4 also. It is also applicable to me also. So all the we have taken from the last, you can say up to December circulars we have uploaded. So that is the gist of the circulars. You can go through that. That circular is very important. Recap of the circular. Next is the FAQs and the policies are also available. So you can go through. We have done the best from our side to take care of all the promotees. Our aspirants who are going to appear in the forthcoming examination on 28th of this month. So I hope that you all have enjoyed these things. From my side, I wish you all the best for your examinations. Hope that you will come with the flying colors. Hope that you will do good in your exam. I don't know whether what is the rates and percentage, what is going to be happen, but simple thing is that is in your hand. That you can do is you can do your examination best, written examinations. So from the very beginnings, when I entered into the bank, we are finding that what is in my hand is that I can do a best in written examinations and best in the interview also. So for the purposes of interview, it's very important to go through this circulars, recent activities, what is happening. And so I have added some questions related to that also. So for this, after this, I say thank you to all of you and best of luck for all of you for your forthcoming examinations. Thank you from my side.